Good morning, and thank you for attending the Cannabis Investor Webcast, where cannabis companies increase their liquidity, awareness, and exposure to individual investors, institutional investors, cannabis entrepreneurs, media, and consumers. We would like to thank our sponsors, American Green Incorporated, and Indo Expo Trade Show, which will be held in Denver, Colorado on November 15th through the 16th. The website address is www.indoexpoco.com. Again, www.indoexpoco.com. Our speaker today is Michael Shea, CEO and President of Gold Coast Mining Corp. I will now turn the presentation over to Michael.
Thank you very much, Derwin. My name is Mike Shea. I'm CEO and President of Gold Coast Mining Corporation. And I want to thank everybody for attending, particularly those on the West Coast. I'm hoping that I'll give you something entertaining and interesting to listen to with your breakfast. And for those over across the pond, hopefully this will be something for lunch. I'm very pleased today to be able to present Gold Coast Mining Corporation. The name I will address later in the presentation, but today I'm very pleased and proud to talk about what I believe to be one of the most exciting, real, emerging companies in the cannabis space. Gold Coast is traded on the OTC markets under the ticker GDSM. The agenda today is the following is the agenda, and I believe by the end of the presentation, investors will have a full understanding of what the company has accomplished, what it has in process and accomplishing, and a look into the future. The agenda is an introduction, what the company's business model is, management, share structure, the various products that we've developed over the last 4 to 5 months, which includes MJ Exchange, MJ Merchant, 420 Concept, and our most recent endeavor, real estate and consulting, as well as to give the audience a future outlook of what to expect from Gold Coast Mining. First, the safe harbor. I won't read it, but it's up there. Moving forward onto GDSM itself. GDSM, our mission statement. GDSM, Gold Coast Mining Corp, is an innovative provider of services and products to the high-growth legal marijuana industry. The company targets niches where it can be a leader while concentrating on generating revenues, profits, and substantial returns to shareholders. Why GDSM? GDSM is in the right market. We've looked at a variety of different industries, and we've come across the cannabis industry, and quite frankly, it's high growth. It's expanding geographically, and we developed a product suite to generate revenue and profits. These also are scalability across the product suite, and believe that they represent tremendous growth opportunities for the company. We do have experienced management. I'm a banker for 25 years on Wall Street. I have spent several years in the mining sector, and also did a stint on the TSXV as the CFO, very familiar with public companies. The first thing that I did when I took over was put together a strategic business plan in place, which we'll go through. We are executing on that plan, and quite frankly, I think we have a compelling valuation relative to peers. You don't find very many companies that trade where we trade that are actually generating revenues with a verified, realistic business plan that we are executing on. So we've set in place a strategic plan for growth, focus on high-growth legal marijuana sector. We've made products, developed products tailored to this market. We exploit niche opportunities to be a leader. Quite frankly, Gold Coast is a thinly capitalized company, and that requires us to look at those niche opportunities with high growth potential and limited capital, and something that we can be a leader on, and I think that you'll see that in the products that we've developed over the last several months. We also seek partnerships with established companies. For example, one of our products is something called the 420 Concept. It's an e-commerce site selling all sorts of paraphernalia. I've put in place direct contracts with leading manufacturers like Atmos, Chameleon Glass, and others. When we look at doing transactions in Colorado and other places through our, our real estate and consulting business, we look for those people that are established in the business, they're credible, they're legal, and somebody that are looking for a partner like GDSM for upside, and most of, obviously, legal counsel. So without ado, I thought I would talk about the different products that we do have. The first product that we put together was something called the MJ Exchange. The MJ Exchange is a social networking site, very robust and very professional, and is second to none. It's a first-class website for people who are interested in discussing marijuana. It is a Facebook type of networking site. The second product was the MJ Merchant, which is merchant processing services to the marijuana industry. The third, as I mentioned before, is the 420 Concept, which is an e-commerce site. And the last one is the real estate consulting, infrastructure, management services to legal marijuana growers, dispensaries, etc. And I'll address each one of these separately. The business model requires us to continue executing on our strategic plan and seek additional growth and, most importantly, profitability. As we've put together these products over the last 4 or 5 months, one thing that we are just now focusing on is the marketing of these products and services. And while we are generating some revenue, much more can be done to broaden the audience and generate revenue from each one of these product suites. Second point there, the cross-sell through the entire product suite. What do I mean by that? I have roughly 1,500 shareholders. I have roughly 1,700 members on the social networking site MJ Exchange. All those people are candidates for either advertising on the MJ Exchange, people that are willing to buy product off the 420 Concept. There's a variety of cross-selling opportunities, as well as through the MJ Merchant payment processing. And the last point there is the expansion of the real estate and consulting, which is probably the most exciting and profitable enterprise for the company. Again, I'm Mike Shea. I'm CEO and President. I have a very long history in the financial markets, and again, I've been on the TSXV, which is a very regulated exchange, and I've been responsible for exchange reporting, legal, investor relations, and capital raising. I've done business with anybody from a Walmart to a Massey to, I mean, you name the Fortune 500 company. I've done business with them as their lead banker. The share structure for GDSM, as you can see, our market cap is very low, 1.9 million. Shares outstanding, 4 billion. The float's 3.9 billion. The authorized is 6.5. You can see in the chart right in the late February, early March timeframe, our stock benefited from anybody who mentioned marijuana. Their stocks took off tremendously. Quite frankly, at that point, I could have dropped in Berkshire Hathaway, and I don't think shareholders would have noticed or would have cared. They like marijuana. And so given the sentiment of the shareholders, we continue on this path, and quite frankly, I'm happy we do, because the more that we and I look at opportunities here, the more excited I am about the growth prospects for the company. I am cognizant that that's a rather high number in terms of shares outstanding in the float, but quite frankly, I've had many long-term shareholders who have been with the company and are supportive of the company, and many people have suggested reverse splits. It's not something I'm interested in at this point in time, certainly not until the share price is up and we've completed some of our corporate restructuring in terms of audits and Form 10s, et cetera, which I'll touch on later in the presentation. But as of today, you can see what the share structure is. The share structure really has not changed much in the last 4 or 5 months. Again, getting to the product suite, we have MJ Exchange, the social networking site. We have MJ Merchant, our secure payment processing, and our 420, which is the e-commerce website, which we sell for approximately 500 products through. MJ Exchange. This was a concept that I developed and put together. It's a very robust social networking site for people interested in all aspects of marijuana. I didn't do this by myself. In fact, one of the things that I thought, because I'm not that familiar with the industry, I was not that familiar with the marijuana industry, and at that time was, if I'm going to build a site for people to participate on, I want them to tell me what should be included, what the site should look like, the content, flavor, etc. So I've asked shareholders to participate in beta testing, and quite frankly, what the site that I originally envisioned came out to be far different, far more robust, far more encompassing with the input from the shareholders. And I think our shareholders take great pride in that. It's based on a Facebook. There's individual forums, there are individual pages for members. I do have the MJ Index feed. Merchants do sell some product through the site. There's private chat features, et cetera. And quite frankly, in probably the 4 months that it's been up, we've attracted 1,700 members and growing. This obviously leads to the business model, which is generate revenue through advertising. And that's something that we are launching a concerted effort on in October to attract substantial advertising. The site, quite frankly, is developed more towards the recreational users, and I do have a strategy in place to increase the medical participation, including guest auditors, more educational content. I do want the site to be balanced, and there's ways to do that. and obviously to increase membership. I have looked at numerous other blogs, sites for marijuana users, and I have found none that compare to this 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 exchange, and I'm very proud of that, and I commend the people. I do have shareholders that have volunteered to be moderators on the site. Naturally, we get a lot of bots trying to hack in, and we get people that, quite frankly, try and do some things that are illegal, like selling drugs on it. And these moderators do a fantastic job of making sure that any illegal content is removed. And again, I can't thank them enough. And again, we are commencing the push to drive advertising revenue. And we believe that this, quite frankly, could develop not overnight, but over time into the #1 social networking website for all people that are interested in marijuana. And it is an ever-expanding universe, anything from the, like I said, the recreational users to the medical users, which includes, those people that are using it for medicinal purposes, veterans, the elderly, et cetera, that are turning towards medical cannabis when in fact their pharmaceutical medication is not working, or maybe it's a combination of both. But I'm actually shocked at some of the stories from the people that I talk to that are elderly, that have never ever used marijuana but have now switched over and are using it for medicinal purposes, and it's working. So it's the first program, it's the first product that we put out, something I'm extremely pleased and proud of, and again, it couldn't have been done without shareholder participation. MJ Merchant. MJ Merchant, we signed an agreement with a very long-time standing merchant card processing company, and it allows us to offer payment solutions including credit card transactions to high-risk businesses. Currently, we're dealing with head shops, hydroponic stores, manufacturers, marijuana paraphernalia, the emerging bud and breakfast businesses, as well as the e-commerce sites, which we use for the 420 exchange and the 420 concept. I will tell you that at inception, dispensaries were a product, were an industry that our credit card processing company indicated that we could target and that they could handle. Quite frankly, we got inundated with requests, and the credit card processing company, for lack of a better term, got ahead of themselves. We are currently refining this program and expect to be able to offer full credit card capabilities to dispensaries in the near future. Obviously, this type of revenue is extremely attractive as we derive a percentage of the transaction fee for each transaction. So if you look at an average transaction at a dispensary, call it $100, and there's usually a fee attached to that of 4%, 5%, 7%, we do derive a percentage of each one of those transactions. This is obviously a very high growth potential. I realize that there are some banks out there offering it. Quite frankly, they're primarily credit unions or very small banks that really can't handle the needs of the industry. But we will be there when, and in fact, our program gets up and running, and the U.S. banks come to the realization that they're missing out on a substantial amount of revenue. So we're very, very, very excited about this concept, and we do have boots on the ground, which is extremely important. Most of the dispensaries I've been into, they're very secretive. people are not very trusting, and it really takes boots on the ground going door to door to these dispensaries to solicit the business. And we have that infrastructure in place. We have a tremendous CRM, and all we're waiting for is the green light to move forward. Excuse me. The last, or the third concept that we had is the e-commerce, the 420 concept. Excuse me. 420 concept is our e-commerce site. We offer paraphernalia including water pipes, vaporizers, grinders, scales. We have over 500 items. We have many direct accounts with the major manufacturers for pricing that is extremely attractive. All of our stuff is done on a drop ship program, which eliminates the need for me to carry any inventory. I basically get the order and turn around and place the order. Again, the margins are very, very attractive. And we constantly are searching for unique items. And again, that gets to the boots on the ground. There's some glass blowers out there that are individuals that make some fantastic product. Same with on the vaporizer side or the grinder side. We're constantly searching for something that's going to give us the competitive advantages versus our other competitors in the industry. We are generating revenue from this platform, and again, high gross margins. We continue to look at pricing to ensure that we're competitive, and we continue to look for ways to expand our product offering. Obviously, only legal products to be sold. The real estate consulting business is our newest business. When I traveled to the Weed Stock Conference, I visited with numerous growers and saw the opportunity to provide a couple of different things, which is not only offering facilities for these individual growers to grow, but to provide consulting services such as security, finance, marketing. Most of these growers are, I'm not going to say unsophisticated. They know what they're doing. They're making good money, but they do lack some professionalism in how they run their business. Point in fact is that when I look at mining opportunities, I always break things down by $1 per ton, or for example in the precious metals, $1 per ounce. What's it costing? And you'd be surprised at some of the numbers that I've run that have surprised some of these growers. And so they really appreciate a professional approach to their business. Most of these are growers that were probably growing illegally in the past and are now growing legally now, and they just need some help to continue to refine their business. We've closed our first consulting agreement with a grower in Colorado, which we're very, very pleased about. We're working on several other acquisitions, and we continue to look at diversification in terms of geography. This week we're heading to Maine to take a look at, to meet with a grower that has a lot of different opportunities there. And we've commenced due diligence on packaging companies, testing labs, seed banks, etc. This is, while it's extremely lucrative and certainly an area that we're going to push, this is something that is also probably the most challenging. Challenging in the fact that there is still a lot of business being done in this market based on handshakes, just general understandings, etc. And for us as a public company, we need to do things legally, and we have to have the documentation, We have to be structuring these things so that they meet the letter of the law. And the laws change on a constant basis, and there's different laws. You know, we have to follow state laws, county laws, city laws, and sometimes they're conflictive, and it takes a lot of time to put these transactions together. But they are well worth it. I know that several have tried and basically pulled out of the market. I can understand why. It takes a lot of time. It takes a lot of visiting, a lot of hand-holding. But at the end of the day, this is something that we're dedicated to. And it's quite frankly a very lucrative business. I will tell you that probably one of the questions I'll be asked is, in a most recent press release, I indicated that we were negotiating to acquire a 7,400 square foot grow facility and another a warehouse, which is roughly 3,600 square feet. The deals that we do, we don't have, quite frankly, the capital to go and buy these facilities. All these facilities are structured with people that own the property, and essentially they're offering seller financing. And so that we can equate, we can put in to the financial model what it's going to take on a monthly rental or a lease basis, and that allows us not to have to actually purchase a facility that's $300,000, $400,000. So this is very exciting. I expect to see some more closings in the very near future, and we'll continue to support the growers with our real estate and consulting business. We do have a Colorado Acquisition Corporation. We have not used it. It will be used eventually as circumstances dictate, but it's just worth mentioning that we do have the corporation already set up in Colorado. Bottom line is GDSM through MJ Exchange, MJ Merchant, 420 Concept, the real estate, the consulting services, we're growing and we're generating revenue. We expect to generate significantly more revenue in the near future, and we've built a platform that, quite frankly, is poised to grow. I don't like to give numbers, but exponentially is something that I feel very safe on saying. Future outlook. I continue to see quarterly sequential revenue growth. Cash flow positive is just a couple of transactions away, particularly on the consulting and real estate ventures. The third point is probably the bane of my existence, and probably one comment I regretted ever making back when I first took over the company, which is we are going to do an audit. How many OTC companies out there have said, oh, look, we're going to do an audit, we're going to do an audit? And I've been promising to get an audit done for a year. We have engaged an accountant, a CPA, to do the audit. And quite frankly, it's been a real struggle to get it done because we're looking to do initially 2011, 2012, then 2012, 2013. I took over the company in July of last year. The company had no bank account. It had no board resolutions. It had very little documentation. So I can understand why our auditor is struggling. I still continue to have hopes, but quite frankly, at this point, there's two options for the audit. If we are not done within the next 30 days with our current auditor, I'm probably inclined to switch auditors and just do 2013, 2014. I have all the records. I have the accounting, and we can get that done in short order. It is extremely important for the company, for the credibility of the company, and also for future financing, transparency, etc. But quite frankly, this is something that, again, I'm the CEO, the buck stops here. I've been unable to get this completed, which I was hoping for today, but I have been unable to do that. It will be done, and will be done as quickly as possible. The Form 10 for the quote-unquote uplisting, we've already paid for that, and that can be done fairly quickly. The next thing is the name and ticker change. I love the ticker GDSM. The Gold Coast Mining Corporation does not represent the direction of the company, and it does not represent the future of the company, and hence this will be something that will be changed in the near future. Again, given the success that I've had with shareholder participation in MJ Exchange, I'll probably put it out there for the shareholders and offer $1,000, you know, for the name to change the company to. I'm very big on shareholder inclusion and interaction, and that's why I like, quite frankly, presentations like this, where I can actually speak to the investment community and they can actually ask me questions. I will continue looking at niche opportunities. One thing leads to another, to another, to another. This industry is more than just growing and selling marijuana. There are a lot of different opportunities and new opportunities that I've never thought about, such as a seed bank, seem to pop up as I continue to talk to more and more people. So I think the outlook is extremely bright for the company. I will just touch on one thing that I did was remiss. Again, you know, we trade in the mid trips, and I would love to have a higher share price. I think we deserve a higher share price based on just the business that we have, the platform. We're generating revenue. We're moving in the right direction. We're in the right industry. But there's no doubt that the Securities and Exchange Commission has been focused on this industry, and I refuse to do paid promos for the company just to drive some volume. I do that for a number of reasons, because if you look at the tickers that have been suspended in the past, there's usually a lot of promos involved with them. And not only that, quite frankly, for me to get an uptick of 50 or 100% of my share price in one day, only to fall back once the promo ends, that makes no sense. You know, shareholders, that just creates angry shareholders. So our focus is on doing things the old traditional way, which is build the business, let the business speak for itself, and let the share price reflect that. So again, I'm very, very pleased. I'm very proud of what we've done. I think we have an excellent platform. The outlook is extremely bright, and again, I can't thank the support that I've received from numerous shareholders expressing their gratitude that we're in the right direction, that I am available for conversations, emails, etc. And with that, Derwin, I will turn it over to you for questions.
Okay, thank you, Michael. If you would like to submit a question, the question box is at the bottom right of your control panel. We'll wait about 30 seconds for you to input your questions. The first question, Michael, is did you build based on existing systems such as WordPress, Joomla, etc., or did you build it from the ground up?
The MJ Exchange we built from the ground up, and I have to give great credit to my webmaster, Barbara Carroll. I'm not a tech person, but the MJ Exchange is really the platform. I think it's a PHP Fox, and don't ask me what that means. But it is not WordPress. WordPress is not robust enough for what we do, but there is numerous different platforms and programs that are associated with the MJ Exchange to allow for private chat, to allow for some of the things that we will be doing will be a feature whereby someone can click on a button and invite all their friends from Facebook into the MJ Exchange forum. And there's several other developments that are taking place at the request of members to enhance the participation and the membership of the site.
The next question is there any way you can give the contract values on the closed deal? This will attract a huge amount of attention and investors.
Yeah, absolutely. There's some legalities involved in this because, obviously our contracts, whether they're consulting, whether they're leasing, nothing can be tied to production, proceeds from production. So I would say that the first contract that we did is somewhere in the $50,000 to $100,000 per year range, and that's on the very small side. Everything else we're looking at is significantly larger.
Next question. You said that you rent your spaces. Is there a security advantage to owning property with regard to outdoor grow operations?
I'm sorry, could you repeat that?
You said that you rent your spaces. Is there a security advantage to owning property?
Well, let me put it to you this way. And I'm probably I do have a habit of doing this, probably telling more than I should. When we structure again, there's two ways for a company like Gold Coast with public shareholders. There's really three ways to participate and assist growers, legal growers, in their business. The standard method has been for people to buy real estate and lease the facility to a grower. Now, to take that further, there may be a piece of property that needs greenhouses built, and Gold Coast would buy the property and construct the greenhouses and lease the facilities to the growers. What's transpired in Colorado in particular, which is obviously on the forefront of this, is that buildings, facilities are being leased by growers for 3, 4, 5 times market value, market comps. And obviously there's a reason why. And this, in my opinion, and quite frankly from my legal counsel in Denver, is getting notice. And it's not going to happen overnight, but it is something that is being talked about, whereby the legislature may in fact say Well, you can't charge more than 25 or 50% above market rents. Um, and obviously that takes a lot of the return on investment out of a transaction of this type. But we do take, when we combine it with a consulting agreement, you maintain the same amount of return on a transaction that you would if you just did a straight lease transaction. Obviously, there is something to be said for investing in real estate. If we can have the asset, again, we don't buy the asset up front. I mean, it's a seller financing situation, and we can tailor the payments to what proceeds we're receiving either through the lease or through the consulting agreement.
Next question. Thank you for a great presentation. Do you anticipate other states legalizing MJ, and what is your approach to establishing a base in varying states? Also, regarding real estate facilities, what is the biggest obstacles? Zoning, local activists, etc.
That's a loaded question. Let me take the former first. The laws, this is the Wild West, and as developed as Colorado is, it's a smorgasbord of laws. I came very close to doing closing a transaction in a city called Buena Vista, which is in Chaffee County. And it was to lease property to construct some greenhouse facilities. We had a grower lined up, and we had the terms set with the landowner. And there was already an existing medical marijuana facility, a growing facility on site. And are you hearing music?
No, I'm not hearing music.
Derwin, are we still on?
Yeah, we're
okay. I'm sorry. All right. So we had gone through the transaction. We were ready to close, and clearly, with 5 days before the close, Chaffee County initiated a moratorium on new grow facilities. And so it is something that is, you really need to be attuned to what's going on in each individual community. The real estate portion is probably the easiest. Our attorney is very good at doing the due diligence in terms of verifying the title, verifying that the property is zoned properly, that it has water, electric, etc., etc. So that's the individual property is acquisition is fairly straightforward, and it's. I'll just say this, and people may or may not believe this. There are no shortages of opportunities out there for Gold Coast, but those amount of opportunities are substantially reduced because of our requirements that we have to do things according to the letter of law. We can't do general, agreements. We can't do handshake agreements. We can't, do nods and stuff like that. And quite frankly, this is an industry that's lived in the shadows, and they don't trust a lot of people, and they're used to doing things the old way. So when you start presenting them with legal documentation and going through, title searches and stuff like that, this is something that they have not been through, and they become very cautious about it. So it takes a lot of hand-holding. We're fortunate that we have people on the ground in these various places that have developed the relationships and assure these prospective property owners that we are for real, but we have to do things legally, and the smart ones get it. They want to be legal, and they want to participate, and they want to be participate in the lucrative industry that the marijuana industry presents itself.
Okay, last question. According to the online available stats, the combination of your 3 online sites get less than 25 to 30 visitors per day combined. How are you going to change that?
Well, I don't know what stats they're looking at. Barb Carroll, my webmaster, shows me stats occasionally, and I think we're getting substantially more hits than that on the 420 exchange, and the MJ exchange. But as I had mentioned, in particular for the MJ exchange, doing some tweaking to allow people to invite friends from Facebook, a program that, quite frankly, when someone comes on, it will import a lot of their Facebook data and build their own website. Will certainly is a step in the right direction, as well as I indicated, a real effort to balance out MJ Exchange with the medical side of the equation, attracting people who are interested in medicinal use of marijuana. The 420 concept, we have developed the capability just recently to do very, very professional flyers on hot deals through the e-commerce site, utilizing not only all the 1,700 members' email addresses through the exchange, which are obviously potential customers, but also we have, I think, thousands of dispensaries listed on the MJ Exchange, and so we'll be doing regular, at a minimum, monthly email blast with hot items, hot deals for the 420 Exchange, which will continue to grow that. We also, quite frankly, we've done some SEO work on the 420 Exchange. That needs to be enhanced. But, quite frankly, we've put together these, the MJ Exchange, the MJ Merchant, the 420 concept, and this real estate consulting program, all within the last 4 or 5 months. It's been very time-consuming. It's been expensive to do. We've built out these products. Now's the time to leverage them, and that's something that we're focused on. I do have other technology applications that I'd like to move forward with as well, but for right now, we have more than enough on our plate, and we have what I think are first-class products, first-class services, and it's just a matter of leveraging what we have to build a sustainable cash flow positive position. Then we can look at doing further expansion But clearly, there's more to be done to attract more views to each one of these sites.
Okay, thank you, Michael. Well, that's the end of the presentation. Our next presentation.
Well, I just want to say thank you very much to all the participants. Again, I'm very proud and pleased of what we've been able to accomplish. I know that GDSM has been around for a long time. I'd ask you to take a fresh look at it. There is like I said, and in this presentation, which will be on our website, gdsmholdings.com, there's a real business here. We are generating revenue. There is a foundation and a platform, and that we're going to be able to leverage and be successful in the near future and on a continual basis. So with that, I thank all your listeners, and Derwin, I appreciate you asking me to be part of this fantastic communication and presentation.
Well, thank you, Michael. We really appreciate you taking the time to inform investors. So the presentation will be ending. We did get a lot of questions, and so what we'll do is we'll have Michael answer those questions, and then if it's okay with Michael, we'll post those questions and answers to our website so that the audience could that ask questions could get their questions answered. So those answers will be posted on our website when Michael gets a chance to answer the questions. Thank you for attending. Our next presentation is at 10 o'clock. Thank you. Cannabis entrepreneurs, media, and consumers. We would like to thank our sponsors, American Green Incorporated and Indo Expo Trade Show, which will be held in Denver, Colorado, November 15th through the 16th. The website address is www.indoexpoco.com. Again, www.indoexpoco.com. Our speaker today is Chet Billingsley, CEO and Chairman of Mentor Capital. And now I will turn the presentation over to you, Chet.
Right. Put that on, and once I click OK, you're going to start talking. Ready, set. You can talk.
Hello, this is Chet Billingsley.
Yes, we can hear you, Chet.
All right. So Mentor Capital has been involved in the cannabis business since November of 2013. I'm not from the cannabis sector originally myself. I have sort of a classic investment banking background. Undergraduate years were at West Point. Matter of fact, I'm going back to the class reunion in a few days to couch things. General Petraeus will be there. We called them Peaches. The chairman of the Joint Chiefs of Staff is one of my classmates. Then I went on to Harvard, did some extra work at MIT studying difficult to treat cancers, and did some work over at Harvard Business School. Got an advanced degree at Harvard University and went on to General Electric. I mentioned a little extra on the academic things because I've always sort of been a scientifically based academic wonk, and started my business in Silicon Valley and concentrated in the cancer field for the last several years. But the current administration stopped the reimbursement in the leading edge cancer cures, so we were looking for something else to do, and somebody said, well, gee, would you consider a investment in a marijuana-related cancer treatment. So that's all consistent with the history of the company. We've been at this for a long time, funding companies of all manner and sorts. Started privately in 1985 with $1,000 in Silicon Valley. Took it public in 1995, and then, as I said, made that switch to the medical marijuana space in November of 2013. But the question still has to be asked, why marijuana? And this was a very difficult one for me to address personally, because I'm a conservative fellow, if you can't guess from the picture, and asking me to become involved in marijuana was sort of like asking a chicken to go surfing in the ocean. But the scientist in me overcame the Republican in me. And there's three major reasons. And first and foremost for us is the medical benefits. When I was involved heavily in the cancer space, I would be counseling a new person every week on how to deal with their disease or to die with dignity, frankly. And soon it becomes apparent that the reality is marijuana is as good as anything in reducing nausea, especially that comes from chemotherapy. And when coupled with the best other treatments, the best normal medical treatments, it's far and away better. And it can reduce instances of vomiting from 30 times per day to once per day. And that's a tremendous boon for the cancer patients because it keeps up their strength to deal with the disease. It also stimulates the appetite, and everyone knows that anecdotally from the munchies that people get. And it suppresses pain, but it suppresses pain in a way that's different from how the opiates generally do. And that pain suppression doesn't slow the heart and slow breathing. That's one of the reasons that there isn't marijuana overdoses that lead to death as there is in other diseases. And although it wasn't in the cancer space, there is a great boon because of the reduction of seizures. So looking at these medical benefits, we felt, okay, we understand the medical side of the world. We can pick out the best medically benefiting companies and make investments in them, so we moved in that direction. At the same time, though, I had to address the overlaying question of how about social use? Isn't marijuana use a bad thing? And here we found the opposite to actually be true. And that's because there's only a certain proportion of people, maybe it's 4% of the population, that will be users to the point of intoxication of the various mix of drugs, including alcohol. And there's a very large substitution effect, as much as 60% based on our field research that we've individually conducted on this subject. And instead of using crack, crystal meth, heroin, alcohol, if a person uses marijuana for the effect, it's going to be much more benign and gentler on their body. In addition, it reduces the gateway introductions. There isn't really such a thing as gateway drugs. It's more the illegal drug dealer would rather upsell people to a more expensive product or a more gripping product, and they give away free samples. If the marijuana user or the cannabis user is steered towards a legal dispensary, the gateway introductions are pretty much eliminated. Overall, in the calculation of the approximately 100,000 deaths that occur from alcohol and other drug use. If there was magically somehow complete legalization tomorrow of cannabis use throughout the United States, approximately 10,000 lives would be saved per year. That's almost, 300 lives every day, a life saved every 5 minutes. Because of that, we felt it was a reduction in harm to go forward in this cannabis space. But of course, we're not here to just be a social benefit to society, although we do steer toward socially beneficial investment. This sector is a rising tide, as they say. Overall, has been about a 26% increase in the marijuana index of about 160 companies so far this year. We project that there is, or other folks project, a 64% year-over-year increase in cannabis sales. And overall, over the next handful of years, there will be approximately a 20-fold growth in the overall consumption of cannabis and marijuana as there's a shift from illegal to legal use. The usage itself will not increase. It's just a rotation from illegal use into the legal sector. So far this year, Mentor Capital share price is up about 165%. And the key reason from an investor standpoint that we're in this sector is to capture that economic growth, and as a company we look to do something that's worthwhile for society medically and decreasing the harm from social use. To determine how an investor is going to profit from this, I like to think of the investor equation. There's three different main components. A company like ourselves has to be able to raise investment capital. The more investment capital that is raised, where a small portion of that is always passed on indirectly to the existing shareholders, the more capital that can be raised, the better it is for the existing shareholders. As long as that capital is not raised at a discount for the benefit perhaps of key insiders, and that's not something we do at all. That invested capital is then run through growing businesses. Here we probably receive 2 or 3 contacts every day, every working day, for someone looking for additional funding. There's plenty of companies out there that are looking to receive growth capital in this growing sector. But the last equation, or the last portion of that equation, is public company fairness. And this is something that is sometimes lacking in many of the public companies across the board, and is a danger that the SEC and FINRA have warned about in the cannabis sector in particular. And the simple part of that equation is if the company increases sales by 50%, but doubles the number of shares it has outstanding, because a lot of those shares are going to insiders or affiliates, then the result for the normal shareholder is they end up with 75% of what they had, and the insiders will of course benefit from receiving shares, and that's something that we don't do. Instead, by looking at all 3 factors, we generate the maximum shareholder return, and we'll cover each of those. In terms of investment capital, a lot of our fundraising is done, or is moved now to be done, outside of the normal public circles. We look to institutional investors and are arranging to raise private investment in public equity. Generally, the institutional investors get an opportunity to invest under our wing in the more or less private cannabis projects that we're involved in. And during the time that it's held privately, they will receive the lion's share of the benefit. At the end of that period, when they want to get liquidity, they can exchange their shares without any discount that would be dilutive to shareholders for our existing common shares, and that way they get liquidity. But from that point on, the existing shareholders participate on a proportional basis in the upside of that particular investment. We do the same thing for accredited private investors, and for them we have a preferred share program that raises money from them. Now here we're not giving any details of these programs. We're not looking to solicit for any investment. Just make people aware that there's significant fundraising that's going on that is on almost a private basis. Our own shareholders have warrants that they've had for a number of years, and as the share price rises, some of those shareholders exercise their warrants, and that gives additional cash, has additional cash to flow into the company. The total amount of from those warrants will be probably $23 million over time. We invest those funds in the growing businesses, and as I said, there's a plethora of companies that contact us and that we have an opportunity to invest in. Thus far, it seems like our track record is tapping in at about a 200% gain, and we're quite pleased with that. That was consistent with the gain we got in our cancer portfolio, and these are all approximate numbers. Cannabis has a directory for the entire cannabis sector. Nevada Cannabis Ventures is investing in a new hedge fund that's targeted for Nevada. Our return there should be twice the return for the normal hedge funds investor, again a 200% sort of return. On the public side, of public investments in public cannabis stocks, we find that they're often high priced, and we keep that investment to a minimum. But our leading investment at GWPH is doing very well. As I said, this is consistent with how we did in the remaining cancer portfolio that we have, which is de minimis at this time, but still is doing well. Our major investment to date was in Bang Corporation. There we financed, including Bang itself, a total of 4 projects in Gum, Bang Financial, and an expansion into Arizona. And we put up about $1.5 million over a 60-day period of time. However, that, as the earlier speaker talked about, there's some lack of understanding perhaps in the contract process, and we're looking for a new business to rotate that $1.5 million into. We are seeking to retrieve the money from Bang Corporation. We put up the $1.5 million, and this has caused a lawsuit, which is surprising to me because I've never been involved in any lawsuits like this before, where we issued the money and issued $7.5 million in freely trading shares, and their response was, we don't want the freely trading shares, and we're going to keep the $1.5 million and not give Mentor Capital the stock that was promised. And we're not looking to have a shotgun wedding with anyone, but if someone doesn't want to work with us, then they need to give the $1.5 million back. So we sued in federal court to for rescission to retrieve our funds. The one thing that I can promise any investor is that we will work above and beyond to ensure there is that last component, the investor equation, the public company fairness. And here, even before we became involved in trading in the cannabis sector, I put all of my shares in a voluntary escrow. Now, this was not a great sacrifice for me because I had not sold any shares for a decade or so. But if my shares, and I'm the only major controlling person, are in an escrow, then it makes no sense to do a pump and dump because I have no ability to dump my shares. I wouldn't do that anyway, but I wanted to make a public statement that we weren't going in that direction. So my shares, during the entire time we've been involved in the cannabis sector, have always been in an escrow. Further, we don't give any compensating shares to the board or to myself. We don't hire an IR firm to pump up the stock. We don't succumb to vulture financing. We don't really need, we're not desperate for funds, we have plenty of cash. And my salary, because Warren Buffett used to pay himself this, my salary has been $104,000 for 15 years. By taking this approach, we know that as money is invested, put into the growing companies, the result is actually going to go to the shareholders in a fair proportion and not be siphoned off by insiders or affiliates getting shares at a discount and then selling them. And I think that is a key component of getting a full and fair return to shareholders in this cannabis sector. Because of this approach and our history in the Silicon Valley and in the cancer space, where we were better known as opposed to the cannabis space where everybody is relatively new, we're contacted to comment on Wall Street Journal articles. We're working now on a Forbes magazine article. Our advertisement is being carried in Southwest Airlines. We have another major national newspaper you'd all know the name of, I can't say until it's approved, that'll be carrying a large ad for us. And of course we're featured in Food and Drink magazine talking about the emerging world of cannabis. And this is the legitimate public acceptance as opposed to, say, High Times magazine that's already in this area of the economy. We're looking towards a NASDAQ listing and then working in that direction. This is a major target, and we've taken the steps to get there. Initiated the cannabis trading, had a certification of the board, changed our transfer agent. Importantly, we hired the head of audit operations as our CFO to make sure that our audit could go through smoothly. We then up-qualified to current information on the pink sheets. We've now submitted all our financial audit input, and as soon as that audit is done and it's on its way, we'll submit our Form 10, and that will be a major step towards the bulletin board and on towards NASDAQ as we gather sufficient assets. One of the things that people have some concern on is a reverse split of the stock. Now, this is, to me, is reprehensible. I'm very opposed to a reverse split, and we don't expect to do that. We're hoping that as we gather assets, we will qualify for NASDAQ without having to do any reverse on the stock to make sure our share price is above the $5 mark. The only time a reverse split is justified in my mind is, say if the stock price is $3 a share and you need to be above $5 to qualify, then you do a 2-to-1 reverse split, you change the share symbol, and now you're on NASDAQ. And almost invariably the share price goes up at that time just because there's more people that can buy the stock. All of these things together have contributed to the increase in the Mentor Capital share price. It is confused somewhat by the cannabis bubble that it occurred in the March timeframe. What happened is there was approximately at the beginning of the year 26 legitimate cannabis companies. Today there's probably 96 fully legitimate ones, 160 others if you count newcomers, and maybe more than 200. As you go from 26 to 200, there's going to be a dilution in the share price. So we started out on January 1st with the legalization in Colorado. There was a great uptick in interest in the cannabis space, and we all saw the lines outside of dispensaries in cannabis, and everybody started investing. But there wasn't sufficient supply of public company stocks to absorb all that investment, so the stock price shot up. In the cannabis index, that by 420 investors, the Bazinga index, it shot up to 1,010. And then, as more cannabis companies came online, increasing the supply, there was a dilution as there was more companies to invest into, and that brought the share price down, where the index is now, I think, 203. So overall, the cannabis companies went up and down. They're still up about 26% year to date, and during that time period, Mentor Capital also had an increase and decrease, but the best comparison is looking at where we were on January 1st on a normalized basis with how the other cannabis companies are and where we are today. And you can see that the general performance of Mentor Capital is significantly better than the cannabis index as a whole. Our financials at the end of the second quarter, and we're now preparing the third quarter financials. We had revenue of about $1 million. Part of this is from the legacy investments, but of course as those are sold off, that cash rotates into the cannabis field. So the fact that we have other businesses that will be sold and substituted in doesn't really change the equation in the future, because we'll just pick up cannabis businesses in that area. Have net income. Now all of these would be doubled on an annual basis. Our net income per share for the 6 months was a couple cents. On the balance sheet side, we've got about a little shy of $1 million cash, about $3 million in current assets, $5 million or so in total assets, and we're virtually debt-free. There is, as in any business, some payables and liabilities. The non-affiliate debt here is really non-affiliate payables, and we could pay that off tomorrow if we wish to. And we've got about 14 million shares outstanding, which I would draw people's attention to the fact that a number of other companies might have 400 million or 1 billion, and by keeping the number of common shares down, we keep the shareholder value per share up. I'd like to thank you for giving us a look and listening during this conversation, and happy to answer any questions that you might have.
Okay, thank you, Chet. Give us about 30 seconds and we'll see what questions come in. The first question, Chet, is why did you do a 1,000 to 1 reverse split in 2008?
Yes, the shareholders voted on that. About, I think it was 85% of shareholders voted in favor, both on a numeric basis and on a holding basis. Everybody was in favor of that. When we started, the company had about $150,000 and nothing else. And our capital structure was a lot of warrants and a lot of shares. Everybody that was a shareholder was a warrant holder. And we had warrants in our left pocket and shares in our right pocket. And what we were looking to do is merge with or partially merge with different companies. But nobody wanted to be diluted, say 20 or 30%, to merge with us or to merge a portion of their business with us and then receive the cash at a slight discount, maybe a 10% discount, because their overall dilution would be 30 or 40%. So we just couldn't get any traction with that many shares sitting there with no existing business at the start, at the starting line. So we talked to the shareholders and said, the business won't change if we do the 1,000 to 1 reverse split. We'll have very few shares, but we'll have all of these warrants. And if you, the shareholder, had 1% of the business before and 1% of the warrants, then afterwards you'd still have 1% of the shares, greatly reduced, and 1% of the warrants. And that will make us much more attractive to the people we might merge with. And everyone felt that was a good idea. It was sort of, let's do this from the beginning of this phase of the company. And as soon as we did that reverse split, we began to have people that were interested in merging with us or working with us in order to get access to the cash that would be generated from our warrants. So we became a funding vehicle as opposed to a company with a lot of shares, but not much inside of it. So it worked very well, and I think everybody is pleased with the result, because all of the shareholders, as I said, were warrant holders, and this shifted the value from the shares in the left pocket and loaded it up on the warrants in the right pocket.
The next question, if you don't get the 1.5 million back from Bang, how are you going to invest in other companies?
Well, as I discussed, we're already looking to institutional investors, road shows to bring in equity investments, to accredited investors to bring in preferred share sales, and our shareholders hold a large number of warrants that they could also exercise. So as any public company, it's relatively easy to raise money as long as you have a good reputation in the capital markets and know what you're doing. I think compared to any of the cannabis companies out there, we probably know this business, the business of raising money, as well or better than any of them. And it's just a straightforward exercise. It's what we do.
Next question. I guess this is an easy question. How does an individual invest in mentor?
Well, there's two ways to invest. If you are a regular person, you can buy our stock through any broker. Our symbol is MNTR, mentor without the vowels. And if you're an accredited investor, well, give us a call and we'll chat with you on what we can do. Again, we're not soliciting for any investments now. That's just trying to answer the question.
Next question. Are you looking for ancillary businesses to invest in to become part of the fund?
Yes. We'll look at any company in the broad cannabis space. We don't provide management. We leave management firmly in the hands of the existing operator. And we looked for good financials to support our audit. Alternatively, we can handle the accounting practices for different firms if they're not very sophisticated in that regard. And anybody that has a good, solid businesses, we're looking at more of the larger businesses. We'd like to make investments in the more the $1 million size. And if somebody is very small, it's hard for us to work with them. If they're larger, it's easier. We especially like companies that are on the edge or considering going public and have enough throw or enough weight to go public in the future, because we can bring them in as a public company incubator and provide them with some funding, move them forward, make sure their accounting is proper, get their audits in order, and then in many of the in any of the many different ways that they can go public, we can assist in that process by dividending our interest in them to our shareholders. And that results in, at the beginning, them having, say, 4,000 shareholders all interested in the cannabis space with additional shares in whatever that new company might be.
Is one of them. Chet.
Yes.
How many warrants did you convert to stock this year?
For myself, almost all of my holdings this year, almost all of my holdings period, were held in the form of warrants. When we did the transaction with Bang Corporation, we were looking to get a loan from a foreign private equity group. In order to secure that loan, they asked for the company to put up shares as security. I wasn't willing to do that. I wasn't willing to issue additional shares. So I said, well, I personally could put up my shares as security against the loan. Now, my shares were actually in the form of warrants. So the company owed me personally, remember this is over a 29-year period of time this is built up, the company owes me $1.3 million. So from the $1.3 million, I had them loan me $900,000 and use that to exercise 5 million warrants. Then I took all of those warrants and put them alongside my previous shares and locked them in an escrow where they have been and continue to reside. So the answer to the specific question is I exercised 5 million warrants this year, and all of those are in escrow and will remain in escrow.
The next question, Chet, is can you discuss the Symbian Bank loan issue?
Sure. I did work internationally when I was at General Electric. Put factories in Tokyo, in Ireland, and I worked with the State Department early on when I was at Aerojet with Russian interests in the natural gas field. So very early on, in January of 2013, it was difficult to get classic funding from normal banks. They just weren't touching the cannabis space. And I thought that it might be possible for me to get funding internationally. And a fellow from Japan, now a lot of these guys are, you know, if somebody's involved in the cannabis space, maybe they're not first-tier people, and I knew that. But he pointed out to me that people were trying to get money out of the Ukraine before the doors closed along the border. So I understood that dealing with the Russians and the Ukrainians are very similar to the Russians, except probably worse. I talked to a fellow who was on Hillary Clinton's tour of the Ukraine, and he said they're even bigger thugs than the Soviet Union, or bigger thugs than Russia. So I said, well, it's in their interest to get money out of the country. We have a good reputation, and if they give us a loan, well, you know, what is the risk for us? It's not like we're giving them bulldozers first or giving them stock first or anything like that. We're keeping all the stock, all of the venture capital stock in the U.S. We're not giving them any access to that. And if they give us a loan, great. It was a $35 million loan, and that probably would have caused the exercise of $100 million in warrants, and we'd be a completely different company now with a share price maybe in the $7 or $8 per share range. So we took a shot at it, and the private equity group there announced on March 14th that they had closed the loan. Now, usually that's quite a good sign, but we were a little bit nervous because at that time the borders were starting to close down around the borders of the Ukraine. No country wants all the money of their country to flee at that time. So they announced it, said funds were being wired from their correspondent bank, but it was never able to actually be wired. So we kept the door open. They tried other ways to get the money out of the country. They sent it to Luxembourg. Now, the group they sent it to in Luxembourg was really just an alter ego of themselves, much like we might reincorporate in Nevada to avoid state taxes. It was that type of transaction. But once it was outside of the Ukraine, it was no longer subject to confiscation, potential confiscation by maybe Russian interests that could have taken over. Who knew at that time? They no longer needed us, and after a total of 3 months we worked on this. I said, you know, if you don't fund, if you can't wire funds, you can't overcome the currency export restrictions, we're going to have to close this opportunity. And they said, you know, we can't do it. And they did the press release to start things off. We never announced the loan. Because I don't announce things that aren't real, that, you know, money in hand, and I wish that they would not have done it. Then it would just have been a loan we applied for and it didn't occur. But because they announced it, it stirred a lot of people up, so I made them announce that they had closed that particular transaction. And that was a loan we applied for that didn't happen. It was a lot of work. I remember when we were trying to get that done, I was talking to the head of the private equity group. You know, he's in his limo, he's got a deep Russian voice, as you might expect, and we worked to get things done. I think I slept 5 nights out of 7 nights that week trying to make it happen. We put up a credit default insurance to secure that. We could have gone to Lloyd's of London. We went to an Irish firm, and our total risk there, my analysis was, we were risking half a cent for every dollar that we would have made in the overall transaction. So we could afford it. We can afford, a half a cent per dollar. It's not a large amount of risk. It didn't happen, but we didn't lose any shares. We didn't lose any bulldozers. All it did is take too much of my time, and we're retrieving the credit default insurance, using the largest law firm in Ireland to bring that back. I think we have a large percentage of probability of getting that back, because in the past I worked with the fellow that went on to be the Prime Minister of Ireland. So we have very good connections there.
Our next question. Other than selling stock and redeeming warrants, what provides Mentor Capital with revenue?
Well, we're an operating company that invests in different companies. So we've received considerable revenue over time from the companies that we've invested in from the beginning of time. And then the investments that we've made, as we invest money in, and then we sell off those investments at a profit, and the profits help fund the operation or fund our stock repurchases or justify the increase in the share price.
All right, next question. What happened with the acquisition of HempCon? Did you hear that, Chet?
Well, yeah, I did. The HempCon was my first introduction to what the previous speaker referred to as a lack of sophistication in some of the businesses in the cannabis space. In Silicon Valley, or in the biotech sector or cancer sector, everybody understands the rules of the road. You come out with a letter of intent, the public company does. The parties negotiate any final items, and then they issue a contract. And you come out with a letter of intent, so there's no leaking of the possibility of a major change. And so everybody's on an even foothold. And then at the end, you close the transaction, or if you don't want to close the transaction, which is completely possible, sometimes there's higher bids and so forth, then you're quiet during the interim, and then at the end, you make a single announcement saying that we're not going to go forward. In this case, we announced, as agreed, the non-binding letter of intent, and almost as soon as we made that announcement, other public companies approached HempCon and said that they wished to give them a better deal. And immediately HempCon started saying that they did not have a relationship with Mentor Capital. Now, it is true that we had not signed a contract. We had we had executed a letter of intent. So that's not the normal way that public company transactions should be conducted. After a certain period of time, as called for in the letter of intent, we issued a statement, or a statement to HempCon, and did a press release that said we would not be going forward to conclude the letter of intent by the signing of a formal contract. Later, the head of HempCon called me again and asked if he could receive funding from me at a later point. He maybe wanted to become funded and found it wasn't so easy to get a better deal than we were already offering. I declined to work with him.
Chet, we got time for one more question. Let me see here. One question is how do you invest 1 million in new companies if you only have 900,000 in cash?
The investments. I don't understand the question exactly, but let me take a shot at it. We try to maintain here a cash reserve of $1 million. And probably it's more emotional than anything else, but that's just the approach that I try to take. And then as we raise more money, the amount above $1 million, we look around and invest in the best opportunities that are there. If our balance falls to 900,000 or 500,000 or whatever it might be, and then we bring in another $2 million, we would top up our reserve to about $1 million and then invest the excess. So we're continually, we received a check for investment yesterday, and those funds will be earmarked for investment someplace as those opportunities arise. I hope that answers that question.
Okay, I think that's all we have for the Q&A. Any last comments, Chet?
Yes. I take our responsibility to the shareholders completely to heart. Peter Drucker, the great management philosopher and writer, said, "The men and women in business are the stewards of the assets of society." And I feel that the assets or the investments that the shareholders have given and entrusted to me are a responsibility that I have to apply in an effective way to this market. I think we understand the medical side of things better than most anyone. I see that the social side of cannabis use actually reduces the harm because of that substitution effect. And I make sure that in every single way that the shareholders are treated fairly. And if you want fair treatment, Mentor Capital is a very good place to look to. And I challenge any other public company to have the same sort of protections in place as we do to ensure there's not a pump and dump, the extra issuing of shares, even the fact that all of my shares are in escrow and are not being sold. Ensures that the shareholders get the absolute fairest treatment they possibly can. Thank you.
Thank you, Chet. This is the end of the presentation. We did receive a lot of questions. So what we'll do is submit those questions to Chet and have him answer those questions. And you can email dawallace@cannawebcast.com for the answers to your questions that did not get answered during the presentation. Thank you, Chet, and we look forward to seeing what Mentor Capital has in store for the future.
Thank you.
Thank you for attending the Cannabis Investor Webcast, where cannabis companies increase their liquidity, awareness, and exposure to individual and institutional investors, cannabis entrepreneurs, media, and consumers. We would like to thank our sponsors, American Green Incorporated and Indo Expo Trade Show, which will be held in Denver, Colorado, November 15th through the 16th. Website address is www.indoexpoco.com. Again, www.indoexpoco.com. Our speaker today is Shane Duwall, who's president and CEO of US Weed Channel. And I'm going to change the presentation over to you, Shane.
All right, thank you, Derwin. Good morning, everybody. I hope you guys are doing well. I know some people are from the East Coast and you're probably getting hungry, and some people are probably on the West Coast and you're just getting into this. So thank you for joining us. Let's go ahead and walk you through what we're going to do with United States Weed Channel. Our business concept at the US Weed Channel, when we started this, was to be the biggest and the best.
Hold on, Shane. Shane, your screen isn't showing. Is your PowerPoint up?
Yes. Hold on. Oh, here we go.
Okay. Yep.
All right.
There you go, Shane. That's great.
Okay, good. Now everybody can see me. Good. All right, so let me share with you guys what we're doing here at the US Weed Channel. When we started US Weed Channel, we really kind of had a vision on being something just kind of neat, but then it quickly turned into, well, we can be the biggest and the best and the most trusted cannabis network that there is, and so let's try to lock in the market. So what we did is well, we'll get into what we did to do that, but the next thing is, what do we sell at US Weed Channel? Well, we're a TV network, so we sell ad and sponsorship campaigns. We make productions. With those productions, we do distribution, not only of our productions, but things that we can, co-produce with other people and co-brand, and also retail sales of all the legal promotional items or the swag that comes along with any sort of TV network or TV program. Our unique service and what we do is, well, we're the first trademark cannabis TV network. All of our trademark and our wordmark application came in first, and you'll see how we've kind of used that to lock in the market. What we're doing with USWC, how we're using, what technology we're using rather, to get us to the market is, well, technologies, which is set-top or living room streaming media. Many of you maybe have an Apple TV box or a Roku, and that is exactly what we're using. The concept of what I'm going to show you guys or walk you guys through is how we're going to blanket the cannabis industry and become really the first cannabis media and retail giant, or at least make it a very good attempt. And I'm going to walk you through our strategy to build the best possible brand in this cannabis media, so that we can be acquired by somebody quite larger than us, maybe an HBO or who knows, something even larger. Our mission statement at US Weed Channel is acceptance and legalization through education and entertainment. We tried to keep it simple. It's exactly what we want to do. We want to make weed like wine so that everybody's used to it. We want to help with legalization, and we're going to do that through education, and nobody's going to listen to education that isn't entertaining. So this is how we're going to get our goals accomplished. Our market summary here with US Weed Channel, if you look at what we're going into two huge markets. The first one is cannabis. Cannabis right now is the public topic. It's everywhere. Celebrities are talking about cannabis. Government officials are talking about cannabis and how they want change. And every day in business, you'll read about some new fund that's coming out or a new business that's trying to go national with their, cannabis-based business. And out there in the world of investment, everybody wants some of the cannabis industry, but what is really safe? And that's one of the things I'm going to walk you through today. The next thing, digital media advertising. When you finish with this presentation, I invite you all to look up what's happening with digital media advertising. This is the second year that large companies have taken budget out of TV and put it into their streaming media budget. So, and the second year as well that it's grown over 20%, 24% constant growth so far, and they're expecting it to go higher. Now, out of a $1.4 billion market last year in the first, half of the year, I would like to get a large chunk of that, and I'm going to show you guys how we're going to do it. What is creating the opportunity? What is driving US Weed Channel? Well, first off, there is no cannabis TV network in your living room. Where do people go ages 18 to 88 for the proper cooking show, the well-produced cultivation series, the real news, on legalization, and, real programs on medical advancement? And of course, we are the Weed Channel. Where are they going to go for fun? Think about it. And this next question really addresses that. Where do Canna ads and Canna productions go? Everywhere else, it's just not right. Even if you're Comedy Central, running a cannabis ad or a cannabis-based program purely is going to offend some of the people that are watching. But when the people are watching US Weed Channel, no holds barred. We're going to be fine. We can run every type of Canna ad and Canna production, and I'm going to show you how that really lifts a glass ceiling for cannabis businesses as we go along. Advertisers, we already talked about, are shifting dollars to digital media. We are going to take what's called out there cable cutting. There's an entire stream of people that are cutting the cord to their cable company and going strictly with streaming media over certain devices, whether it's a Roku device, Apple, Google TV, whatever. This is what the wave is. By next year, there should be 250 million people in America alone that are using streaming media devices and have cut the cable cord. So that means there's going to be multiple streaming media devices, and those devices allow us to be interactive with people. So we can actually make applications in the channel. We can do shows where they're, instant pay-per-view. We can do live shows. We can have shows where people vote on what's going on while the show is happening. And that's something really, really cool, especially when we're talking to some of our advertisers and what they'd like to do. Okay. Moving forward, I'm going to show you guys how we can use applications, magazines, and social media to blow the doors off of US Weed Channel and really make it canvas the entire industry. Applications are huge, as you all know, and we happen to have an inroad to create several magazines right off the bat that will help us garner, from what we're estimating, about 8 million viewers to the channel through the magazines. And of course, social media, all we have to do is either hire somebody in-house or hire a firm and as part of the PR firm, and they will blow us up on social media. The other opportunities that we're looking at is this emerging market, which is cannabis. It has a ton of emerging products. So that means a lot of different advertisers. That means a lot of new products that we get to introduce to the market, and a lot of money that we get to make off of that. The next line here, everyone's making a weed show. You guys may not know this because this is not your daily business, but every single day we have new producers and directors coming at us with their brand new weed show. Where are they going to put these shows? They're making these shows currently as we talk. Where are they going to run these shows that's acceptable? US Weed Channel. The last thing we're going to look at here, weed is going mainstream. One point I like to make, if you were 24 years old in 1969, you're 68 today, so weed is okay. I'd like to go over a little bit of our competition because there's really sort of a lack of competition. There are other wannabe Canna TV networks that are out there, but I've already been contacted by one of the only one I was worried about, who asked me if we could license out US Weed Channel because they knew they got beat on the trademark. So that was kind of neat for us. It was sort of confirmation that we did it first, and we're going forward with this. Other TV networks, the major networks, again, how are they going to really introduce total cannabis TV shows without offending some of the people that are watching, especially through the Bible Belt and Central America here. There's a lot of people that are still going to be offended by cannabis. If they're watching the Weed channel, they've already been pre-programmed to know that they're going to see it when they watch the shows. Let's see here. As we go into Cannabis Magazine, we talked about that already. We can reach 4 different demographics as far as age. That creates 3 of them, and one of the demographics we can reach is the retail outlets and the cultivation areas. Excuse me. Those people need a buyer's guide, and so we can create that as well. The next thing is a Cannabis web series and webcasts that are out there. If you see a lot of these things, I won't say that they're not awesome, but many of them, or the majority of them, are low production value. They've got a lot of room to grow, just like we do, but they've stayed the same for a long time. We at US Weed Channel are actually trying to raise the bar incredibly high and make great productions, make people really want to watch our shows and follow our series. That's the difference between the two of us. The last line here, we have, even though there are people out there making series, some are good, some are very good, and we do have a place for their efforts, so we've created revenue sharing, so there's a place for everybody at US Weed Channel. It sort of helps us realize revenue from other people's productions. Now, our goals and objectives here, what we're trying to do with this immediate funding is pretty simple. We want to create our productions that we're doing, have the ability to hire a small sales staff, which allows us to get a video tech, so I don't have to load up all the videos myself. You'd be surprised what you have to learn when you're running a small business and opening a TV network. There's a lot to it. But I'd like to get somebody like that on board. I'd like to get, again, some salespeople that were raised in the ad and TV industry, and get an HR person. And I'd really like to get a CFO, because I know a lot about money with a background of commercial insurance, but there's a lot that I can learn. So the next thing is we want to launch a couple of apps inside of USWC, and we can hire the professionals necessary to do our public offering. And all the while we're going through this 6-month process, we can attain or get to the goal of 1 million daily viewers throughout all of our shows. Once we get there, we will be considered a major advertising entity out in the world. That is sort of the benchmark, is 1 million viewers. It's difficult to get that on a show, but if you can get it to your network each day, well, then you can start charging the big dollars, and that's what we're going for. That is the part where the people that are listening today, once we reach our IPO and we hit the market, you can take your returns and go if you like. However, we have really great plans on what we're going to do after we go to market. We're going to start up a ton of different productions, and the way that I sort of say it is I'd like to become somewhere between the next Bravo and Comedy Central, where we have a ton of different shows that people are watching. We'll have a scheduled program channel where our channels come out, or our shows come out as on a scheduled time period. So people can gather together and watch the release of, maybe it's 420 Honeys that comes out on Friday at 9 o'clock. Maybe it's something inside of Cannabis Culture show that comes out on Tuesday night at 8 o'clock, and people are getting together. They can see those live shows then, and a week later they can always see them on demand throughout our channel, and then a week after that we can go ahead and redistribute those and get paid for that, and redistributing them in other countries. So after we do our IPO, we can also implement our international expansion. We can start doing small acquisitions of companies that we like, and we have a plan for that as well. We won't get too deeply into that because that's not necessarily our focus. The 3-year goals with US Weed Channel is to develop a lot of revenue streams through different productions and our online sales and our partnering with different websites and co-producing and co-branding, and in about 3 years look for that acquisition partner. And if that doesn't work, we'll be making lots and lots of tangible assets every time we make a production, and we can just continue to ride it out. We don't necessarily have to be bought. It will always be worth well, more and more every week. The team. Myself, I've been an entrepreneur since age 19 when I opened a residential window cleaning business. Since then, I've been in oil and gas. I've been a licensed insurance broker since age 26. I've sold electronics to the state of California and Boeing, developed an app called Baby Boom, and I've made film. So I guess all that says is nothing daunts me. I'm still licensed with my insurance broker license, and I've been making film now for about 3 years. Keiko, my partner here in the business, she is incredibly awesome. She is the lighter side of management, if you will. I'm very capitalistic. Keiko is quite caring and quite coddling to all of our artists and our people that help make our films. She has all of the experience in the promotion of event, film, and music, as well as 20-plus years of international and international surf and film festival planning. So these are qualities that are great for us because they help to bring in sponsors, they help to coordinate events wherever they are, and as you can see, we still have an open position for our VP and CFO. These are some of the people in an extended team that will come on somewhere in between this part of the funding and the IPO. Currently, we use Chick Chickarelli of Web Wizards. He's designed our uswechannel.com website, and Chick actually helped me learn how to develop the channel and put everything up on the channel. So together we've developed a great relationship, and he's never let me down yet. That is very important to me in business, and since he has 28 or 29 years experience doing what he's doing, plus a very significant background in media buying, which is great for us in production, and he is located right there near Hollywood. Next person, Heidi. Clemens, Heidi, she's just, well, she asked us not to talk about her sister, but her sister is Gwen Stefani's designer, but Heidi wants to make it on her own, and she is equally as talented, if not more so. And what's great about Heidi is she has years of buying experience working inside a company, so she's actually quite more valuable than her sister with just ideas. Moving on. Matt used to work for all of the major networks here in Hollywood before he opened his own production studio on the East Coast. And what he used to do was just before CEO final approval of a project, Matt was the one that would bring it to them. So he knows what's going to sell and what's going to work out there in the world of production, and that helps us with our ongoing productions, the 25 plus that we've already got outlined and ready to go. We've made sure through Matt that they're at least sellable and brandable. Tyson Brown, he's a branding specialist. Any big company that you can think of, I'm pretty sure Tyson has worked with them for branding. He helped me design US Weed Channel logo as well as Be a Bud, and he is awesome to work with. Everything that he puts out is wonderful. Mary Jo Weston of Simplicity Law. Mary Jo used to be in Hollywood here and work in the movie industry or film industry. Now she's in Colorado, amazingly enough, and it was a referral from somebody I was doing business with in LA. Mary Jo has surpassed everything that I could possibly want because she literally has filed all of our trademarks the most appropriately. If you have the ability to research the trademarks and wordmark that have been submitted, you'll see that she's the only one who submitted us for broadcast services. All the rest have been submitted for advertising and different functions. None have been submitted for broadcast services. We, of course, hit all those other areas as well, but the important one is broadcast services. We're a TV network. Justin Crum, Lindsay Ward, Josh Palmer, Love Machine, gosh, a lot of people. We've probably talked to 15 to 20 very well qualified, award-winning type directors who are ready to make each of our shows. They all have a very specific desire to make each of the shows that we presented to them. We've allowed everybody to pick which one that they wanted to make, and they've come to us with ideas. US Weed Channel is waiting to happen. I get so excited at this point because our demographic being 18 to 88, oh my goodness, we have the ability to make, well, as much as we're trying to stay away from the Rastafari and reggae, red, gold, and green feel that is, well, a misnomer of people that use cannabis, it still has to be in there. So we have some of those fun shows, but we have shows all the way at the other end of the spectrum where we're going to be showing people, actually following people as they try to cure their cancer. We'll be following doctors as they try to, introduce things of cannabis to the American Medical Association. These are big deals. We'll be following, government as they make change and they do speeches and create events and things like that. So hopefully, US Weed Channel will become very much a driving and steering force in the cannabis industry. We will be the trusted place where a person goes to find out about what's going on with cannabis, whether it's affecting their health, affecting their life, outside of it, maybe it's affecting their pocketbook. Where are they going to go? They can search around on YouTube, or they can go to US Weed Channel. Okay, this is how we're going to spend this money. This first part right here, this is what we're asking for, is $455,000 to capture, well, to blanket the opportunity of cannabis. So it'll take about $60,000 to get us to market, and I've planned a little extra in there in case there's an issue with getting to market. The productions that we're going to make over this 6 or 7 month period will cost about $80,000, maybe a little more, but that's okay because we'll have personnel, we'll have ad team going at that point. So they'll be able to pull in sponsorship, and we won't be putting up the entire dime to make each one of our productions. The distribution of this, we're going to go from just Roku, where we're at now. We're going to fly from Roku to every streaming media outlet, Apple TV, Google Chromecast, Amazon Fire. Will be available everywhere, from your mobile to your tablet to your TV, everywhere. And that costs about $30,000 over these next 7 months. Now, here's the strategy right here. When we get funded, we'll hire both the attorneys and the legal people that are required to help us get to the OTC bulletin boards. I've talked to some people, and if we want to fast track, well, I've talked to a lot of people, not some. If we want to fast track it, we're talking about spending about $125,000 to a little bit more than that. I put in $150,000 for contingencies if there's issues. If we save any money off that, great. But the goal is to get to market with the best, safest cannabis stock, and I'll get into that in a moment. A month after we start that 6-month process, we'll be hiring the PR firm to go through a 6-month process, and that costs about $125,000. They'll spend the first 3 months letting the world know that US Weed Channel is the acceptable cannabis TV network. It's okay to watch with grandma. It's okay to get your information from US Weed Channel. Come on down. And then the same PR firm will change the ad or the push to be the anticipation of the US Weed Channel stock and when it's coming to market. And by the time that it gets to market, people will be so frothing at the mouth to get a little piece of US Weed Channel because they'll see the shows, they'll see the channel, they'll know it's real. Now, we'll get into the safeness of the stock in a minute. I don't want to get all excited and get ahead of myself. And the last part is legal. Everything that you do in business, we need legal, and we like to hire the right attorneys. We've hired a few already, but I want to make sure that we get the best possible one for all of our forms. So now we're moving forward. And that brings up the $455,000. I didn't want to put in here our gigantic financial plan and revenue and all that good stuff. I literally have put together a 72-page business plan that details every part of our revenue and how we're getting it and where it comes from, magazines and productions and sponsorships and the sales of merchandise and acquisition of smaller productions, co-producing. It's all in there. And for those of you that want to go further with this, please get in touch with me. I will give you a link to our online business plan. You can check it out. You can go over it. You can see where we're going. And that is for the long-term people. But remember, right now, today, what we're talking about is raising $420,000 to get us to market. And those people that help us get to market, when we get there, you can exit, and you'll have a nice gain there. and we'll show you that as well. All right, moving forward. The risks are kind of over. The channel's launched. So with the trademark and wordmark news that I got last week, which was all the applications that have filed for trademark after U.S. Weed Channel, which equates to all of them, have been flagged for resubmission, citing U.S. Weed Channel as a prior submission and a likelihood to their being denied. So that is huge news for intellectual property. We can license it, we can use it to leverage other channels if we want to, but really what we want to do, because we don't want to stop the flow of good information and we definitely don't want to put people out of business, we just want to find a way to share in that revenue. So what we've also done, by the way, in this first line, we're the only people that have filed for wordmark. And if any of you are familiar with wordmark, what it is if you name your company something that makes another person think of a cannabis-based TV network, well then you're an infringement of our wordmark. So if you start a TV channel or something and you call it Cannabis TV or TV Pot, whatever you want to do, any direction, that will most likely be infringement of our wordmark. Our competitors, if you look at them, they're sort of light years behind us. Since December, we've made over 25 productions. We're up on the channel. We're in commerce. And those of you who have studied the cannabis industry know that it's very scattered. There's not a lot of people getting together to create a big family of positive growth. There's a lot of single-minded, I don't want to say single-minded, linear moving businesses that are people from the cannabis world, meaning I made something, I sold something, here's my money and it's mine and you don't get any. Well, that doesn't work in business. This is moving forward with a TV network. We have to partner and shimmy and shake and do all this neat stuff and get a piece of every little thing and then we'll be fine. But they don't really, I haven't seen that out there. I can't necessarily label them, but I haven't seen it out there. And since now, in public perception, weed is very acceptable. 55% of Americans on the last take they want cannabis legalized. So if you take some of the prior information in this report that shows that 68 million people are going to be watching streaming media, and you take 55% of those people, that's a pretty huge market. That's over 100 million people that at least want to know something about cannabis and have the probability of tuning into U.S. Weed Channel. A lot of those people, by the way, don't smoke pot. Now, moving forward, again, expected rewards. What we're talking to you guys about today, I only expect you guys, if you want to stay longer, that's great. I won't say that one way is smarter than the other because both ways are smart. If you want to leave and sell your shares, great. If you don't, great. I'm going to make more money for you. And the expected valuation when we go IPO, I've studied some other things. All the other, hemp and pot IPOs. This one's going to be a little more sexy. Not too many have advertised to get going, so I use sort of a minimum valuation of $6 million. And if that's what happens, the $455,000 that goes in to create 25% of the shares, that will be $1.5 million, and you're looking at 329% return in under 9 months. So you can leave and still have a great return. But if you want to stay, it'll get better. All right. Let's see. We have built a great foundation. We have the trademark, the channel's launched, everything's going great. We have been viewed in 108 countries. We have been streamed 33,000 times in August. We have been installed on 26,500 Roku players, and we've only had one press release. So the market's there, and the people want us. Wait till we start putting out press releases and advertising. Now what we need to do, we need account executives because the businesses need to know about us. We need more shows because that's where you place the advertising. That's where you place the products that will be advertised in product, in kind, all that good stuff. We need more platforms, and that's what will happen immediately. Right when I get this money, we're going to hit, I'll have all the apps built, we'll be on all of those streaming platforms, including Xbox and PlayStation, and that will open us up to hundreds of millions of our very hard-to-reach demographic, young males 14 to 28. Those are the guys that will be watching our channels first. And the next thing is we want to capture, the reason we're doing this is we want to capture this train rush. Now moving forward, consequences of being a slowpoke, well, it takes us a little bit longer to gain popularity, to gain our advertisers, to get to multiple platforms, and to get to be on the bulletin board. And it's a possibility that competition might try to catch up with us. But do I sound like the kind of guy who's going to this meeting and then stopping? I hope not. So, you know what, guys? The train is leaving the station. I hope you guys see the value in this and want to hop on just as soon as possible, because we're going forward. We're making this happen. In the long term, what are some of the things we need to look out for? Really, it's just proper positioning. My background is with a couple of gentlemen and mentors that have a lot more experience than me in not only business positioning, but retirement planning and things like that. So proper positioning, creating multiple series. The more content we have, that makes us sit at the top of the throne. And if we continue to do our proper branding, where we don't burn anybody, we don't make our people look stupid, we continue to make people, set them in a positive light in all of our shows, and we do lots of smart giving so that the excess money that we have, we give it to the right places and make a lot of press about it. That will keep USWC in the hearts and minds of everybody in America and abroad as well. And we want to get to the point where we can have an FCC-regulated channel and hope that the We channel, can be friends with the FCC. It's a big finger cross on that one. And then one of the things that's in the future that is an issue that we need to look out for is the delivery cost of anything, streaming media over the internet. But that will be a few years off, and I think that there would be a big, big problem if that was to be implemented too heavily. Okay, next thing. Okay, here's what I would like you guys to walk away with this with. Right now, we have the trademark and the word mark. Right now, we're addressing a huge demographic that all of them want to see us. Whether you're 18 and you want to see girls smoking out of a really bitchin' bong in a bathing suit, or you're 88 and you want to learn how to lower your cholesterol or survive cancer, we're here for you. What we're doing when we go to market is we're mixing a proven industry in video advertising and a probable industry, which you're all here because you know it's coming, which is cannabis. That makes us, for lack of a better term, a very sexy offering. For those of you that are wanting to put in right now, you're looking at a 6 to 9 month return of 300+%, and you can exit. And you can stay for the long term, or you can do a little of both. They all look great. Remember, every time we make a production at USWC, people see their money going to value, making a new production. And every time we make a production, we create an asset, and that gives us more of a net worth. That's just how this works. We're already in operation, and we've realized a complete ROI. So now we're looking at running on profit right now. And we want to expand massively. And if you look into it, one of these last points, out of all the advertising media out there, mobile, TV, everything, digital media is the forerunner by far, and it's collecting the most money, and that's where we're going. I think I've covered as much stuff as I can, except for telling you guys what shows we're making. If you'd like to see that, it's on our website at uswechannel.com. If you want to know more, which I hope you do, please call me, 949-973-5883. Get in touch with me via email. I'm going to open it to questions now. Go ahead, Derwin.
Thank you, Shane. Give me 30 seconds to look at the questions. Shane, the first question is, There are many YouTube channels that focus on marijuana-related media. Is your intent with your word mark to aggressively go after those existing channels and corner the market on video media?
Okay, so that's a good question. And what I heard was, are we going to go after all of the people that are creating productions and try to corner the market or put them out of business? We don't want to put anybody out of, well, first of all, the answer is yes. The reason we filed the trademark was to corner the market. But all of those people that are making things for YouTube, what they're not is they're not in the living room. They're not going over a streaming media device, and that is where people are looking at, you know, on their tablet, and on the 50 and 60 inch in the living room is where they want to view things, even if it's coming through streaming. So what we did is we don't want to, again, put anybody out of business. We want to exploit their efforts. So we've created a place for everybody's videos. We can do a revenue share.
Okay. All right, next question, Shane. Would there be enough content to support Weed Channel? Would you create your own content or buy content? Content is very expensive.
Yes, yes, and yes. We have 4 of our own shows that we've been making right now. We have multiple productions of each. So yes, we'll be making our own. We have about 25 slated shows that we'll be making of our own as well. That goes toward the mentality of becoming the next Bravo. I don't want to put them down, but they do throw a lot of stuff against the wall to see what sticks, and that's smart because what sticks, they keep. So yes, we'll be making our own, and then yes, we will be co-branding and co-producing things because people have come to us with a myriad of ideas, and there are a lot of good ones. So we can't wait to put in a little bit to help them start their production, and then have our ad teams bring in lots of sponsors to help bring up the production value.
Next question. You mentioned targeting audiences between the age of 14 to 18 as viewers. As a representative of an institutional investment firm and a mother, don't you think that this is irresponsible advertising?
Only if you advertise the wrong products. I understand as a mother your concern. I'm a father of 2 daughters. My girls are 21 and 23, and I'm still worried about them and their daily lives and what they do and who they interact with. Whether we as parents like it or not, cannabis is out there. And what we're trying to do with US Weed Channel is get away from that stoner mentality, that red, gold, and green dreadlock look. It's a misnomer. It's not what we are. There's people out here in society that are leaders of society that utilize marijuana every day in one way, shape, or form. So yes, we are going to upset a few people, and I do apologize if you're upset, ma'am, but unfortunately it's already out there, and they're already watching, and it would be irresponsible as a leader of this company to ignore those people completely, but we can try to educate them on responsibility.
Next question, Shane. Are you a subsidiary of American Green Incorporated?
No. US Weed Channel is a Wyoming corporation, and it's all completely owned by Keiko and myself.
Okay. Next question. Would the cable, so I guess the question is, currently you are streaming media only. Would the cable networks air Weed Channel in the future, or is that a possibility?
Absolutely. I believe that they will. With the changing tides here on cannabis, as we build our station that's released on all these streaming media devices, eventually, and part of our goal is to have a channel that is, FCC regulated, and they're okay with. It's part of the bringing up of the mentality and the I guess the look of weed, because it'll be very responsible of us to work with FCC. And yes, we would like to have that channel just as soon as possible, because as soon as we do, that just means millions of more viewers.
Okay, next question. Are you willing to advertise at your own expense responsible use? I don't know if you understand that question.
I think I do. The question was, are we willing to advertise at our expense responsible use of cannabis? Absolutely. We do right now. We're trying to work with a couple of government officials to help their campaigns with positive outlook. Right now we have a video up there from Law Enforcement Against Prohibition. We have well, yes. So yes, we do. And we've actually reached out to several nonprofits, because what we'd like to do in our design is have 12 nonprofits where each month we highlight one, and we'll pick a certain number of featured products in the store that when they sell, the benefits of those products or the proceeds will go to that nonprofit. So hopefully we can be helping 12 nonprofits in a very short amount of time.
Next question. A return of 300% for a short-term investment is a pretty overzealous prediction. How did you get to that number?
What I did is I measured the release of the other cannabis stocks. And the other cannabis stocks that are out there, I didn't see any of them get a huge PR push before they were released. So I don't know, and I can't say that people did it wrong, but if you look at the other ways to release a stock, if you get people hungry in it, then they're going to go ahead and buy it. So coupling that with what I've seen raised from all of these different stocks has been between 2 million and upwards. And I took the average of 600 or 6 million rather, because we're mixing it with media. And unlike a standard cannabis stock where your crop can be eaten by bugs, it can be rained out, your investment can be blown away. It's not that safe. We have the safest cannabis investment, and that's what we're going to show people. As we don't, we make a production so every week. You'll be able to see your money creating more worth for itself every week on the channel. And that's how we'll push it. So yeah, it is a little bit zealous, but you know what? I haven't failed in any of our goals so far.
Next question. Have you pitched your business model to your peer companies or competitors? It seems like they would be interested in your model for acquisition purposes, I guess.
Well, we've just started, really. We wanted to make something that had at least a value to it, and we wanted to make sure that our trademark was recognized at the submission first. So we've really just started raising funds maybe 30 days ago. So we've pitched a few people, but we have a more grand idea as far as covering the media. And what I want to be is the best possible scenario for any company or product to introduce themselves to the cannabis culture. When they work with US Weed Channel, they'll get themselves in TV shows, on all these different platforms. They'll be introduced through mobile media and mobile apps, and well, as you can see, we will be the best possible place to start when you're introducing something new to cannabis, because we'll blanket the industry.
Well, thank you, Shane. That's all the time we have for Q&A. Would you like to make any closing comments?
I've talked a lot. I think you guys probably have a good idea of where we're going. If anybody would like to contact me, I'm open all day today. The number's right there on your screen, 949-973-5883. You can email me, Shane at US Weed Channel. But please get in touch today as quickly as you can, because we want to go forward. And we thank you so much for your time.
Thank you, Shane. We look forward to hearing from you in the future and see what US Weed Channel has to offer for the upcoming year. Next presentation is at 1 o'clock, so we're going to take a break till 12:45. And the next company presenting at 1 o'clock would be American Cannabis Company. Thank you.
Thank you, Darren. Thank you, everybody.
Thank you. Welcome back to the Cannabis Investor Webcast. Thank you for attending the Cannabis Investor Webcast, where cannabis companies increase their liquidity, awareness, and exposure to individual and institutional investors, cannabis entrepreneurs, media, and consumers. We would like to thank our sponsors, American Green Incorporated, and also Indo Expo Trade Show, which will be held in Denver, Colorado, November 15th through the 16th. The website address is www.indoexpoco.com. Again, www.indoexpo.com. Our speaker today is Corey Hollister, CEO of American Cannabis Company, and Trent Woloveck, COO of American Cannabis Company. And now I will make you guys a presenter. So give me a second. Okay, Corey and Trent, I think you guys are on.
All right, good afternoon, everybody, and it's our pleasure to be able to share our story with the world, both investors on the retail and on the institutional side. So without further ado, I will jump in with Corey, our CEO, as well.
Hey everyone, how are we doing today? Corey Hollister, a pleasure to be here.
So without further ado, we'll jump right into the investor presentation. We are American Cannabis Company, allowing individual entrepreneurs and businesses and assisting them with growing the next frontier. Our OTC QB ticker symbol for the time being is BIMI. We're under Brazil Interactive Media. However, we are in the process of switching that over to American Cannabis, which we will discuss further in the presentation. This is our safe harbor statement. We'll jump right into the presentation.
Everybody, Corey Hollister here. So a little bit about the company, founded by myself and my founding partner, Ellis Smith. We're both veterans of the regulated cannabis market beginning in 2010 here in Colorado, owned and operated. Founded the consulting company in 2013 and quickly began working not only here in Colorado but in the rest of the country and additionally the world as well.
So a little bit more about our public market snapshot. As I alluded to earlier, as of now we are trading under BIMI, Brazil Interactive Media. We launched the company in 2013. As of right now, we have about 40 million shares outstanding, and you can see the rest of the information. As I alluded to earlier, we received the merger consummation from the SEC and are in final discussions and in the process of getting the name change as well as the ticker change through FINRA. We will be able to disclose and talk about in more detail specific financials as we come up to the third quarter and finalizing the merger with the outstanding entity as well.
So just a little bit on what's going on from a market perspective now. Obviously, as I alluded to, when we founded the consulting company, we began really expanding our reach both nationally and globally, as well as what we're offering in these markets from the consulting and services, as well as products. From a macro level, we're seeing some different things occur. One, More legislative action is being taken by the states, preemptive to ballot initiatives. We do also see a number of ballot initiatives continuing to make it onto the voting sessions, and we're seeing the growth of both the medical and the rec side. Specifically here in Colorado, with the rec market, there's been a number of positive indicators. We had a record winter tourism season, a record number of submissions to colleges and universities. MSN Money named us one of the top business economies, so doesn't seem to be any negative impact from a business perspective in terms of companies locating here. And we're also seeing some downticks in violent crime and traffic accidents.
So a little bit more about and around the market sentiment from a macro level. Obviously, with ACC's position in many states, 9 states around the U.S. and 1 client up in Canada, one of 13 national producers up there, ACC gets to have a very unique view in what we see go on, not only in each individual state or up in Canada or at a global level. So therefore, we get to have the view of being kind of the front end or the bellwether of the cannabis industry as a whole, being able to see and understand when states are starting to implement programs or are going to be going through and developing a program. We are the first kind of line of contact. So with that being said, we've seen a lot of favorable legislation as well as just general public opinion coming to light over the past really 12 to 18 months. As everybody I'm sure knows, this is now being called the next .com kind of wave, and so with both the public opinion flipping from a negative or no, I don't think any part of cannabis should be legal, now to yes, it should be legal. This is opening a huge market of possible investments, whether it's into the actual plant itself or ancillary businesses, and we're seeing a huge shift in just kind of who is going to be moving forward. Recently, the DEA requested the FDA to look at rescheduling the drug, so moving it away from a Schedule 1, which would then open up a lot more opportunities for the industry, as well as 2 key pieces of legislation that have been passed through the House, both around the banking as well as allowing the states to kind of set up and run their own programs.
So a quick snapshot here of what we offer as a company, and our goal is really to be able to offer a integrated B2B solution for these companies, take them from inception to the bank, cradle to bank, as we'll sometimes term it, and that often begins with an application in a merit-based market, but could also include working with a company that is currently operating in a regulated market, and supporting them both through our services division as well as our products division. So we're looking to provide a number of different touch points and ways in which we can support and interact with our clients. Just kind of continuing on what is often the initiation of this process, and that being the application. And really what we look for as we are working with clients in these markets. So the trend has been towards markets putting limited license programs in place and having these be merit-based applications. a number of criteria will be scored with the best and strongest candidates getting the opportunity to operate within the state. And the things that we're looking for is the strength of that management team, their capitalization, that they are members of the community or can pull together the appropriate community support. They've been able to get their location, and the final piece, and which is the piece that we really bring to the table, and that's what the states want to see, is the ability to execute here. In this picture, you'll see one of our clients. Now, he's actually submitting for 3 separate locations, but depending on how the state programs run, it can be quite an extensive process. And then on the opposite end of the scale, you'll see states strictly limit the amount of content that can be produced. So us as the consultant really need to work with the client to deliver the most effective merit-based application for what the state is looking for. And just to kind of further off on this in terms of what we see as the kind of critical pieces that the states are looking for, and these demonstrated experience was the last one that I kind of touched on there, that they have the ability to establish operations quickly. Right now, many of these states, especially with the benefits that they're seeing for childhood epilepsy, are looking to get emergency programs in place, and then they want to understand that you can operate these facilities without the risk of mitigation and diversion, and that you can produce product that meets the consumer safety and testing that they're looking to develop.
And just to continue to expand on what Corey has said, these are kind of the 5 pieces that we can bring to the table for what our clients are looking for and being able to build out a medical cannabis business in all these states. So Dr. Karen Munkasey, which you can see a quote on the side there, she is actually the first MD in the country to hold a majority license in the U.S. And she actually is still one of 9 businesses left in Massachusetts that is going through the licensing application.
And I'll correct that, there's 11.
11. So there's 11. So, again, coming back to really ACC being the market leaders in helping expand the business, both getting through the application but then on into operations as well.
So just a little bit in terms of our experience in doing this. I touched on our experience as being owners and operators. We've also successfully secured licenses for clients in these merit-based competitive markets. Trent just mentioned Dr. Karen Munkasey in Massachusetts. We've been successful in Connecticut as well, and have recently submitted in Nevada and Illinois. Have operated in all of the merit-based states since the states adopted to this method for selecting who are they going to allow to run these businesses in their markets. And again, the things that they're really looking for at this time that we touched on is that demonstrated experience, that ability to get operations established quickly. They're putting benchmarks for when they want product to reach the consumers, the ability to handle all of the mitigation and diversion risk, and also we're seeing the testing requirements become much more akin to what we see in other FDA regulated or traditional markets, so that producer can manufacture in a way that is going to meet consumer safety requirements.
So the final piece and really kind of the culmination of the process of ensuring that the patients of each state are able to receive the best pharmaceutical grade medicine that is required and can be produced here in the States. Our goal is really to be able to provide that knowledge transfer and tools to be successful in diverting the risk and ensuring the success not only for our clients but for the state as a whole, and then most importantly the patients of that state. And so what we really try to help them do is come to market with a speed solution that allows them to, once they get their license, be able to produce top grade medicine and really do what they promised within the application. We have fully developed a process to cultivate and both dispense medical cannabis to allow the patients to get there, as well as have the knowledge transfer and skill sets not come from Colorado or come from California, but really create and develop the local economy, whether that's in Illinois, whether that's in Nevada, whether that's in Connecticut, Massachusetts, here in Colorado, and so on and so forth, even up into Canada. So,
and one thing I would just add into this is that we want to remove what has been kind of a historical problem for these entities, and that's all of the knowledge lying within maybe one or two individuals within the organization. So our goal is to mitigate that risk as these companies transition from what is a cottage industry essentially here in Colorado to a much more institutional-sized industry with limited licenses. If Illinois in the 20s versus Denver has 1,500 cultivators. So the size and scale of these operations has grown exponentially, and therefore their needs have grown along with that, and we're looking to meet the needs of these operations to develop a protocol-based workflow that we can efficiently train local people to take these jobs and run successful operations for our clients.
So that first half of the piece, as Corey had alluded to, of being able to be a fully integrated business-to-business solution is on the services side. And so what we see is different phases within that process. However, there is a gap, and obviously once the consumer or client is ready to move into operations, there's a whole slew of products that are needed outside of the services to become up and running and be able to produce and distribute the medicine. And so the other half of our business, we are able to kind of bring to fruition the products aspect. And so what we've done is really create what's called a group purchasing organization to bring to market what we feel are the most innovative yet still producing products, whether that's from lights, soil, how the methodology is being executed, and then all the way down to gloves and toilet paper and so on and so forth. So what we're able to do is develop and bring to our clients a full end-to-end supply chain solution tailored specifically for the cannabis industry.
And I'll just add a couple comments to what Trent described there. So some of these products we're manufacturing in-house, and these are opportunities for where we saw that there was holes in the market in terms of the solutions that were being provided. Either they were not meeting the requirements that they needed, or they were ineffective solutions. Then we have a set of products that we determine are best in class. And when we're going through the application process, we're going very deep into the design build of these facilities, often to full architectural and engineering plans, and we're making decisions about what are the best in class products to create these next wave state-of-the-art facilities, and really looking to push the envelope here, adopt whatever we can from existing industries, be it agricultural or manufacturing, integrate them into our industry, and create an end product for our clients that is beyond what we're currently seeing existing in the marketplace. So this product here, the cultivation cube, again, overcame a number of issues that we saw happening within facilities. One, from just globally bad facility design, rooms that could not maintain environments, and that's where all of your pest outbreaks will occur. This product also has a number of additional benefits. One, it's easily scalable, so as we're entering these new markets, and the patient adoption rate is a bit of an unknown, and it's hard for clients to estimate how much should they build, how fast. This is a way for them to establish operations and scale up and down as the patient market dictates. We also really get a lean manufacturing benefit out of this product. So we're able to get a higher light density. On 1,000 square feet, it's going to equate to about $250,000 of increased revenue per year, and that's at a wholesale price of $2,500. So conservative, or on point for established markets, and that'll vary from market to market. You can also stack the cube, so vertical gain is another big goal of the industry from a cultivation perspective. And then, as I kind of indicated, the reduction in risks, not only from theft, but also pest and disease, by being able to strictly control the environments. We are very excited to begin working with Dixie Elixirs with this product, and made our first delivery and install there just recently, and we'll be continuing in that relationship, and is a strong product for many of these emerging markets. This product, the Sohum Living Soil, again, when we look at these things, we're looking at these entities from a macro level and determining how can we solve what are some of the biggest risk factors. So one of the things that you'll often see as being very problematic is nutrient mixes not being done properly, and having big stressors introduced into the crop. And a 10% shift in yield on 1,000 lights is a couple $100,000 a year in revenue. So the margin for error is very low. This product contains all of the nutrients that the plant needs within the soil. So it's considered a biodynamic growing or super soil, and has a number of benefits, not only that reduced operator error in that the plant is dictating what it needs for nutrients and how much. It's there's an increased savings over traditional nutrient regimens by about a factor of 1/3, and it's an organic-based product. So we're producing organic, pharmaceutical quality grade medicines at a reduced cost, and this becomes especially important as these new markets adopt more stringent testing requirements. And we know that a lot of the nutrient regimens and pesticides currently in use will not pass the type of consumer testing that is looking to be applied to our industry. And one verification of that recently, our client in Canada, Organigram, which is governed by Health Canada and has really one of the most developed and stringent testing programs. Running the Sohum Living Soil, they successfully passed testing and got their product to the patients in Canada, and were the first to do so with zero radiation. So some of the ways that other companies are treating their products is introducing radiation as well as other harmful contaminants.
The next kind of product that we've been able to bring to market and fill what was a gap that we saw exist both here in Colorado and will continue to be in every new market moving forward is the satchel. And what the satchel represents is an ASTM approved mechanism to allow a child-resistant packaging mechanism to have the patient leave the store and not have to worry about either a child or a pet getting into the package. And so what we saw as a gap in really not really too many products in the marketplace, we've been able to develop a design to meet the requirements of not only the market, but at a broader Poison Prevention Packaging Control Act that's been implemented both in the cannabis space, but as well as the pharmaceutical space as well. So we were able to develop this product and allow really branding, something that wasn't allowed or really done on any existing product. We've been able to bring that to market, and you can kind of see an example of that with a dispensary here locally in Denver, Colorado. And so the market in general here in Colorado has been very receptive to this child-resistant packaging, and we're now looking to continue to expand it and be able to provide the solution to every new market, as well as international markets as well across the world.
And I just would highlight what I think is really a key point that Trent hit on in the end, and that is the branding that we are now able to do with this product. So we took what was essentially a requirement for these retailers to comply with, and turned it into a benefit for them. Now they're able to comply with the regulatory side, but they're also furthering and increasing their marketing presence, their branding. They have the competitive product to this was a plastic-based product, not very appealing for a consumer, and this has really transitioned this requirement for retailers into a benefit, and as Trent alluded to, the reception has been fantastic. So just a little bit about kind of the team and how we approach things here, and I think this is very critical, and it's one of the things that often separates us from our competitors and just what makes another consulting company. And first and foremost, it's that the core team members have both industry experience, but also professional backgrounds and experience in other verticals and other areas. As we develop the company, so as you can see here on this first slide, myself and my founding partner, Ellis Smith, and I've come out of a corporate advertising and marketing background. Ellis, horticultural, and also ski and film production, but really through the horticultural experience was able to develop and refine what was common in Europe, this biodynamic style of growing, and bring it here into the U.S. market, so that we transition away from what is considered cash cropping towards having the patient-centric approach, the consumer in mind, and producing pharmaceutical-grade medicines. as we kind of evolved through the company, we needed the human capital component really became critical, and we needed to round out the team, and it was really with people with backgrounds in other key critical areas. So Trent, who's here with me today, a healthcare and supply chain management background, and I think obviously as he's touched on a number of the products, the value of that comes through. Another person highlighted here is Anthony Baroud, who brings 35 years of construction and engineering. He holds a number of patents personally, and as we've developed into creating these next generation of facilities, the complexity and the engineering required for them has grown, and so we're really looking to have all of these components in place for the client so that wherever their pain point is, that we have a level of expertise that we can bring to bear for that client. And just a recap on kind of the entire presentation here. As I mentioned, we're seeing two things happen, both states opting to take legislative action and looking to really control how these programs are rolled out in their state. And then we do continue to see ballot initiatives, and those are picking up in the recreational side of things. Trent indicated that the DEA has requested the FDA to examine a reclassification. So not only does that make it a friendlier market, easier for banking to be involved, but it also really opens the door for research, which will brings us to our next point there, and that's biotechnology. And we foresee, and we're seeing it already, a diversion between the medical cannabis and the recreational cannabis markets, and that medical cannabis really going down the pathway of biotechnology, where isolating compounds and reconstituting them and creating targeted medicines is the direction that these companies will be going in. And then on the recreational side, the states becoming more comfortable with this, seeing what's happened in Colorado and Washington, seeing the positive impacts and not significant negative impacts, that their comfort level is going to come up, and we think the citizens within those states, their opinion is shifting, and those will get pushed up. For us, what this means is, really the opportunity for both the services we provide, but then the products we provide is continuing to grow in line with that national action, and then really international. So we're already working in Canada, and then have our eyes on and transitioning to some of these developing markets, both in the Caribbean and South America, as well as Europe. Hot tourism, in line with the recreational viewpoint, and as I touched on, you're seeing some corollary benefits in terms of a record winter tourism season here, and obviously the sales numbers from the recreational program here in Colorado, sales tax numbers, and then we're starting to see really concepts and entities looking to target this vertical directly.
So to wrap everything up, why invest in American Cannabis Company? So you are able to invest in what is a rapidly expanding market. And so what we've seen happen from 2013 to 2014 is very expansive growth. And then where we think it will be into 2015 and 2016, continuing to run up, almost doubling on an annual basis to where it should be an estimated $6 billion-dollar industry as a whole. So, you know, as we kind of alluded to earlier and throughout the presentation, BIMI or American Cannabis Company is really the ability to invest in the space without having to touch the plant. We're not limited to state-by-state restriction. We are involved in all aspects of the industry without having to compromise any regulatory laws, both at a state level and at a federal level. We have an existing pipeline, so contracts, as I alluded to, in many of the states that have programs and operations in place, as well as being able to capitalize on the market once it transitions into full operations from the product side, as well as being able to really recognize that reoccurring revenue that is going to be happening with businesses all over the country and up in worldwide. And what we've been able to establish so far with a lot of our preferred partners, Dixie being one of them, Organigram being one of them, are really mature businesses in the marketplace that will continue to grow both here in Colorado, up in Canada, and then when the time is right, expand nationally. So we've been able to partner with who we feel is best in class in their respective areas. So again, reoccurring revenue models, being able to recognize fees from a revenue perspective for a business, you know, through the application phase and then also after the application phase and into ongoing production. We've been able to build out a solution for each kind of state to recognize, you know, each market's individual requirements, and then we're able to also just sell other proprietary products and equipment into our clients to continue to ramp up the revenue as we progress and mature as an industry as a whole.
And I would just add to kind of what Trent summarized there is, you know, one of the things that really separates us. We see a lot of consulting companies and a lot of interest in the space, and companies are popping up constantly. And somebody asked me, you know, what separates you guys from all of these other companies? And it's really the track record, and you know, our track record as being successful in these merit-based applications to producing or creating products that are filling needs in the market, from the satchel to the cultivation cube, you know, as really affirmed through Dixie's interest in that product, through our soil, you know, and being really affirmed through it passing Health Canada testing. So, you know, we are looking to separate ourselves not only in the level of professionalism and the service we provide, but in the successes we bring to this market as it grows here, you know, from today forward.
And so what we have here is contact information for anybody that has questions either around the market as a whole or specifically around investing in the companies. What I would like to do now is turn it back over to Derwin and allow for some Q&A.
Thanks. So give me about 30 seconds to queue up the questions. The first question is, can cannabis grown in one state be exported to another?
So here in the United States, cannabis is not allowed to be crossed through state lines. However, recently in Utah, they have allowed 11 families to be able to drive across to pick up medicine for their ill children. However, that is just one example that we've seen happened over the past couple months. Internationally in Canada, you are able to import and export products up there. So again, it is very different between the U.S. and Canada. Again, Canada is federally legal, so they are able to disperse products throughout the whole country as well as into international markets that have legislation in place.
And one of the things that is occurring here that might be causing some market confusion is that refined CBD oils are being imported from China and other countries that are produced from hemp and being sold as medicines, on a national basis. Unfortunately, the efficacy of those, is a big question. And people who are seeking treatments, for sick individuals may not be getting the product that they ultimately are seeking.
Okay, next question. What lighting does the cultivation cube use?
What lighting?
Yes.
So that is an option. So we can put LED. Currently it uses E Papillon is the brand of the fixture. It's a 1,000-watt bulb. Depending on what the client is interested in, we can design different photometric plans. We can utilize 600-watt light photometric plans, LED photometric plans. So there's kind of where our best-in-class recommendation may be, and then we're flexible in terms of client-specific requirements or desires.
And I think it's important for everybody to know and understand both from an investor perspective and client perspective is we at ACC are solution agnostic. So we want to develop and be able to partner with our clients in any and every market. We make recommendations. We have a feel and understanding that we are able to provide what is best in class and is produced on the scale that we expect. However, if there's something else out there that they want or they need specific to them, we are able to provide them that service and or that product.
So, and I think LEDs would be a great example if somebody really feels, strongly about the environmental impact, they may be wanting to utilize that technology.
Okay, next question is, what is the cost of a cube and what is its output? What is the cost of a cube? You got the
Yep. So the cost of the cube, it really depends around what how many and how big of a scale is. We are asking retail price is $45,000. What we have included in there is HVAC, the lights, a closed loop system around air conditioning and so on and so forth.
Fire suppression.
Fire suppression, safety code lights. Again, we have a video online. It's on our website. It's also posted in this presentation. So if you're wanting more information, you can also email us around kind of what is a fully component piece of the cube.
And I would just kind of address that, and Trent hit most on the critical items on some level because there's a lot of variability in the client if they have a cultivator that grows in a specific methodology. We have the ability to provide them with a more complete product that would include all of the irrigation system, our soil if they wanted to operate the soil, and we'll structure these into modules so that the vegetative container and the flowering container are all one loop system, creating a very efficient workflow. We've taken it to the point where we want to leave ourselves the option for that client to select based on what their end goals are, and then just if you do the cost benefit over stick builds and traditional building, you're quickly going to recoup that if they're pretty close, but any additional upfront cost, a single extra harvest or the increased light density, either one of those on their own would overcome that, and combined will significantly overcome the additional cost over a stick build. One other major benefit that many people like is the ability for these units to be moved. So you may end up in a landlord situation where they have a bank loan and they need to move buildings, or for whatever reason they're looking to relocate. If they haven't invested $2 million of tenant improvements into that building, they have much more flexibility to take their operations and reestablish them at another facility. So that flexibility is another big benefit for people as they operate in this space.
Next question. Does Sohum living soil require a specific fertilization program? Also, how many cultivation cycles can a Sohum batch be used for?
So the Sohum living soil is a 16-week soil, and it's what we would call a charged soil. So it has all of the nutrient requirements for the plant within that soil. Even then, we recognize that some people will want to drive the cannabis plant even harder in terms of what we term as maximum genetic potential. So we have means within the workflow that are very simple in terms of compost teas and top dressing. If people are looking to either one, just really optimize, or if there is a corrective action that is required. But for the majority of users, it's a just add water soil. You don't need to do anything else. We do recommend that it's reverse osmosis water because we have a living micro-life in that soil, and that's really what is breaking down the nutrients and creating all that benefit. That soil can be recycled. However, when you recycle, you need to rebuild the substrate. That's just the amount of aeration within the soil, and reintroduce fertilizers that were uptaken by the plant during the cultivation cycle. And we have products, and methods for doing that recycling and rebuilding of the soil for clients that are interested in implementing those programs. And that creates a massive potential cost savings for operators as they continue in this industry.
Next question. Is your company profitable at this time? If not, when do you expect to be profitable?
So we will be disclosing our financials coming very shortly. We had made the decision going through just our filings with the SEC to not disclose that at this time. However, it will be discussed in length in the very near term. If they want if an investor wants to gain more information around the difference between the operating entity that was Brazil Interactive Media and American Cannabis Company, they are more than welcome to review our 14C, which has it broken out by each operating division.
Last question. What type of investments are you looking for? Through simple stock purchase, or are you just looking for clients? So
we are looking for both. We are, as we've alluded to throughout, this presentation, we feel like we are in a great position, both here here domestically as well as internationally, from being able to assist individual entrepreneurs or businesses looking to break into the space. However, as we've become more and more mature in the public market arena, we are absolutely looking for individual retailer investors and or institutional investors moving forward. I will say at this time, with the help of the injection from Duchess, who's been a great partner of ours, working through the public side and getting that up and running, we are very well positioned from a capital perspective to invest in the growth needed for our business, as well as really leveraging organic growth that we've recognized just through the natural progression of our business and the success of our clients in every market. So we're in a very good position from that aspect.
Thank you. That concludes our Q&A session. For any questions that we did not get a chance to answer, I will submit those questions to Corey and Trent, and they will answer those questions, and we will either post those questions and answers on our website, or we will email to you. If you email me with the request, dawallace@cannawebcast.com. Corey and Trent, do you have any closing comments?
Just thank you very much, everybody, for joining us today, and we look forward to continuing to interact here as we progress in our company moving forward.
Thank you, Corey and Trent. Our next presentation will be at 2 o'clock. Go public today. Thank you.
Thank you.
Hello?
Yes, Bruce, we'll start at 2 o'clock on the dot.
Okay. I am ready.
Thank you for attending the Cannabis Investor Webcast, where cannabis companies increase their liquidity, awareness, and exposure to individual and institutional investors, cannabis entrepreneurs, media, and consumers. We would like to thank our sponsors, American Green Incorporated, and Indo Expo Trade Show, which will be held in Denver, Colorado, November 15th through the 16th. The website address is www.indoexpo.com. Again, www.indoexpo.com. Our speaker today is Bruce Methvin, attorney for law offices of Methvin Associates, doing business as Go Public today. I will now turn the call over to you, Bruce.
Thank you very much. So, as indicated, I am Bruce Methvin, and I'm a securities attorney, have been for many, many years. We handle all kinds of offerings for companies that are seeking to raise money. And what we do is help them choose what type of offering is best for them and handle all of the legal work on it and make sure that everybody is in compliance and so that there aren't any securities problems involved. And today I'm going to be talking specifically about going public with a direct public offering. And this is a particular type of offering. It has a lot of advantages for companies that I'll get into in just a minute. Let me see if I can get my screen to take over here.
Yeah, Bruce,
well,
go down
I'm
to the
hoping
bottom.
everybody can see this.
Well, go down to the bottom, and bottom right, you see where it says 100%. On the left of that is a sort of like an hourglass. Yeah, and it should go to, yeah, that one right there. Press it, and it should go into presentation mode.
Okay, hang on just one second. Ah, there we are. Okay. So, first question, of course, is what is a direct public offering? By the way, these are also called DPOs for short, so you'll hear that expression a lot. It's a way to raise money with full public advertising, and that's a big point because a lot of securities offerings don't allow public advertising, although these days we now do have the 506C offering that allows full public advertising, but it's limited to accredited investors only. And that gets us to our second point, which is that a DPO allows all types of investors to invest. Many times with securities offerings there are restrictions or qualifications for investors. Only certain types of investors, generally those who can meet certain financial requirements, are allowed to invest. But one of the advantages of a DPO is that all types of investors can invest. Also, assuming the process is carried through all the way, a DPO will create a market to buy and sell the stock. And obviously this is a big deal because potential investors like the idea, of course, of having a market where they can sell their stock, and also people who are already invested in the company, the founders, early investors, have a way to sell their stock as well. That takes care of a primary problem with a lot of companies, which is that even if you are able to sell your stock, if you've met the Rule 144 requirements, which have holding periods and things like that, there's no market. You've got to find your own buyers, basically. And one thing a DPO does is allow you to have a market to buy and sell the stock. And then again, last point I've already touched on, this even includes the people who've had prior stock that was issued prior to the DPO offering. So you're probably wondering, well, okay, how does this differ from an IPO or initial placement offering? By the way, I mean, you hear about IPOs all the time. What many people don't realize is that there is this DPO process as well. The IPOs are the ones that get all the press attention. You know, they're all the ones you hear about with the big companies that do their initial public offering and raise millions or billions of dollars, depending on it. But it's not, frankly, a good method for most companies because you've got to be at a certain size and have a certain financial aspect before you really can pull this off. One of the problems with an IPO is that when you put your application into the Securities and Exchange Commission, you've got to set what the minimum amount of the offering is going to be. And if the IPO doesn't succeed in raising that amount of money, then the offering fails and the company receives no money from the offering at all. And in fact, it has spent a lot of money going through the IPO process. Again, you tend to hear about the ones with the famous companies that do the IPOs, which, you know, are always successful. You don't hear about all of the IPOs, which actually is probably the vast majority of them, that are not successful. Another issue with an IPO is that the company's got to be large and strong enough economically to qualify for the NASDAQ or another stock exchange. And that's really difficult these days for companies to do because NASDAQ, which used to be relatively easy to qualify for, has gotten tough. It keeps raising its requirements over time. And in fact, ironically, NASDAQ, which is a publicly traded company, if it were to go out today as it did originally, it could not qualify for its own, meet the requirements for listing on NASDAQ currently. And then the IPO process takes longer than a DPO process, and it costs substantially more than the DPO process also. I mean, it can take 2 years and perhaps $250,000 to do an IPO. So how does stock that's generated or approved by a DPO offering trade? Well, instead of trading on an exchange, it trades on the over-the-counter bulletin board. And you can go to what is these days the predominant over-the-counter market or bulletin board. That's the www.otcmarkets.com. And see the companies that are trading this way. They have different tiers of companies depending on how much public information is available about the company. But you can actually go and see what the latest trading prices are for companies and information about them there. So one of the things that happens with a DPO is it trades as a fully reporting company, which is at the highest level of otcmarkets.com. And it does that because when you do a DPO, a reporting company and are required to file quarterly reports with the SEC. This is a good thing, by the way, because it makes it attractive to investors. The stock actually itself trades through stockbrokers with accounts that the owners or potential buyers of the stock set up. And there are brokers who specialize in the over-the-counter market. So let me review the steps that go through the process of doing a DPO offering so you have some idea of what's involved. And this page is really the overview, but I'll go through each of these a little bit in detail as I go through here. So one of the things that's required to be able to get a trading symbol for the company is that you have to have at least 35 shareholders. Many companies that are startups or relatively new don't have 35 shareholders. So often what's done is first is to conduct a Rule 506B offering. This is a private offering, and the idea is to get the number of shareholders that are required to get the trading symbol. And some companies also use this as an opportunity to raise some money during the process. That really depends on the company that's involved. On the other hand, you know, frankly, if your goal is really just to get the 35 plus investors, you know, you may do something like have this offering and allow people to buy in for, you name it, $1,000 a share just so you can get the requisite number of shareholders. After this is done, or even during the Rule 506 offering, one thing that has the financials of the company audited, because that's required for a DPO. After that, your attorney prepares and what they call an S1 application and files that with the SEC and perhaps deals with some comments and makes some changes as requested by the SEC. After the SEC approves, you go to FINRA, which is the organization that oversees stockbrokers, and they get this role as well, and you get a trading symbol for the company from FINRA. And then the next step is to get what they call DTC approval. This is the electronic trading system that the securities brokers use, and that's part of the process also, because otherwise you don't get brokers to trade your stock. Then you get listed on OTCmarkets.com, and then finally you start your investor relations campaign or IR campaign. Again, you'll hear that frequently referred to as IR. Okay, so let's talk about conducting the initial 506B offering. And again, the main reason is that FINRA requires that a company have at least 35 investors before it's going to be able to trade on the over-the-counter markets. And it can be used to raise some interim money also. And, you know, you can actually keep the minimum small so you can get a large number of investors, but still raise a significant amount of money this way too, depending on how you structure this. So you can have maybe the minimum investment be $1,000 each, but you can allow people to buy up to, you name it, you know, 50,000 or whatever on your offering. A 506 offering is kind of your classic, basic federal offering nationwide. It does mean that you can have investors from any state. Actually, you can have investors from all over the world. It's a private offering, meaning that there can't be any advertising. The one requirement is the investors have to be either accredited or sophisticated. And I won't spend much time on that. Accredited investors are usually those with $1 million in net worth, not counting their principal residence, or $200,000 a year in income. Sophisticated, the investor doesn't have to meet those financial requirements, but they've got to be wise, I guess, if you will, in the way of looking at investments and deciding whether or not to invest. But they can either be sophisticated personally or with the help of an investment advisor. So oftentimes you can get people in as sophisticated investors even though you may not feel that they are personally sophisticated if they have an independent investment advisor advising them. Generally, this type of offering has got to be through contacts that the officers, directors, employees, and consultants of the company have with people, because a prior relationship of some sort with somebody in the company is generally needed. Okay. The auditing books phase, and this, by the way, can even start during the 506 offering. This is a special type of audit we're talking about here. Most accounting firms cannot do this type of audit because they have to be specially licensed by the Public Company Accounting Oversight Board. And there definitely are accounting firms that are licensed this way, but it's got to be one of these, and they are the ones who prepare the audited financials for the company. Obviously, the better shape your financials are in, the easier this process is. And some accountants will do this for a very reasonable fee because they hope to become the accountants then for the quarterly SEC reports that I mentioned earlier that are required. By the way, I mean, if you were to if you were to go to one of the large accounting firms and ask them for a quote on a PCAOB audit, you would probably fall out of your chair in shock at the cost. But again, there are accountants out there who have this licensing that will do this for a reasonable fee. The audit itself can take between 2 to 3 weeks or 2 to 3 months, and again, this really depends on what sort of shape your financials are in. So obviously, as part of the process, you're working to this. Generally, what you want to do is have your own accountant try to whip the books into as good a shape as possible before the PCAOB accounting firm takes over. Okay, the next step in the process, which is a really major one, is filing the S-1 application with the SEC. And this is something that the attorney drafts. There is basically a part that becomes the offering circular for the public ultimately, and there's also a part that only the SEC sees, and there are a ton of exhibits. One of the things that nice things that happens, though, assuming you're using the earlier Rule 506 offering I mentioned to get enough shareholders, a lot of that information is going to be plugged into the S1 application. Once it's finished, the attorney files the S1 with the SEC. The SEC often has some comments, questions, or maybe they want some tweaks to it. So that gets done, and then at some point the SEC approves it. Again, the process involving the SEC, once the packet is submitted to them, usually takes between 60 and 120 days, depending on how complicated things are. The next step is getting the FINRA trading symbol, because you can't trade your stock on the over-the-counter market without a trading symbol. There is a Form 211 that FINRA, again, this is the organization that regulates stockbrokers, has. This gets completed. A licensed securities broker who is willing to do this type of work files the form with FINRA. Not all, by the way, securities brokers will do this. It's kind of a specialized area, and you've got to have a securities broker who's willing to do this sort of thing. For example, I mean, your major stock brokerage firms, I can't imagine would agree to do the filing of Form 211 with FINRA. So FINRA, a Financial Industry Regulatory Authority, reviews the form and grants a trading symbol for the company. That approval takes about 1 to 2 months generally. The next step is to get approval for the electronic broker trading system. This is from the Depository Trust Company. You'd think they'd have a nicer name, but hey, what can you do? They essentially act as the clearinghouse that settles the securities trades between the brokers. That's their role. And so if you want to get approval to use the electronic trading system that the brokers all use these days, you have to get the DTC's approval. Again, the attorney and the same stockbroker apply for the DTC approval. And this generally takes about 30 days. Then you go to otcmarkets.com after all of this has been done and apply there to get listed. This is actually a fairly simple part at this point because you've already done all the main stuff. So the attorney prepares the application usually to allow the stock to trade there. Once the listing is approved, then trading can begin. And here's where you get into your investor relations phase. And I really cannot emphasize how important this is too much because, you know, it's one thing to go through all these steps and get listed on the over-the-counter market, but if you don't have the support in getting word out about your company and what it does and the offering, the stock, frankly, just isn't going to do anything on the over-the-counter market. So you have an IR team or company that gets involved with this, and among other things, what they do is they set up a group of licensed stockbrokers who are willing to sell the stock. Now, this varies from company to company because, you know, stockbrokers have things they tend to specialize in or feel comfortable with. And, you know, what the IR team does is essentially take information about the company, go to the stockbroker, say, here's the company, here's the offering, are you interested in participating in this? And then the ones who are essentially become the group involved in the selling of it. The IR team also spreads information to investor groups, raising capital conferences, industry trade shows, licensed security brokers, and often will make personal appearances at some of these things and may even, depending on the circumstances, do something like a road show where they go from city to city and have in-person meetings with a number of people, again with the idea of spreading the word about the company and what it's doing. And throughout this phase, one thing that's very crucial is ongoing press releases and information that are released by the company and then are given to the IR team to spread the word about. So just to wrap up a bit, some other DPO advantages. So one of the things that happens is that the company can frequently give service providers stock instead of cash. So for example, my firm frequently will take a large chunk of its money, and the IR firm that we work with will also take a large chunk of its money, its compensation, in the form of stock. There is some cash to cover expenses and some basic work, but again, the cost can be kept down quite significantly by providing stock for a lot of that instead of cash. If you have or are planning on having joint venture partners, they also can be given stock or stock options. That can be a very powerful motivator if there's somebody that you really want to do a joint venture with. And kind of the last point on this, it's not just the stock that gets issued through the DPO offering that can be traded. You can structure the S1 application, and we always do, so that stock from the prior company offerings, the stock that the founders and the early investors already have, can be made through free trading through this process, so it also can be sold on the over-the-counter market. You know, normally if you've got a prior stock offering, depending on the type of offering you've done, there are generally Rule 144 restrictions that do two things. They set a minimum holding period, basically a year. Well, I'm giving you the summarized version here. And with respect to officers, directors, and people who own 10% or more of the stock in the company, it also imposes some pretty restrictive requirements on how much stock can be sold. Basically, you know, each officer or director or 10% plus shareholder can only sell 1% of the equivalent of 1% of the outstanding stock of the company in any 3-month period, which is pretty restrictive. And again, one of the advantages of a DPO is that it relieves everyone from those kinds of restrictions. So that is kind of the quick overview of the DPO process, and I have saved the rest of the time for questions.
Thank you, Bruce. Give me about 30 seconds, and I'll look at the question queue. First question, Bruce. How long is the DPO process?
Well, the whole thing from start to finish is probably going to run about 6 months.
6 months.
Now, again, you can use, if you're doing the Rule 506 offering at the beginning to get the requisite number of shareholders, and if money's an issue, you may well be able to raise some money at that stage along the way.
Okay. Next question is, they don't want an exact number, but they want a range of the cost of a DPO and the cost of a PCADB audit. Just a range. I guess from a low end to a high end range.
Yeah. Okay. So we got to divide this out into a couple parts here. You know, if you were going to have an attorney and an IR firm just do this for straight cash, you know, you'd probably be somewhere in the $60,000 area, depending. Again, this depends on the company, but generally my firm will work out a deal where we may get $5,000 when we get the Rule 506 offering completed, another $5,000 when we get the S1 offering completed and submitted, and then our IR partner will take about $10,000 for expenses, but we'll take the rest in stock to keep our costs down. The PCAOB auditor, again, this is going to depend in part on how good a shape the books of the company are in when it gets presented to them. But generally, this can be done for in the range of about $10,000.
Okay. All right. The next question is the investor relations campaign, and you did express how important that is. What is the background of the IR firm that you guys deal with?
Well, this obviously varies from, IR firm to IR firm. The guy I'm dealing with has been in the securities industry for something like 40 years at this point. He started as a stock broker. He then, with a partner, bought a stock brokerage firm, which he ran for many years, doing DPOs in the United States and similar offerings in Germany and in Asia. He retired at one point, and I got to tell you, I've seen this so many times with entrepreneurs. Entrepreneurs who, do well, make a lot of money, decide they're going to retire, and they seem to last about 2 to 3 years in retirement. And they go fishing and they climb mountains, and right around at the end of 2 or 3 years, they go, this just isn't as fun as what I was doing before, and they go back to being an entrepreneur again. And that's what happened with this guy. And so he is back in the business once again, and he certainly has a wealth of experience in this area.
Okay. How many DPOs have you completed in the past?
A number of them, and we've got, there are several that I've worked on with this guy in particular. We've got one company currently that is trading on the over-the-counter market, and we've got several others that are in line to get started with that we are working on currently.
Okay, next question. I was recently been given an offer which included an IPO. The budget for that was $220,000. Is that a reasonable estimate? What is total cost of DPO process that includes stock and cash? I guess you kind of answered some of that before.
Yeah, the IPO process, that sounds about right. I usually say it runs about $250,000, but $220, obviously in the ballpark. Again, I've gone over the financial part of this already. We do take some stock involved in the company. That really depends on the company's position. It's calculated based on the number of shares that the IR people want to have out there and available at the end of the DPO offering. So, it varies a bit. I'm a little hesitant to throw out a figure because it really does depend so much on the company, but, several percentages of the stock anyway.
Okay. Next question, Bruce. Would you say the DPO process is the best process for emerging cannabis companies?
Well, okay, so there are many different ways to raise money. There's many different types of offerings, and it really depends in large part what your goals are and what you think is going to be successful for you. We actually spend a lot of time with our clients talking with them and helping them determine what the best type of offering is for them. The advantages of a DPO are the fact that you create a public market for the stock, which is usually not something that a company has. That tends to attract investors who like the idea of liquidity in the stock. It also tends to make, the founders and the previous investors happy because gives them a way that they can sell their stock if they want to do that. Also, frankly, if things are successful, you can raise a heck of a lot of money through this type of offering on the over-the-counter market. It really provides a lot of bang for the buck if things work out. Now, there are never any guarantees, but I think that one of the advantages of doing this type of offering is that, let's say that the offering, doesn't do well for whatever reason, and you decide that this just isn't working out. At the very least, what this method does is it leaves you with a shell company that you can sell. And a shell company is one that has gone through this process and has cleared all of these hurdles and is therefore able to trade on the over-the-counter market. You can go out and buy a shell company, although it's expensive. But on the other end of this, if in the worst situation, if things really don't work out, you've at least got a shell company to sell that would way more cover the amount of money that you spent going through this process. And that's certainly not something you can do, for example, with an IPO. Darwin?
Oh, I'm sorry, Bruce. Next question. If the attorney takes stock, won't they get fined or barred for charging too much money if the stock goes higher?
I'm sorry, could you say that one more time?
If the attorney takes stock, won't they get fined or barred for charging too much money if the stock goes higher?
So the question is, I think, if the stock goes higher, does the attorney get fined or barred from practice by doing this?
Yeah, if the attorney takes stock instead of cash, right, or takes some stock versus cash, won't the attorney get fined or barred for charging too much money if the stock goes higher?
No, I don't believe that at all. And the reason is, I mean, the attorney who takes a stock for doing this sort of work is also taking a risk. There are no guarantees, and, it's possible that the stock might not do well. The attorney certainly has a risk that the attorney will not be able to sell the stock for as much as if the attorney had billed on some other basis, like an hourly basis or a flat fee basis. So there definitely is some risk involved there. So no, I guess the short answer is no, I don't see that there is a problem in doing that.
Next question is regarding a shell company. I guess there's several questions. Cost of a shell company, the range, and how do you know if it's clean? And could you explain to our listeners what a clean shell is?
Sure. Let me start with the clean shell first. I mean, when you buy a shell company, if this company, well, presumably it's been in operation previously, and so one of the things you worry about is, well, might there be lawsuits against this company at some point in the future based on past actions? Might there be contract liabilities involving this company? And so if you are in the process of trying to buy a shell company, yeah, you want to do a fair amount of due diligence on that company and try as best you can to make sure that that nothing is going to come back and bite you later on down the line. Because there's certainly been cases where someone has bought a shell company and then later there have been lawsuits over what that shell company had done earlier that sink it, basically. So yeah, and this is kind of an ongoing issue, and I guess what I would say is, you know, there's never 100% guarantee if you are buying a shell company. All you can do is do your due diligence, try to make sure as best you can that there aren't any problems lurking there before you buy it. You certainly would never want to buy a shell company without doing that kind of research on it first. The cost of the shell companies, you know, ranges quite a bit. This market is, it fluctuates a fair amount. Lately, I've been hearing maybe $300,000 to $500,000 for a shell company, depending. And of course, the cleaner ones are going to be the more expensive ones. But that may give you some idea of the range.
Okay. What is the advantages of a DPO versus a shell? And we do know, just from what you said, a shell is a little more expensive to acquire a shell than a DPO. But what are some of the advantages and disadvantages of a DPO versus buying a shell?
Well, the big advantage of buying a shell, of course, is that you basically can start trading quickly. You know, it's a company that already has trading rights, and I remember before I said the whole DPO process takes roughly 6 months. If you get a shell company, you can be out there far, far, far faster. The downsides are twofold. One is that, you know, it costs money, so you've got to have a fair amount of cash to be able to look for DPOs, do due diligence, and buy a DPO. And the other is the liability issue, you know, the cleanliness issue, if you will. Again, with a shell company, you don't ever have a 100% guarantee. If you're doing your own DPO, you know the history of your company. And presumably, if there's any skeletons out there, you know about those and can factor those in. So I guess the two reasons for why a DPO might be better than buying a shell company is you don't have to spend a lot of money up front, and you know what you're getting at the end of the process.
Okay, Bruce, I think that concludes our Q&A. Do you have any closing comments?
No, that's about it. My email address is up there. You know, certainly if any of the participants want to contact me and email me questions about this, I'm happy to respond.
Well, thank you, Bruce. And if any of our audience listeners would like any more information about DPOs, please contact Bruce. Our next presentation will start at 3 o'clock, and that presentation will be American Green Incorporated, who is a platinum sponsor for this event. Thank you, Bruce, and we'll see the audience at 3 o'clock.
You're very welcome, Derwin.
Thank you.
Thank you, Derwin. And just some quick housekeeping is, this is still in the middle of the screen, isn't it? Let's see if I can get rid of it without getting rid of the whole deal here. There we go. So thank you very much, Derwin, and welcome to everybody who's listening in live. Welcome to the folks who couldn't make it live but will be listening to the recording later. A big thanks to Cannabis Investor Webcast, and especially Derwin Wallace for putting this together. A lot of technology going on with this, and that's not always easy to handle. So assembling a group of presentations from individuals and companies, enabling all of us to discover new opportunities, people to work with, and to understand the market that much more, I think is a very important opportunity. So thanks again for making that happen. So I'm just going to jump right in. I'm sure there will be a few questions at the end. So to that end, I'd like to get through this and reiterate some of what we've talked about in recent press releases, and what anybody who's been watching over the last few months has probably observed the direction that we are going, or trying to make our way into. So let me just make sure that here we go. Alrighty, let me get to the front page here, and you're almost guaranteed to have this kind of. Okay, excellent. So I'm going to start with a little history or a concept of where we are, and that's that we believe this market is still brand new. Obviously, cannabis has been illegal in this country for a much shorter time than it's been legal. It's a very old marketplace. But in terms of what we have going on now in this commercial market, it's still quite new. So developing trend lines and methodologies, strategies, and tactics, we can't rely on what somebody did 5 years ago or 10 years ago with regards to this. And as a reminder, it is still a Schedule I narcotic at the federal level. The point of this is that obviously in an unfettered marketplace, in a truly open market, it'll spur on growth. So I don't think I need to explain that to anybody. But right now we have a lot of companies who, including our own, who look at both the opportunities with the picks and shovels, which go nationwide, and then things that are more localized, state by state, out of necessity. So, within the marketplace, almost everything that we do and touch requires production of the root product, being cannabis itself. And it's a 3-month minimum cycle to test new strains and techniques. So obviously you can stagger your grows, have things coming out regularly. But if you are looking to improve specific techniques, then it can take 3, 6, 9 months, a year as you work to perfect that. So as we add new opportunities to our company, we don't expect to see sudden growth in that necessarily. We expect to get it right and then come out with what we plan to enter into. And all this adds up to exciting challenges and extraordinary opportunities. There are constant daily challenges of considering the necessary regulatory aspects of it, of considering how to spread out, whether to go very locally, whether to look nationally, or a combination therein, which is what we believe is the best means of accomplishing this. Again, back to the first point of being a very new marketplace. What happened with automobiles? It grew very slowly. What happened with any new market that came out? Even the internet, it took several years to grow into something mature enough that you could launch something new on a dime. However, the internet has sped things up. So we believe that it will increase the speed of this market developing, but nevertheless, it requires a period of time to ensure that you're cautiously going down the appropriate road. And we've got over 50,000 investors and growing. So apparently there's a few people out there who believe in what we collectively as a market segment are doing, and we specifically as American Green. And we appreciate all that support. This summer has been one of really organizing and growing what we believe to be the best means for our organization to go forth with. And that means taking from some of those mature markets the methodologies and strategies that have made them successful and implementing them here. So our team has grown dramatically, and our organization has really been steadied over these last few months. And those of you who I know there are a few of you on this right now who I've communicated rather regularly with, and you've probably seen less of me over the last few months, and that's why we are literally working from bell to buzzer daily to ensure that as this exciting market grows, we're prepared to handle that. We've got, we believe, multiple segments which include cultivation, extraction and manufacturing, retail, which is this consumer-facing slide, and finally brand awareness and general education. And on the consumer-facing side, we've made a very specific choice not to become too involved in what I would call a retail marketplace, mainly because we're not a retail company. Those people who manage that very well, I have the utmost respect for, having worked in that for a period of time, tracking, calculating what's coming down the road, preparing for that. The retail marketplace is very challenging. And those who do it right do great, and many other people have failed along those lines. And it's not our wheelhouse. So to that end, we've looked to facilitate the consumer-facing market with Zaz, and we've looked to enter into the consumer-facing market in one section only at this point, and that would be the CBD marketplace. So first to Zaz. Everybody's familiar with our initial machine, the Mach 1. It was the first to market with the consumer-facing automation, including the age-verified vending to complement and expand existing dispensary business. And the last 4 months of studying how that's worked and implementing additional technologies in there to ensure that our initial product could enable us to grow into future iterations has absolutely been invaluable, and we couldn't trade that for anything. With that said, we are within weeks of bringing to market the Mach 2, which has got those implementations as discussed. Centralized business intelligence connecting our machine network, enabling easy integration with premium services like Cannabis, MJ Freeway, and BioTrack THC. And we're partnered with several major players in the vending industry on the production side. More importantly, we've produced a software platform that allows anybody who'd like to come and work with us and interface through our API. So it's not a rigid machine-by-machine model, but rather a network, as we've always planned on making, and we'll continue to move forward with that. It's something that is easily plug and play with new technologies, because we don't believe that we've solved all the issues out there, nor that we will be the company to do that, but rather create an interface allowing those who do to bring it and work with us. And concomitant to Mach 2 development, we're working on the future, which will enable the preferred customer medicine pre-order for easy pickup or delivery as just one of the aspects of what that will enable. Enhanced inventory control, enhancements on every level of what it does, including a better-than-human age verification process. So Zaz is not static, it's not going away, and we're very excited about where it is going. The CBD market, however, we believe the aspect of either the wholesale or retail business holds a great deal of opportunity. And I know some of our previous presenters pointed out the fact that, presenters today that is, pointed out the fact that there is a growing division, not in a negative way, but a growing focus on the adult use market versus a continued study into the medicinal aspects. And obviously with Zaz, we aren't here to stand in the way of it, not whatsoever, of the growing adult use segment. However, in terms of our resources and energies, we'd like to focus for now on that CBD side, the potential medicinal side. So we've looked to source a CBD source that allows us to provide a wholesale product with regularity that can cross state lines and be trafficked internationally, because it is considered by the FDA a dietary supplement when you extract CBD specifically from hemp. And we've got a source for that that comes in multiple forms, pure, over 97.5% CBD, in a powdered form. It can be microencapsulated, utilized in foods and in drinks. And it can be utilized as a source for the various companies who are state by state right now producing all forms of very helpful and valuable topical botanicals. So the industrial hemp versus the in-state concept is simply that the in-state version derived from the cannabis plant is still considered Schedule 1. So we work state by state. We support, we've got several shareholders who've come forth with their own genetic breeds, some published authors who work in organic growing who've offered their particular strains, over 16% in independent verification in CBD. We love those products, and state by state, we will be working with them, making botanicals available via their product and or via our EU-sourced product. And when it becomes available for the in-state, when in-state products, and we believe this will be 2017, can be derived and trafficked state by state, not only will we have in-state facilities, but we'll be prepared to ship those around through the delivery mechanisms that we've created with our EU-sourced CBD. So we're very excited about that. We recognize the entourage effect. We recognize that a great deal of study still needs to be done, and we're excited to be part of that. Moving on to what acquisitions, or what I might also call cultivation. We've got OTT, Jurassic, Truth Lighting, and the important thing here is that these are not a fixed set of products. Again, looking at some of the previous presenters today, I'd very much like to contact them and look at how we could incorporate some of what they've going. We have some related partners already. So we aren't making a suite of products that we consider to be rigid in any way, but rather to be fluid, just like the plant itself, that requires constant care and attention and changes by season and by temperature and by strain, and finding the absolute very best products available that can enable cultivation. And this will allow our, we have over 30 salespeople now, ranging all over the country, in-state in Washington, California, Colorado, Arizona, Nevada, Wisconsin, Rhode Island, Maine, New York, and Florida, and providing them with the tools they need to either go in on the consumer-facing side with Zaz, or to the grow side, or to access the grow side versus Zaz, and vice versa, is important, because at the end of the day, your sales team drives your revenues, and revenues are the lifeblood of the company. So providing them with the organization and the organizational tools to do their job, to grow that team and teach them, and then provide them with products that they can sell with real margins has been key for us. And when I talk about teaching, our sales team undergoes a weekly training, and we've got internal testing that they have to maintain 90% or above on to qualify to sell our products, because it's important for us to know that the people representing us are speaking accurately with the potential customers out there. So we've spoken recently about managed services, the managed services opportunity. I know there are folks out there who are more active in terms of getting their hands dirty. Right now it's something that we look forward to doing, but don't feel it's our place to actually have our hands in the soil. However, again, as people have discussed in business models that are out there, the managed services model providing an opportunity for not just the vertical integration of our products, but also to enable legal and financial audits and assist the businesses as they grow in the best way possible, is something that we see as the best way that we can enable growth within the marketplace. So vertical integration, that means that we've got a selection of professionals on the cultivation side, very knowledgeable, who have scrutinized our products and methodologies, and when we come in and do an audit with a client who's retained our managed services, that we can take them from the seed to the sale with a product that we believe can be independently tested and be equal to or greater than available market products out there. But more importantly, that we can put our stamp of approval on it, a Michelin rating, if you will, such that no matter which state you're in, if you're legally acquiring your medicine and it's associated with a product that came from a facility that we are associated with, that you are certain that you are getting the same product that you received elsewhere, that it was produced in the same professional manner, that it is free of pesticides, that it has the same percentages of either THC or CBD that you found elsewhere, and that it's a genetically verified strain. So again, growing very fast out there. There's it seems like a new strain comes out and it's suddenly nationwide. Back to the 3-month growing cycle, that first of all, that's impossible. But nextly, it's very easy to ride the coattails of a fancy name and draw people in. And it's great to educate folks and to share your wares with them, but it's also, at this point, a very disorganized market that we would like to bring a degree of organization into, so that people are certain that when they go to get the product that they select, that they are getting really that product. So vertical integration enables us as a business to provide our products, which we believe are superior in the marketplace, both for quality flower and for quantity of yield, and to potentially integrate those with other products that we bring on board, but such that we are purchasing both within our, we're purchasing from ourselves, if you will, and we're selling to the outside market. So inside and outside sales are enabled through our vertical integration. It's not a one-stop shop. Again, I can't stress the lack of rigidity here at all. It's a constantly evolving market. Everybody who is involved with us internally knows this and is open to testing and trying other products that come along that we can add to our suite of products to ensure that ultimately the best quality of medicine is produced for the marketplace. So related aspects of our model, education. So education is important for the general education, the public out there. Everybody listening to this is pretty knowledgeable of what the market is and what the product can do for the most part, but we still represent a fairly small number in the country and growing. There are several states out there, obviously, you know, the ball's rolling pretty rapidly forward, but the individuals in those states are frequently still lacking knowledge of what this special plant can do, why it should not be Schedule I, and why at the very least, if you select not to partake yourself, you shouldn't demonize those who've selected it as a means of medication. So educating the general public we see is a very important part of this, both for a business model, but also because there are still people being arrested and doing time for something that they simply should not be. Then general consumer education for those who select to utilize this form of medication or recreation. Again, going back to the previous slide, the ability for people to know specifically what they're getting and to have a high level of confidence that they are getting the strain they ordered, that it's manufactured in the same way, and that it's good for them with regards to no pesticides. These are very important to us. And then producer education. We've collectively had the opportunity to work with well over 100 growers, all of them with their own proclivities and skill sets, and learn from all of those. And we certainly don't come on board to dictate to anybody what methodology they should use, other than the science that we can show behind our products with a broad light spectrum, with the necessary nutrients, with a hyper suspended oxygen in the water and what that does to a plant, and make those available. But when I talk about education from a producer standpoint, that's a two-way street. We learn, and hopefully we have something to offer them. And we have created this model to produce a very broad base so that any challenges that arise in one area won't slow the company's growth overall. Basically a means of shareholder protection to insulate ourselves from market volatility and rapid product advancement. And we're confident in this model. We see it as a means of moving into the future, again, with that level of shareholder protection that we felt was important to produce. And finally, it's an opportunity for us to participate in all aspects of the market by being vertically integrated, both for education and for profit. Obviously, profit for investors is key, and it's key for us. But people, the old sales adage, know usually means they don't know, and that requires education from the retail consumer all the way through to the experienced cultivationist. So I have gotten through this fairly quickly. I'm sure we'll have some time for some additional questions, but I know there's a couple of general questions out there. I'll start with the share structure. It will not be changing. It does not mean that we don't have ongoing discussions with various groups where there could be some form of change in terms of a buyback and what have you, but it's not on the forefront. It's not what we're really working toward. What we are working toward as an M&A model that will make perfect sense for our share structure, as we've said and as we will do going forward. We plan to be here for some time and to generally bolster our position by acquiring professionals off the waiver wire, and that takes market cap. And that's what we have in there. And by market cap, I'm talking in terms of a professional sports team. Salary cap, I'm sorry. And we have salary cap with our share structure. And we are, as has been discussed in the past, there have been companies with share structures similar to ours who have done very well, and we plan to be one of those companies. Our intellectual property, specifically to the Tomasi patent, there are some companies out there who are infringing on it, and we will aggressively pursue it. However, doing so requires certainty of the direction that you're going, so that because getting into an IP battle in court can be time-consuming and costly. And mitigating that through moving forward appropriately is the best use of our resources at this point. We made the very best use of our resources by retaining that patent and moving forward with it. And we are creating a strategy, and we'll be rolling that out in the very near future, not just to protect ourselves, but to send a message elsewhere in the market that there is a protected intellectual property and that we will defend it. And finally, Jurassic, like Zaz, picks up speed with use. The more people share the experience, the more demand there is. The last part of the year to see very rapid growth as we already get more and more inbound calls today than we can possibly do outbound. And as we bring the new technology on our channel partners, which we see as being an opportunity to work on both the wholesale and retail sides, our belief that a year from April, we could well achieve the 1,000 machines in the marketplace number that we set for ourselves. It's a lofty goal, and I won't fall on a sword if we don't get there, but it's lining up to appear as though if we don't make it, it won't be for lack of places to put them.
Both email boxes. I just sent it again.
I'm sorry. It sounded like there was some inbound there, Derwin.
Okay, go ahead, Scott.
Anyway, okay, sorry about that. So finally, and that's it. We are extraordinarily excited about the future. In the coming days and weeks, we'll have regular news to share with the public with regards to advancements that we're making, even as I speak. We're excited about those. I think it will coalesce this entire presentation into something that makes ever more sense for our faithful out there, but also for the institutional investor who can look at this and see that there is a well-conceived plan that's been produced and rolled out appropriately, providing a level of shareholder security and revenue to grow the company into the future. And ultimately, we see the share price reflecting that professional growth. And I tell you, I love all of our shareholders. As I mentioned, we have been very busy lately, but I still manage to interface from time to time, keep up on things via Facebook and Twitter. And as I've said before, and I say again, both the positive feedback and the negative feedback is the personal attacks I could probably do without, as could the whole company. But hey, those are opinions too, and we value what folk are thinking out there, because through that knowledge base we get a better appreciation of what people desire, what they see as the future, and mitigate that with our own strategy to ensure that we're moving forward with something that's both exciting and successful. So with that, I will close this portion of the presentation and open it up, Derwin, if there are any questions.
Thanks, Stefan. You have a lot of questions.
Oh, come on, really?
Yes. Okay, let's start with number one. News came out of new Zaz machine with a complete full screen interface. When and where will these machines be placed?
So the end of October is what we're still prognosticating. If we miss the 3rd to 4th week in October, it won't be more than a week or 2 weeks behind that. They will be placed from Rhode Island through Colorado, where multiple machines are going, both in Colorado Springs and Denver. There's a machine, two machines going to LA, 2 into San Jose, so we're making a foray into California. And right now we've got, I believe, 2 machines placed into Washington. The 12 signed leases that I mentioned in that PR are in place, and we've got at least that many that are still pending. Again, there are interesting proclivities that come through the state-by-state growth of our organization. And you know, in some places people want a lot of marketing and PR around it. In some places it's very important to them that absolutely zero patient information is captured beyond the necessity for us to establish ID. And so for each of those locations and states, it requires a little bit of personal attention and focus, machine by machine, but it's also producing a process through which we can streamline that. So the order time and the delivery time will become shorter and shorter. But I believe we released the names of several of the dispensaries in that release. We'll make them public for all those dispensaries who wish to have the additional press, and it will be in the month of October.
Next question. AutoSpense has a machine similar to Zaz. Are you aware of the competition, and does that infringe on American Green's current patent?
As I mentioned, I am aware of the AutoSpense machine. I've seen most of the competition out there. Some aspects of our machine are different, from refrigeration through to the networking capabilities. Again, we've got a strategy for this. We believe that there are absolutely infringements on our IP, and we'll be aggressively pursuing that. Whether or not AutoSpense by name absolutely fits in that category is not something I would address right now. But anybody who's infringing can plan to hear from us, and anybody who isn't, we wish them the best. And I believe that we will, outproduce and outmarket them through superior machine and strategy.
Next question. Realistically, how many Zaz placements can we expect in the next 6 months?
So as I mentioned, talking about Zaz, we've got a couple of channel partners, and by channel partners I mean companies who are out there that have already have their fingerprint on better than 300 dispensaries and are looking for a custom wrapped solution wherein their product could be solely featured. This wouldn't prevent us from putting a second Zaz in there that had a blend of products representing new revenue for dispensaries. So we also have a business-to-business channel partner who's in over 130 dispensaries, currently focused only in Colorado, but their plan is to move very rapidly into Washington, first Washington, and then several other states, Oregon, California. And through these 2 models, going back to what I said earlier, I still feel that we can get to our mark of 1,000 unless we're held up through manufacturing. So let me set a realistic number. Given the 12 leases that are out here, it's September. I'm talking about October deployment. In the next 6 months, we're looking at April, which in fact would be a year from the initial quote unveiling in Avon. And I would say on an inside of 500, and I still have a goal of 1,000.
Our next question, any reported revenues from Zaz Machine, Jurassic Water Systems? If not, when can investors expect to see them?
Real quick, I'm going to go back to the previous question, just mention that I believe that we'll have over 100 machines that are placed independently by inbound calls or our sales team, and the balance of that, that's on that inside of 500 with that other 400 coming from channel partners. In best case scenario, I would see us 100 to 300 by our outbound efforts, and the balance made up by the channel partners. With regards to the revenues, nothing that I would put up on a screen or report today. But in our next quarterly report, I think that I know that you will see the results of our efforts at this point. Again, all these products take a few months to both from the technology aspects of Zaz, rolling that out and bettering the product, through to the necessary time to demonstrate precisely what Jurassic is capable of. We continue to have success. We haven't dipped below a 10% increase in yield, but having independent verification of that is something that is, one grower doesn't always believe the second grower. So we are in an independent test with a very well-known organization that we will make public at the end of that test. And I don't think anybody will have any doubts as a result of that about the validity of Jurassic as a means of enhancing yield and increasing product quality. But back to the core of the question, no revenues that we're going to report today, but in our next quarterly, I believe you'll see the beginnings of something that we're pretty excited about.
Next question, does Zaz comply with Colorado law?
Anybody who's been following Colorado specifically, as the lightning rod of how as the lightning rod of, really the world. People come from all over the world to tour facilities there and look around. And we're members of the marijuana industry group, the MMIG there. And I regularly see and hear things with regards to, especially when Congress is in and what have you, in the state legislature, that is. And the regulations are constantly being modified and upgraded. At this point, we're legally participating in the dispensaries we're in, and it's our belief that we're in full compliance. If something comes up, then we'll address it at that point. But we certainly aren't trying to do anything secret, obviously, and we're not trying to do any kind of end run, and we are wide open to discussing and modifying as necessary to ensure that any interested regulators' concerns have been put to rest. I'll be in Denver next week addressing some of those very questions.
Next question, what would you deem a current weakness/deficiency in the American Green business model, and how are you addressing it?
Well, it's like an interview question, eh? Yeah, a weakness. Spent over 4 months growing and educating internally our staff to fulfill our 1, 2, and 5-year plan for growth, and to do that correctly. And I wouldn't call it a weakness so much as a necessity of ensuring that in a market space like this, and I've mentioned this before, the challenge is that not daily but hourly, something new comes across the table that looks like an outstanding opportunity. And when you try to be everything to everyone, you wind up being nothing to anybody. And I would say that ensuring that we have reviewed the direction we're going and it complements our model is the biggest challenge, and the tendency to chase shiny pennies is the biggest, not a weakness, but it's part of that challenge. And we feel like we've got the right people together to ensure that we don't divide our efforts, so that we stay focused in what we think brings, again, the greatest shareholder protection through a successful growth of a broad base, all of which has a capacity for positive revenues.
Next question. Where do you see PPS in a year or 2 years? Will they eventually do things to increase shareholder value?
Well, the easy answer is, as high as possible, and as a result of a reflection of the business that we're doing. So I can't begin to address what the actual share price could be, other than to say I'm firmly committed to getting it to above where it is now, and I'm supremely confident that it will be. Again, we look at growth in the industry. All 12 folks here are contributing to it. Another 100+ companies that aren't on today's webcast. And we see growth and maturity in the market space. And we've got elections coming in November. And from an American Green perspective, we've got our quarterlies, which will come out at the end of the year. And then you get the traditional bump in January, all of that bolstered by continued growth as we expand into more states with our managed services and vertical integration. So I see a pretty steady climb, which will initially be spurred on by natural market forces regarding what I just said. And then we'll be able to sustain it and grow it solidly. So, I can't prognosticate beyond that. And as we always say, don't work with us with your lunch money. But we feel like we're a very secure option for somebody who wishes to participate in the cannabis stock index. And again, I'm very confident in our model and where we're taking it. And I feel that will be adequately reflected as the proof of the way we're growing this very professionally is observed by larger investment groups. So I see, certainly I wouldn't be here, wouldn't have left a very successful career in advertising to participate in this, except for the fact that all of us investing in here, all of us working here, see something that you just see a few times in your life. If you're lucky. There's been a few things in the last 100 years who've had an opportunity for a market growth like this. And I don't expect to see another one that I can participate in, in my lifetime. So that's all upside, and we're excited about it, and it wouldn't be here if we didn't see that. So the important thing is that we grow it so there's reasoning for it, so that we can point and say, yeah, well, it's grew because of this and this and this and this that we've done and reported, and is very visible for anybody who wants to drive by or walk in and talk about it.
Next question. You were saying by 2017, you will be rolling out state by state CBD strains, or do you have growers that will be selecting best cannabis CBD strains?
Yeah, so let me clarify that a little bit. We won't be waiting until then to roll out state by state. What I meant when I said 2017 is that now there's a possibility that enough states come on, form a state's quorum, and overturn that the Schedule I listing is reduced before 2017. But should that not happen, it is our belief that the results of the 2016 elections, followed by a lame duck period, which would make it very easy for a sitting president to not have any negative impact on his party's elections, to make a move like that. And I think that in 2017 we'll see significant changes, both with regards to a reduction in the ability to move products from state to state, because there will no longer be a federal issue with that. But also there will be more federal oversight as they move into the market and ensure that things are being produced correctly and provided safely to the end client. And so, we're prepared to move into that faster should it come sooner. But we're really angling toward that to ensure that we've got an edifice built that can stand up to all the scrutiny that should come to ensure that we have a very safe market segment. And so right now, just in terms of prognosticating out there when I would expect to see that happen, 2017 following 2016 elections, and that'll be an exciting year for the whole market. Again, if it comes sooner, great, and we're prepared for that because we are working with CBD strains state by state, but we are just not, whether it's from extract or otherwise, won't be having anything to do with going from state to state at this point.
Next question.
Creating a delivery network. Yep, sorry, Doreen.
Where is money coming from for acquisitions and employees?
So we've got what's known as an off-balance sheet funding mechanism, and we're very careful about that to ensure that it is not ever toxic. In short, we have the funding necessary to achieve all the goals that we set out to do. In no way, shape, or form are concerned about market growth. We can, wherever that should go, large or small, we're prepared to approach that in a way that allows us to get into it aggressively without risking PPS or shareholder value.
Next question. Is American Green a buyout target? Would it entertain such a proposal?
Well, we aren't designing this for the purposes of becoming a buyout target necessarily, but if you produce a top-notch organization, cash flow positive with positive market growth and being a market leader, that could come along. And if it does, we'll entertain it at that point based on multiple criteria. First of all, is it best for the shareholder base? And nextly, does it, and these obviously are not necessarily dependent on one another, but we would want to ensure that whatever we've built wouldn't go away or be erased as a result of an acquisition, because we believe we're building something that provides quality and safety and education while producing revenues and shareholder value. Again, if it was an opportunity for a buyout that was the best for everybody concerned, we would entertain it. And since it's not on the table yet, that's probably all I can say about it. So not unilaterally saying no, it'll never happen. That would be very curious and interesting to see it come across the table. But at this point, we're growing ourselves to be the best company we can. If it leads to a buyout opportunity, we take a look at it, but it's not part of the strategy at this point.
Next question. What are the strategies for utilizing slash head shops as a location for placement of VAV machines?
And right before head shops, I missed the first word. Sorry, Darwin.
Smoke shops.
Oh, smoke shops, head shops. Well, these are obviously related market spaces and places. I get excellent suggestions almost daily from folk who've isolated various places, that would be ideal for Zaz. Obviously, you can't put a regulated product in there, but we have, product recognition and going in there with the growing botanicals market referred to, the CBD portion of it, other consumables that don't have regulated products in it. We actually have a couple of people on board at this point who've spent better than 25 years focusing on growing those sort of market segments, putting machines not dissimilar to Zaz into apartment buildings around college campuses or onto business campuses and what have you that makes sense. Smoke shops and head shops are an excellent example of a place where, perhaps some form of energy drink that was hemp-related would be very popular. Certainly botanicals and topicals that were legally sold, it would make sense. Those people are already part of the cannabis culture. So we not only have people on staff looking at that right now, but are moving aggressively toward that. And it's part of why I'm fairly confident that, again, production notwithstanding, we'll be able to get, we'll approach that previous goal of 1,000 machines.
Next question. Do you plan to upgrade from Pink Street?
Not at this time. It's something that we are ensuring that our structure is well organized, such that if we decided to do that, we wouldn't have to start from scratch. But right now, for what we're doing and the way we select to do it, we are very comfortable where we are.
With your investment of Truth Lighting, when do you believe LED lighting will make an impact on your business as well as the industry?
Immediately on our business, our pre-sales are pretty dramatic, and that will be reflected again in the next quarterly. In terms of the industry, that's another one where we've got several units out there that people are observing. And this one doesn't necessarily require the full 3 months, because we can put a light spectrometer underneath there and demonstrate that we have over 13 light spectrums. And there are several fairly qualified and in some cases renowned growers who are utilizing it right now and very excited about it. So I think the impact on the industry, Q1 of next year, impact on our financials immediately.
Hold on one second, Stephan. I'm going through the questions.
Hey, that's great. And Derwin, I actually had a question come across my desk, and I want to mention something that somebody asked not that long ago why they didn't see any American Green insiders purchasing, employees and what have you, purchasing stock at this point. We've got, as I mentioned, over 30 salespeople. We've got, better than 45 people working here at this point, and over 2/3 of those people are actually taking between half and 2/3 of the salary they took in their previous jobs through excitement of being involved here. They decided to cinch their belt up a little bit and put a sharp pencil on their budget, and they are investing by way of taking a employee stock option program in lieu of their full payment. So these are people who could be making, in some cases, in several cases, myself included, double in an open marketplace, and instead decide to invest to put their payroll where their mouth is. So for the couple of people who've asked that out there, just know that everybody here is very dedicated to this company and working forward and accruing because we believe in it as well as you. So
Next question. Example of off-balance sheet funding, please.
That's probably something that's better served in a different conversation, something that's live or interactive.
Okay. Are you interested in acquiring other lighting technology?
Absolutely. We're interested in acquiring or partnering with anything that makes our cultivation system better and improves the market in general. So, certainly if somebody has an idea or a concept out there that would lend itself to what we're doing, I'd love to look at it. Again, we're not rigid in our product selection and would embrace anything that comes along that is superior to either what we have or what's available out there now. And or to sell that product for them if we didn't acquire it, we can provide a source of sales for organizations.
Well, Stephan, that concludes the Q&A session. Do you have any last comment?
Not other than to say thanks a lot, Derwin. Great platform. I look forward to doing this again. I hope it's answered a few questions out there for folk who are curious, what we mean by managed services, vertical integration. I think you'll see over the next few weeks a great deal of information to further back up everything we've talked about here today. And again, I look forward to the next one and sharing our ever-growing opportunity here within this market segment. So much obliged, sir.
Well, thank you. That concludes our presentation. Our next presentation is Single Point Incorporated at full. Thank you. Sound check 1 2. Sound check 1 2. Sound check 1 2. Institutional investors, cannabis entrepreneurs, media, and consumers. We would like to thank our sponsors, American Green Incorporated, and Indo Expo Trade Show, which will be held in Denver, Colorado, November 15th through the 16th. The website address is www.indoexpoco.com. Again, www.indoexpoco.com. Our speaker today is Greg Lembrecht, CEO, founder of Singleport Incorporated. I'll turn the call over to you now. Okay, Greg, it should be.
Can you hear me?
Yep.
Oh, good. Okay, I'm trying to get the screen up here.
So Greg, you have the PowerPoint loaded?
No, I'm not sure if it's loaded. I can't bring up the screen. Maybe I'll try and give control of the keyboard and mouse to the attendee.
Hold on one second. Hold on one second.
I think that Will had sent you the PowerPoint.
Hold on one second.
Here we go.
Okay, can you see my screen, Greg?
Yes, I can.
Okay. Just let me know when you want me to change slides.
Okay.
And you're ready to go.
Oh, now I don't have it again. Shoot. Can you try putting it back up?
You should be able to see it. You are a panelist. So you don't see it, Greg?
No, I did see it, then it went away.
You still don't see it?
Let me launch again. Somehow it says I already have a session running.
Well, let me log you out, and then you can log back in.
Okay.
Okay, Greg, are you there?
Yep.
Okay, so I guess I will show my screen. Hold on. Okay, can you see my screen, Greg?
Yes.
Okay. Let me know when you want me to advance the slides.
Okay. Well, thanks for having me, Derwin. And let me tell you a little bit about Single Point. We were started in Seattle, Washington as Lifestyle Wireless in 2006, and me and my partners have come out of the text message business. We used to do all the text messaging for Nextel and Deal or No Deal. So we started a business where we could text message anybody in the U.S. and Canada with our platform. We successfully got into a lot of nonprofits and faith-based ministries and other businesses. About 3 years ago, the train kind of left the station where the carriers started allowing customers to use their mobile phone and their credit card to do transactions or donations. So we added on to our technology the ability to send a text message with a link, and when you hit that link, it's going to take you to a mobile landing page, and there you can do a transaction or a donation. So Single Point is in the business of allowing people to use their mobile phone to send text messages and allow them to do a donation or a donation. Last year, we did 1.6 million in revenues. Certainly, if anybody has the ability to, grab their mobile phone and text SEED, S-E-E-D, to 37284, you can see how our product works. You can also see how unique it is. Slide.
Hey, Greg, you're going in and out.
Okay.
Yeah, I can hear you now.
Okay. Go ahead and change the slide, please. So Single Point, is providing solutions that allow clients to conduct business transaction, engage in targeted communication campaigns with their customers through their mobile devices. this is instantly interactive regardless of what media channel is used to communicate. Change the slide. We are able to engage with mobile users to accept payments, schedule reoccurring payments, sell goods and services, engage in targeted communications, deliver content, collect data. So our program, our technology that we've spent the last 8 years building allows a customer and a business to really utilize the mobile phone to target marketing for businesses, and more importantly, it allows them to bring in, the funds, whether it's a transaction or a donation. Go ahead and switch. Switch slides, please.
For some reason, it's freezing. Hold on.
Yeah. There you go. So single point as continually, molding the mobile industry by designing new technologies such as pay by text, connect by text, text to bid, and single seed payments. Let me explain to you a little bit about the products that we have and some of our brands. Pay by text is simply our product where we allow a customer or a business to send a text message to someone that has opted in, and once they start receiving those text messages, you can also send a link and allow them to buy a product or do a donation. Our text to bid business or product is we've allowed auctions to use the mobile phone. So this is a pretty extraordinary business that we've started here. So instead of when you go into an auction using your pen and paper bidding on something that way, when you walk in, you have your own mobile device, and all the bidding is done on your mobile device. This has been another exciting mobile technology that we've brought to that industry. The single seed payments, last January, we went ahead and announced that we were going to use some of our various mobile technologies to get into the cannabis vertical. So what we've done since then with single seed payments is that we have gotten the cashless ATMs in accounts, and right now, until the federal law is lifted, they are not allowing credit cards. So what we have done is we've tweaked the cashless ATM to accept a debit card. So when the customer goes into the dispensary, they're able to swipe their debit card, and the funds are transferred from their bank into the dispensary's bank. So we've been very successful at getting that product in dispensaries. One of the other things we're doing currently with dispensaries in the cannabis business is we're allowing them to use what we call our Text Connect product. This is our platform where they can start communicating with all their customers via text. One of the exciting things that we found out getting into the cannabis business is that most times when you go to a business to start having them use text messaging as a marketing, the first thing they need to do is go get all the phone numbers, which can take quite a while. In the dispensary business, they give their phone number up the moment they walk in the door. So these dispensaries already have all of the cell phone numbers. One of the other things that was really exciting about these dispensaries and our Text Connect product is they're very limited on what kind of marketing they can do and some of the guidelines there. So when we're approaching them about using text messaging to communicate and market to their customers. It's been a very good conversation because it's one of the ways that they can actually communicate with their customers. For example, if a dispensary has 5,000 or 10,000 phone numbers, they can use our technology and simply send out a text saying that Friday at 3 we're going to have a certain strain of cannabis in and come down. The exciting thing about this in the future, though, and this is part of our plan, is to get into these stores with our Text Connects, our text message marketing, and also with what we can, and that's the cashless ATM for now. But once we are in all of these accounts, whether that's 1,000 accounts or 20,000 accounts, when the federal law lifts, hopefully soon, we will have all of the phone numbers and all of the dispensaries already using our platform. And the exciting thing about this is we'll be able to send a text to all of their phones saying you can now pay for your cannabis with your credit card with your own device. So that's kind of our overall strategy on how we're going to penetrate this market, which we're very excited about. Next page, please.
I'm turning.
Okay.
For some reason, it's freezing.
Yeah.
Is that it? Did it turn, Greg?
Yes, it did. Thank you. Single Point is a public company on the OTC pink sheets. We've had the public vehicle for almost 3 years now. Of course, we've been in business since 2006. When we got into the cannabis vertical, we came up with the name Single Seed Payments. We have a lot of other businesses besides the cannabis, so we wanted to separate that. We came up with a website, singleseed.com, which we're very proud of, which is the website that we use to communicate with the dispensaries and have them sign up for our products. So there's many different things that we're planning to do with that website. One of the things that we're excited about is to use SEO marketing to drive these dispensaries to our website. So it's not only going to be a place where they can go see our products, but also we're going to have our blog there, and we're going to have news and relevant information. So it's our idea or contention that every dispensary, hopefully every day or once a week, goes to our Single Seed payment websites and sees what different products there, but also sees information on payments. One of the most important things in the dispensary is payments, especially with all the different laws that are a little bit confusing now, and there's a lot of gray areas. So we want to be the single place where they can go to the website. And also, of course, we will have this website set up so they can use their credit card and sign up for our text messaging platform. And also they can go on there online and fill out the paperwork so we can get them their cashless ATM terminal. And then, of course, in the future, when we have those cashless ATMs in there, when we're able to do credit cards, when we see that the bank is going to sponsor this, then we can simply turn those cashless ATMs where they're starting to take credit cards. Go ahead and change it, please. This is a little bit more about Connect by Text. You know, it's kind of interesting. We've been in the text message business so long. We're a little bit jaded and, you know, think it's kind of archaic. But the truth of the matter is that businesses are just now starting to really use text messaging as a marketing tool. We've been in this business a long time. We know it inside and out. And it's very exciting because we think that we really have a niche with the dispensaries. So, for example, what they would do is they would pick a box on our website where, you know, for X amount of text messages a month, it's $29, $49, $99, $199, and then it's just a reoccurring revenue to us. And that customer has the ability to go into our platform and send a text message to any of their clients. So this is something that no one's doing in the marijuana cannabis business, and we think that this is going to be a huge success for us. In fact, just in the last 2 or 3 months, we're starting to sign up a lot of clients with this. Having said that, we're really going to have a huge push. We're going to send out some email blasts to all the dispensaries and drive them towards our website to go ahead, hopefully without having to talk to us, go ahead and sign up for their package with their credit card on our website and then fill out our agreement and send it in. So the Connect by Text is a really important part of our plan moving forward. Go ahead and change, please. We talked a little bit about the cashless ATM, which is what we are doing now, and what we the cashless ATM allows the dispensary to take a debit card. Currently, the customers are you know, in a lot of the dispensaries, they're going in and they have a big bulky ATM machine. So they go ahead and use their debit card, and, you know, they get $100 or $200 out of the machine, and then they take it over to the clerk and give it to them. This creates a lot of issues with having to handle that money. It means more security, more cameras. It means someone to come pick that money up, and leads to a lot of issues. What we're providing the dispensary currently is what we call a cashless ATM. So the customer still uses their debit card to get to buy their cannabis, but the funds are simply going directly from that customer's account into the cannabis dispensary's account. Okay, well, can you hear me?
Do you want to go back? Yes.
No, that's fine. Yeah, no, I'm having a problem here with it bounced me out, so I'm going to try and launch this application again and see what happens. Anyway, I think, yeah, so I can't get back in, but that's okay. I think I'll go ahead and just talk about, you know, what we're trying to do in this business a little bit. Questions. Sorry that we're having some technical difficulties here. So what we're really excited about in the cannabis business is that from what I found out, we've gone to 6 shows now. We've given ourselves the opportunity to really understand and know the business. as best we could. In fact, I think that we know it as good as anybody now. We're really focused on the payments. One of the advantages there, or some of the advantages, is maybe compared to some, dispensaries or growers or manufacturers, we're the pick and shovel. We're not regulated, because we're not actually in that cannabis business. We're the payments for that business. This allows us to easily expand to all the states. Currently, as you know, there's 20 states that have medical marijuana, and then of course the two that with the recreational, with Colorado and Washington. So we have our product, our cashless ATM, and our Text Connect in about 15 different states with about 140 accounts right now. Our plan moving forward is to really expand our business and to use the power of our stock and the power of us able to raise money to acquire some of the companies that are already have this cashless ATMs in these dispensaries. What I've found out is most of the companies that are doing this are smaller mom and pops. They've reached a couple hundred accounts, and they really don't have the ability to expand or raise money. So we're in negotiations with most of these companies currently about acquiring them. In the new states that open up, whether that's Florida or New York, our plan is to go in there with our ISOs, what I call independent sales organizations, and actually grow those states by our own. I probably should have mentioned this at the first, but some of my background in history is I started and ran a distribution company from 1984 to 1987 in Seattle, Washington, and we got it into 4 states in all of Canada with about 5,000 accounts. In 1997, I put cigars and humidors in all my accounts, and before we knew it, we had orders to put cigars and humidors in 30,000 accounts. So we raised $10 million, and I took that company public on the NASDAQ. The name of that company was Premium Cigars International. I was the founder and largest shareholder. So my background is extensive in wholesaling, distribution. So it's kind of interesting that with me and some of my Seattle partners, we've built this mobile technology, and of course it's all coming back to retail. So I'm really excited about the future of being the one-stop vendor. What we want to be is we want to be the vendor at the dispensaries for payment. So if that owner wants a Square type solution, we're going to have that. It won't be from Square to be our own. When they want a terminal to let their customers use their credit card or their debit card, we're going to provide that. When they want to let their customers use their own mobile device, that's what we're going to do too. So our goal is to get into every dispensary now, and it's always interesting to know how many that number is. People say it's anywhere from 20 to 30,000 maybe, but in the future, with the new states opening up, that can easily go to 50,000 or more. So our goal is to get into every dispensary and be their one-stop payment. From some of my previous experience, one of the main things that retail owners want is they don't want a lot of vendors. So we feel like we have the opportunity right now to do this, and I think with with our management's experience and with our ability to raise money and the fact that we're a public company and we can acquire other companies, I think that we're we're in a prime position to really be the leading payment solution in the cannabis business. And that's exactly what we're focused on now. More on the I guess on the corporate side, we are in our final stages of uplisting to the bulletin board. We're also in negotiations with some investors. We're looking to raise anywhere from $1 million to $5 million right now. So things are moving exactly where we want them to right now. We've spent the last 6 months understanding the cannabis business, meeting all the players in the cannabis business. So this is a very exciting time for Single Point and Single Seed. And you know, I encourage all of you to go to our Single Seed website. And since the screens the screens are not in front of me and we can't seem to figure them out, I think maybe now we'll just go ahead and take any questions.
Okay. Give me a couple of seconds. Let me pull up the questions.
Okay.
First question is, in lieu of the recent data breaches, what is your strategy to convince consumers to store their credit card info on your site, especially to purchase a product as controversial as cannabis?
Well, you know, we have many different partners. We're partners with all the major carriers. We're partners with Visa and MasterCard through our processors. We have 2 very large processors. So the best answer is we are PCI compliant 1. So we're as good, if not better, than anybody else taking credit cards out there.
Next question. Does any other payment processors have the technology that you have?
Payment processors have a lot of different technology. In fact, the payment processors that we use 2. I always like to have more than one vendor, if you will, have the ability to do some of the stuff we do. One of the unique things about what we do is because of our text messaging background out of Seattle. In fact, I wasn't able to show you the management slide, but our CTO is from you know, the old company that I talked about that did Nextel's text messaging, and Gary Shanker, who's on our board, is, in my opinion, one of the top 10 mobile guys in the country. One of the unique things that we do is we really utilize the text messaging to get somebody to their mobile phone where they can hit that link and take them to a landing page. So that's really unique to us, and we are very good at that. There's a lot of different apps out there. What we have is not an app. We're having a business that maybe they have, you know, 5, 10, 50,000 numbers. They're able to send a text message with a link saying, hey, we've got half off on hats or cannabis or whatever it may be. Go ahead and hit this link, and that takes them to a mobile landing page where now they can purchase. So what we're doing is really interesting and is fundamentally different than a lot of competitors out there. So when you take our Text Connect and our Pay by Text and put those together, I think that we have a very unique proposition.
Next question. Can you speak to the future of Green Star, the JV, I guess, the joint venture that you recently acquired in Hull?
Yes, and thank you for asking. We started a joint venture about 4 months ago with a company called Greenhouse and another company called ADCS. And this allowed us to immediately get into the cannabis business. And just last week, we had a press release announcing that Single Point has signed a letter of intent to purchase Greenhouse. And to speak into that is that my board and the management at Single Point are very focused on this cannabis vertical. So we thought it was in the best interest of our shareholders for brand recognition and revenue to purchase Greenhouse. So Greenhouse is a very exciting vertical that we're going to continue to use, and we're very excited to be able to make that acquisition. And I guess maybe more importantly, that's just one of many acquisitions that we're going to be doing here in the future.
Next question: can you clarify how many dispensary accounts you currently have and how fast you are growing them?
Yeah, so through our joint venture and affiliated with Greenhouse, we have access to about 110 dispensaries, and what I mean by that, we're able to utilize that relationship with Greenhouse and get our Text Connect product in there and other products, and obviously we're also able to utilize that relationship to order the terminals and to do business. Green Star, or Single Seed, if you will, has gotten into another 40 accounts just in the last 2 months. So we've shown the ability to be able to go out there and get into accounts. And like I said, this is a business that I've been doing my whole career, placing products into retail. So I have a very good feel on that, and we'll continue to grow internally. And we are in the process of acquiring some companies that have a lot more accounts than that.
Next question: what would you consider the next catalyst for your company?
I'm going to answer that by saying that one of the things that we're really excited about is with our mobile technology and our ability to understand that business, I think that we are on the cutting edge. As soon as a bank, whatever bank that is, decides that they're ready to take a plunge into this space, we are in the process and are currently working on our mobile technology, which will allow a customer to use their credit card and their mobile phone to buy cannabis. At that point, they can go down to the store and pick it up, or it can be delivered to them. So we feel like we can be the first and the fastest and the biggest and really dominate, allowing customers all over the country to use their mobile phone and their credit card to buy cannabis. So that product is something that we already have, and we're ready to go on, but we're waiting on the bank. And as soon as that happens, we feel like we're going to have a huge competitive advantage and be first to market there.
Next question: how are you impacted by future legislation?
Well, I think I want to answer that by one of the reasons we got into this vertical is because it's just at the beginning, and as more states open up, we're going to be able to go into more states. So future legislation on the glass half full is that there's going to be more and more states coming on with more and more dispensaries, and it's just going to be, it's a great business to be in right now. We're going to have the opportunity to get into more accounts. I think the other part of that question is that although we're able to get in dispensaries now with the cashless ATM and our Text Connect marketing product, we're waiting on a bank to go ahead and take the plunge, and as soon as that happens, then the credit cards will come into play, and we'll be able to turn our current terminals on to take credit cards. But more importantly, we'll be able to let customers use their own mobile device to buy cannabis.
Okay, that was our last question. That concludes the Q&A session. Any last comments?
Yeah, I mean, I think that we're just in a very unique position. I know that from looking at the lineup, there's many different types of businesses that are getting into the cannabis vertical. I think that we're very unique in the fact that we're taking the payments. We're not regulated by a lot of the states. We can expand quickly. I think that our management team has been there, done that before, and we're really excited about this vertical, and we plan on executing our plan. And I appreciate everybody listening. Sorry about the technical difficulties on the slides, but hopefully, and thank you.
Well, thank you. We will, because of the technical difficulties, we will invite Single Point to present next month. And so if you guys want to listen to that presentation, and if Single Point would like to present next month, we would love to have them on again because of the technical difficulties. But we really appreciate Single Point coming and informing our audience, and we'll look forward to what Single Point holds in the future. Thanks a lot.
Okay, thank you. And our Single Point again is a OTC pink sheet company, and our ticker symbol is SING, S-I-N-G. Thank you.
Thank you. Next presentation is Hemp Shield, and that presentation is at 5 o'clock.
Oh, man.
Thank you for attending the Cannabis Investor Webcast, where cannabis companies increase their liquidity, awareness, and exposure to individual and institutional investors, cannabis entrepreneurs, media, and consumers. We'd like to thank our sponsors, American Green Incorporated, and Indo Expo Trade Show, which will be held in Denver, Colorado, November 15th through the 16th. Website address is www.indoexpoco.com. Again, www.indoexpoco.com. Our speaker today is David Sieber, president of Hemp Shield. And I'll change the presentation over to you, David. and you can go ahead.
Thank you. This is Dave Seaver. As Derwin said, I am the president, founder, and co-creator of all the HempShield products. HempShield is the most original industrial hemp product to be introduced on the market in 50 years. It's positively revolutionary. Of course, I'm a little bit prejudiced, but not only because it contains HempShield, but because it outperforms everything else on the market and is truly a revolutionary product. Now, our company has been established for 5 years now, and our product is on the market for 4 years. HempShield is the only product that is waterborne and contains hemp oil in the world. And we believe that we are unique in that situation. We are being backed by the largest paint manufacturer in the Pacific Northwest, Forest Technical Coatings. HempShield is the first and only thing of its kind. Not only is HempShield ideal for wooden decks and fences, it's for any sort of wood product whatsoever. In fact, there are other uses for HempShield in textiles and other materials that we are just learning about and will develop in the future. HempShield is a state-of-the-art product. It is. This means that unlike conventional deck sealers, we have no VOCs, and well, actually, there is a legal controversy about VOCs. The truth of it is, every time every human being exhales, there's some VOCs in it. And the EPA is actually thinking of exempting all water-based coatings from VOC ratings to begin with. Be that as it may, HempShield is already lower than what is called the very low class of VOCs, and as of right now, it's technically illegal for a stain to say that it has no VOCs in it. But we fall below the range that is called very low by the EPA. HempShield also has no HAPs. It has no hazardous air pollutants. It also has no fumes. This means HempShield can be used inside, it can be used outside, and a lot of people who have sensitivities to chemical fumes or allergies are using HempShield because it's the only thing that allows them to stay in their house while they're using it and doesn't interfere with their health. This is a very important aspect that no other coating has on the market. Now, while HempShield is primarily made of hemp seed oil and pure water, it actually is a state-of-the-art product. It's got every single component in it. Each component is the greenest, the newest, the best, in the highest concentration possible that's available on the market. For example, we do have biocides, non-formaldehyde-based biocides that are timed release. This means that when they are when HempShield is put on the deck, even in the winter, when it's raining on the wood all the time, HempShield is not slippery and you won't break your neck for walking out on the deck. The same thing is, every single component is similar in that it's revolutionary in terms of how it's used. Our pigments, for example, are called transoxide pigments. These are specially processed into tiny microscopic needles so that when the light shines on them, the UV rays are sent sideways and you can see into the substrate of whatever it's on. These are the same grade of pigments that are used in fancy cars like Rolls Royces and sports cars and all the rest, and we use those in HempShield. Now, There are a certain amount of VOCs in any pigment that's used for a stain. However, they are bonded in such a way that's impossible for them to get released into the environment. Hemp shield is totally as green as can be, and it only gets dissipated through erosion, through long time wear. We are now on the market 4 years, and no one is talking about resealing their decks yet. Now, if you ask most people who have a deck, how often do they have to seal their deck, they're going to tell you once a year or even more often than that. So to say that we're on 4 years and people are still happy is a pretty powerful statement. Since a deck is the hardest application to seal because it's a horizontal one, the weather is on it, the sun is on it, people are walking on it, there's furniture on it. All other applications, such as vertical ones for fences or siding or for inside furniture or anything like that, will actually have a minimum of a 2 to a 3x life expectancy over what we get from a deck. The reason why Hemp Shield is better than any other product on the market and why it is so revolutionary is because of the hemp seed oil. It turns out that the hemp seed oil molecules are smaller than all the other oils that are used in coatings, so it not only does it penetrate the wood better, but it does a synergy between all the other components in our proprietary mixture and makes them all work better with each other. Now, there has never ever been a drug law or a drug treaty that was ever passed that didn't contain a specific exclusion for hemp seed oil, so there is no legal risk in terms of any law in using hemp shield, and as such, it is different from all the issues involved with medical and recreational. Our products have been extensively tested. The truth of it is that we outlast most of the other products on the market by magnitudes. I'm not talking about 5 or 10%. I'm talking about hundreds of percent in terms of how long we last in advanced weatherization tests and in all these other tests. It is also true, for example, that Hemp Shield is one of the few products out there whose clear is a true clear. That means that when you put it on the wood, whatever the wood looked like before you put it on is what it looks like afterwards. There is no yellow tinge, as we will see when we get to a further slide, right here. And all the other products have a yellow tinge to them. Hemp Shield, as I said, is clear. Everything about it is revolutionary in all its aspects. The truth of it is that we have decided that we're going to hold back on the big box market and the DIY, because if you don't have a distribution channel already established, they tend to be very dictatorial and arrogant about their terms. So we are in the process of establishing a major national distribution channel, and eventually we will also be in the big box stores. We are in negotiation right now with a wood product manufacturer. There is a new trend in wood products called compressed wood. This actually was invented a long time ago, but it is now just coming to the market, and it's where they take the wood and they do a similar process to pressure-treated wood, although there's no treatment put on the wood, and it's at a different pressure and a little different temperature. But what it does is it locks in the cells of the wood so that they don't respond to changes in the weather and whatever, making the wood last longer. Now, the manufacturer who has just put up a major factory here in the United States, and it's building these factories all over the world, has tested HempShield against its two major competitors and decided that HempShield is superior to them and is planning to use HempShield in all its decking and molding, and has a relationship set up to start supplying the big box stores anyway. So HempShield is going to be in there via that channel also. So for now, we are working on niche markets in the sense that there are a lot of different ways. There are many stores out there to buy. We have what we call our brick and mortar division or section, which is headed by Mr. Fred Kendall, and we have 23 national reps, all of which have 20+ years experience in the building materials and sales channel. And I will discuss a little bit later here who we have already made relationships with. We have chosen the deck and fence maintenance log home markets because they are the first most interesting one, and HempShield definitely is superior to all the products that are currently being used to do this. As I mentioned, we have already made major distribution deals with the MBS company and the Valtest company. Now, we call these outfits super mega distributors, in that MDS has many captive manufacturing operations under its shield. It actually services 3,500 lumber yards and hardware stores all over the country, and MBS took on our product starting in the spring. By 3 weeks into their experience, they had already sent me emails stating that they had met their sales goals and were totally pleased with HempShield. They have closed the books on HempShield for this year and regard it as a total success, and plan to buy a good part of $1 million worth of inventory for next year. And the Valtest company, which is also signed on, is actually bigger than MBS and has also had wonderful results and feedback with HempShield. So next year, if we get no more things, which we will, then that is why I'm doing this presentation today, is to get funding for major marketing campaigns. If we don't do anything else, we will still be in somewhere between 5,000 and 10,000 lumber yards and hardware stores next year via MBS and Valtest alone, who are not HempShield's only customers. As I said, HempShield is unique in all its ways and revolutionary. Not only that, it's priced competitively with all the national advertised premium brands, and when you take the high coverage per gallon into account and the single coat application labor savings, HempShield's actually less expensive than any product that's out there. When you combine this with the appeal to safety and to non-chemical contamination that everyone is seeking, HempShield is an absolute winner. And as I say, it may be the best wood finish and deck sealer ever made. So we do plan to negotiate eventually directly with Lowe's and Home Depot and Menards. We've approached them and submitted our information, but right now they do not carry our brand. All the other brands that they do carry, which are common that we mentioned here, do not compare, are not close to HempShield in its performance or safety or any of the other rights. Why choose HempShield? Not only is it the best deck sealer and wood finish out there, it's the greenest, it's the friendliest, and it's made with hemp, which is totally sustainable. This is a new revolution to go into the market. As we say here, the market for and this is the market just for water-based deck sealers and wood finishes for decks and fences, is close to $500 million a year. If you included the oil-based finishes which are out there, which are based on petroleum solvents, and probably soon will be taken off the market, the actual numbers is double what we're stating. But since this is how the census breaks it down, that's how we present it. The truth of it is, as I said before, we're just discovering that there are many other uses for hemp shield, and we already know that there are a lot of tremendous markets that hemp shield would work great in, such as the marine market, which we haven't begun to approach yet. And literally this could increase hemp shield sales by 2, 3, who knows, 10x. All this information that I've given you so far is based on the 2010 census. At that time, new construction was almost more abundant in the United States. Now that growth is starting, this is only going to add to the market for hemp shield, because as new construction goes on, they're going to want to use hemp shield on their products. In addition, we have also approached many wood pre-finishers. These are companies that take decking and pre-finish it and then supply this to lumber yards and hardware stores and so forth all over the United States. And again, they have found that hemp shield is superior to everything that they're currently using. So we exceed the competition in terms of appearance, in terms of durability, in terms of safety, in terms of greenness. So there are many, many ways where hemp shield is really not equaled by anything else that's out there. And while our formula is proprietary, it is not easily possible to back engineer it. So we expect to be on the market a while before anybody even comes close to something like we have, and by that time we will already have the best thing going. So I'm Dave Sieber. As I've said, I am one of the leading advocates of the use of hemp in building materials. I've been doing this for over 20 years. And was the first one to produce modern MDF, and also hemp plastic, hemp fiber reinforced plastic, which is similar to fiberglass, and many other of the applications that are out there. As I say, at this time, as far as we know, the only real hemp-containing building material that's on the market is hemp shield in a commercial way. There are certain other ones that are on there, not in the coatings field, that are basically as prototypes in terms of pricing and availability. My partner, Mr. Steve Neiswander, is a world-class chemist who has been recognized for his superiority in creating coatings and technologies. Steve considers hemp shield the crowning achievement of his life's work, and he has been a technical VP and research director of Forest Paint Company for over 20 years. He's due to retire in a few months here, at which time he's going to work full-time for hemp shield. Fred Kendall is our national sales manager, highly experienced. He has 40 years experience in the building products, and we have so many deals going on right now that are in the intermediary stages, so I'm not permitted to talk about specific companies and whatever other than the ones that I've already mentioned to you. But we have a full press going on. We are figuring that either by next year or the year after that, we are finally going to reach the tipping point where it's going to be in so many stores that everybody else is going to have it, or they're going to be out. So that's my talk. As I said, hemp shield, being an industrial hemp product, is not regulated. In fact, the Postal Service has also given us a non-regulated status because there's no safety issues involved with shipping hemp shield. So I'm ready for any questions that anybody would like to give me. Hello?
Hey, David, give me about 30 seconds to queue up the questions. Hold on for one second.
Sir, okay, I'm ready.
Okay, David, first question is, what was the revenue for Hemp Shield in 2013, and what are sales so far this year?
Our revenue in 2013 was $117,000. This year, we're running, about 10 or 20% over that. However, last year was kind of an anomaly in that we had two large one-time wholesale sales, which brought up the sales figure for last year. So this year won't seem as much, but because our wholesale will not really kick in big time until next year. Most of the sales this year were done online, which increased our profit margin radically. The first year that Hemp Shield was on the market, which was 4 years ago, we did $25,000. The next year we did $36,000. Last year we did $117,000.
Did I miss this? And what are the expected sales for 2014?
We're expecting about $150,000 to $200,000.
Next question. What will stop your competitors from developing similar products using hemp oil?
As I said, it is this was invented with myself and a world-class chemist. I'm told that because of our proprietary formula, Hemp Shield is not really amenable to back engineering. So that means that no matter who it is, if they decided that they wanted to make a product like ours, even if it was one of the biggest paint companies in the world, it would take them at least 2 to 3 years to get close to what we have, and that's if they figure it out at all. So we have a chance here to establish ourselves and be the main player, and by the time that these other ones show up, that will mean that Hemp Shield has arrived and be the granddaddy of the whole industry.
Next question. If you can, what was the estimated contract value of MBS and Vial Test? And also, do you have any deals in the pipeline bigger than those two?
I'm just going to say, the estimated contract value of MBS and Vial Test is over $1 million for next year. And yes, we do have some bigger deals that are in process, but I cannot mention them because they are in process and we did not get permission from those people to do it. Some involve wood products companies that I've talked about, and other ones that I haven't talked about.
Next question. What do the margins look like with big retailers versus your other distributors?
Our margins are very, very substantial, and they are equal to all the other products that are in the market. So we're absolutely competitive in terms of price, and our discounts for our retailers, distributors, reps is all built in. So Hemp Shield is competitive with very nice profit margins, and we are very competitive with all the other products. If you actually take into effect, as I said, or take into account the fact that our coverage is so much higher than most other products, it's 450 to 650 square feet per gallon, and that HempShield is a true one-coat process, so that the labor saving is tremendous. We're actually, you know, with all those things taken into account, cheaper than the other products that are on the market. But our profit margins are the equivalent of all the other coatings and things that are out there.
So how does your margins look, David, at the big retailers? We know that they like to squeeze margins. So how would your margins look if you got contracts with the big retailers?
They will be smaller than they are with the small retailers because, as you said, they're the big boys, but they're still not going to be reduced to any sort of level close to our costs. We will still make a substantial profit on them. And because they are not distributors, we treat them, as these big box guys, as retailers. So they get a price that's sort of less than the retailer price, but not a true distributor price because they don't resell it to another vendor. They sell it directly. So our margins are still substantial with them.
Next question, do you sell other products besides the wood finish and deck sealer? And do you expect to expand your product line?
At the current time, beside the wood finish and deck sealer, we also have a line of log home treatment, HempShield log home treatment. And this competes. The main product in the log home market is a product called Permaching, which sells for $90 a gallon, has half the coverage, requires application every year for 4 years. And so we sell HempShield log home treatment for $54 and $59 a gallon. It's a one-coat treatment and lasts twice as long as Permaching does, even after you put it on for 4 years. We do have plans to introduce several other lines of products, including paints and other things that I don't want to talk about right now, but they're definitely in the pipeline, and we are planning to do them.
Okay, Dave, next question. Could you give me a breakdown of your product line? So you got the wood finish, the deck sealer, and the log home treatments. What percentage of revenues are all three separate?
No, it's only two products. The wood finish and deck sealer is one product.
Okay.
The log home treatment is a second product.
And what's the revenue split as far as percentage? How much?
The revenue split is about 90% for the deck sealer and about 10% for the log home treatment. The log home treatment is more of a niche market. However, it's a growing niche market in that these log homes are becoming very popular. And we call them homes because they're certainly not cabins. These are big, big houses that run $500,000 and up, and are getting very, very popular again, which is why we developed a special line just for that industry, and also because of the fact that the products, as I said, that are currently used are so prohibitively expensive and inefficient relative to HempShield.
Next question, what's your anticipated funding amount and what would you use it for?
HempShield is looking for $5 to $10 million to run, basically to cover our staffing costs, which is a minor amount, and to make a major marketing campaigns, regional and national in the United States for the next 2 years. The truth of it is, the products that dominate the market now, such as Thompson's and Cabot's, only dominate the market because they spend millions of dollars every year on advertising. So we need to do the same thing. And that's what we're looking for. All the heavy lifting with HempShield is really done. Our product, we're on the market. Our product development is done. We have production, distribution, fulfillment, and inventory financing already covered. All we need is the money to truly go out there and blast this into the market for the public to see it.
Okay, so the 5 to 10 million you need, a lot of that will go to sales and marketing.
Almost all of it.
So that therefore, if most of that goes to expanding your sales and marketing team, that means your revenues should increase significantly. So what do you think your revenues look like after you expand your sales and marketing team? Say you do this in 2015, you know, what does your revenues look like, percentage increase look like?
Well, you yourself, we had it up on the screen there. The market for decking and fencing is about $500 million a year. If we took 10% of that market, which should be fairly easy if we had this kind of money, we would have an income, a gross income of $42 million. And that's not including all the other potential applications of how HempShield could work. So we really don't know how far it will go that way. But we do know that we can capture that the markets that we have aimed at so far to that degree. And there's nothing to stop us from opening up the whole world, because nobody's got anything like HempShield in anywhere. And we've gotten several major inquiries about this already. One of our companies, Valtest, that I mentioned, already has distribution set up in Canada, because we get our hemp oil from Canada, and the Canadians have really been bugging us because they want to buy HempShield. And next year we will have distribution in Canada also via Valtest. So I can't tell you exactly how much we're going to grow, but the truth of it is I expect us to continue on a geometric progression of sales growth for the next 10 years at least.
All right, David, that sounds great. That concludes our Q&A session. You have any last comments you want to tell our audience regarding HempShield?
Folks, we got a whale. We got the best thing that's happened. We've opened up a whole new category for the use of industrial hemp. And we think that this is the future of what's going to be for building materials. Thank you.
Thank you, David. This concludes the HempShield presentation. The next presentation is 420 Extractions, a privately held company. Their presentation will be at 6:00 p.m. Eastern Time. Thank you.
Thank you. Bye.
To be addressing more the symptoms and signs. So when I look at cannabis therapy versus traditional therapy, some of the new approaches that I look at and I want to make sure that we're focusing on certainly are overcoming the generalizations of providing a differential approach to the interview. And so just because I'm taking a different approach doesn't mean that it's wrong. It might be right and or more appropriate for the client that we're looking at. So it's often looked at as more of an eclectic style and or a client-centered focus. And I think some of the focuses that have been missed is exploring both the disorder and the contributing factors when it comes to cannabis therapy. This new thinking approach and perspective ultimately focuses on the treatment of the disease and the symptoms. And so one of the things that we want to focus on as we're moving through cannabis therapy is getting away from the idea that hemp and cannabis are the same. They really aren't, and they were divided years, if not centuries ago. Hemp has generally, over the history, been used for fiber, textiles, oil, fuel, housing, and cannabis is something that's been proliferated probably since the 1980s and 90s in North America under the medical marijuana understanding and legal licensing. And for that, there's been a little bit of controversy, and I think we can look to the hemp CBD oil. If it's derivative of hemp, it's not therapeutic, it's lifestyle. If it's a derivative of a medical marijuana strain and it's considered to be cannabis, then the CBD is probably therapeutic. So once you can differentiate that, you can kind of start to identify the potential opportunities between not only hemp and cannabis, but between the phenotypes and the genotypes that you see in cannabis, meaning indica and sativa. Indica meaning more relaxing, pain, helps with your sleeping. Sativa being more motivating, also helps with pain, but enlightens you and is good for depression. And what we've seen probably most popular in the recent 10, 20 years of growing has been the hybrid strains, in which you're combining both the indica and the sativa, and then you're focusing on specific cannabinoids that might be of benefit to the patient. So when we start looking at cannabis therapy in some of the past, we can recognize that plant-based medicines have been around for over 5,000 years. They were discovered next to the bodies in burial sites. When we look back even to 440 BC, there were some Egyptian groups that were using cannabis steam baths. Even back into 1753, we officially classified cannabis and marijuana in the Merck manual, which is probably most prominent in the pharmaceutical industry. Back in 1899, they identified certain characteristics and or recommendations that were appropriate for the use of cannabis, including hysteria, delirium, epilepsy, insomnia, pain, migraines. Matter of fact, extractions were prescribed to Queen Victoria. And one of the things that you want to look at is how are states prescribing cannabis. In California, you can be prescribed cannabis for almost anything, including menstrual cramps or a surgery that you might have had 20 years ago, and it's based on the discretion of the physician. So when you look at Arizona, Arizona only has 16, now 17 with PTSD being added, conditions that you qualify for. So from a business standpoint, there's a lot of specific details that are beneficial to an operator and an owner being able to know these things and how they go about setting up their business. So one of the things that we've seen, at least with the pharmaceutical industry, is that they're moving more towards synthetic, the benzodiazepines, the Valium, synthetic analgesics, painkillers, as well as medications that are going to knock you out and preparing you for surgery. Those often aren't the most safest medications, and in fact, we're still not necessarily sure what anesthetics do when they put you under before surgery. They understand that they dull the pain and or block the pain off, but the process in itself isn't fully understood, and there's a lot of risks to it. So when you go into the pharmaceutical side, there are significant side effects, including overdose and death, the addiction, the medical complications that can come out, and often you're treating more the symptoms than you are the disease. And so with cannabis therapy, one of the things that we try and do is treat both the symptoms and the disease in a harm reduction model. So how do we do that? We go about it by growing medicine. And this is a picture, an example of a vegging room in which we're using fluorescent lights, probably close to 200 or 300 plants there. This is a Colorado operation that we set up a couple of years ago. There's a high-pressure sodium grow. These are probably more in the flowering stages of the plants. Another smaller grow in Colorado that we set up a while back. These are pretty traditional grows for anywhere in the range of 1,000 to 3,000 square foot. An LED grow is a little bit more state-of-the-art. There's a little bit less ducting that's required. The lights are a little bit less taxing on the energy requirements. They don't heat up quite as much. They last a little bit longer, but they're still a new emerging market. So when you get into cultivation on a larger scale, you really want to start looking at how can you improve operations, and one of the ways is by scaling up your operations to larger facilities. I think this picture demonstrates about a 4,000 square foot facility that we're working in, and that's small in comparison to this day and age. So where are we with cannabis therapy in present day? Really, we have to look at terminology. Again, we get confused between hemp and cannabis, and we often get confused between THC, CBD, CBN, and a lot of the other cannabinoids that are out there. And so one of the things that we want to focus on is terminology, making sure that you're using the correct pronunciation and or correct usage of words. Marijuana and pot have really been discouraged as far as terminology. Cannabis is the preferred term, and it's the legal term of the product. So often I'm trying to refer to things as cannabis rather than pot or marijuana or any of the derivatives. And If we can focus on terminology, it really demonstrates our competency and then demonstrates again to the public that we know what we're talking about. When people are referencing pot and marijuana and cannabis and all these different derivative names, it makes the public confused. And we need to have one clear terminology that we give and provide to the community. And so some of the other things that I'm going to touch on real quickly are a current list of medical marijuana states, kind of identify the states, the 5 that were done in 1990, and then the progress that we've seen over the last 15, 14 years of states coming online. There's some issues with licensing and funding and testing that I want to talk about briefly. Obviously, with cannabis therapy, you want to be talking about potency and the amounts, and you want to talk about options that are available. It's not just flower product that's available anymore. There's oils, there's extractions, there's concentrates, there's all types of new technology that's coming into the industry, including transdermal patches and gel caps and time-release coatings and things of that nature. And so when you talk about options, this is your industry, and the more options you have for your patients, the better business you're going to end up providing to them. And labels and packaging are something that's really lagging behind, and so I'll touch briefly on that. I'll talk a little bit about the legal and regulatory issues, and to me, really a critical component, the doctor-patient relationship, the doctor-dispensary relationship, and then the patient-dispensary relationship. And then I want to talk a little bit about the future, the Cannabis Genome Project that we're currently working on, some of the emerging markets and the trends that we see, some of the new technology, and the new issues that we're being confronted with, including banking and taxing issues. And then, obviously, the big elephant in the room, the U.S. government. So moving forward, where are we today? Today, we're seeing facilities such like this that we're building in Tucson. It's a 50,000 square foot greenhouse. Generally, from our production standard, we can do about $8,000 for 8,000 pounds of cannabis per year. If you put that on the market at about $2,000 per pound, that's about $16 million. The facility itself costs about $2 million to build, costs about $2 million in expenses to run the facility per year. So if you back out the $16 million harvest and the $4 million initial entry in 1 year cost, you're still at about $12 million a year as far as your ROI. So return on investment is huge. People are scaling up. And this is an example of a facility that we're building, and this is one of 4. So we'll have a total of 200,000 square foot in Arizona. A picture inside kind of demonstrates the massive scale. You can see a small person to the right. Yeah, it's about 45-foot ceiling, about a 290-foot depth, about 80-foot wide. So all of these facilities are now state-of-the-art, including 50,000 square foot greenhouse light deprivating tarps. These tarps activate automated through the entire system and allow you to do 4 crops per year, regardless of how your cycle is in lights. So if you're in the winter, you supplement with a light. If you're in the summer, you're going to light deprivate and restrict the light. So some of the things that we've seen in the last 20 years are these 23 current states of medical marijuana states that have come online. 5 go back to the 1990s. And if you look, you can see that Alaska, California, Maine, Oregon, and Washington all have been medical marijuana states. There's a big difference between a medical marijuana state in which identifies individual rights, which is really considered to be a compassionate use state, and a dispensary state, kind of like California and Arizona, which identifies entities. So if you first can understand the difference between an individual and an entity, then you can look at these 23 current medical marijuana states and recognize that some of them have entity and would be considered to be a dispensary state, and others are considered to be individual states and have really not proliferated from a dispensary standpoint. They haven't provided structure for the state, and they now are encountering huge problems. Let's look to California. California is not a dispensary state, doesn't have licensing for any of the operations, and it's not state sanctioned. It's approved for cultivation in a collective style. It's not a dispensary state. You can't go to the state and say, I want a dispensary license. So with that in mind, you can look at some classic examples. Let's take Colorado, which went legal in 2000, and Nevada, which went legal in 2000. Colorado was well developed in 2014 with both a medical and recreational program, a non-integrated model which allows for independent operators to come in and run just an extraction system, or run just a testing facility, or just run a cultivation facility, or a standalone retail. Nevada, given the same time frame, has only focused on individual rights, whereas Colorado focused on the entities. They wanted to make sure that licensing was in place for Colorado to be able to license and move forward with entities, corporations, LLCs, recognized as individuals who have cultivation rights. Whereas Nevada, boy, they kind of just missed the boat. 14 years later, they're still now trying to figure out dispensary laws. And it's so restrictive now that they're really encountering quite a few challenges. And for those of you that have either gotten your hat into the Nevada market, or at least talked to some people that have worked in it, you recognize, boy, Colorado in 2000, Nevada in 2000, two totally different statuses of their medical marijuana program. And if you look back to the individual and entity versus individual, you can recognize clearly that Colorado was focusing on the entities and Nevada was just focusing on the individual. They decriminalized marijuana. 10 years later, they got a dispensary medical marijuana program going, but they never asked for LLCs, for companies to be able to have the right to open up until just this past year or so. So the reality is you need to look at the states in which you're focusing on, and some are more lucrative, some are going to be more speedy to market, and others are going to take years to develop. Florida is a great example. We all thought that Charlotte's Web's medical marijuana program would be live and going forward in January. Well, there's lawsuits now that are preventing that, and it looks as though we're probably not going to be moving forward. Proposition 2 in Florida is getting a lot of resistance, and again, we may or may not get enough votes. And in Florida, you need the majority of the vote, which I believe is a 66%. So that's a lot of people voting in favor of medical marijuana. Currently, we're probably at about 58 to 60%. So Florida may or may not go off as a vote for yes in medical marijuana for 2015. So we talked about the different models, the individual versus the entity, and we kind of discussed Colorado, California, Colorado, Arizona, Nevada. Washington is really kind of doing something similar. They've transitioned from an entity or from an individual state and moving into an entity. They're going to recreational, and they're really dismantling the whole entire medical marijuana program. There's a lot of resistance right now, and they may very well move forward under both medical and recreational, but all indications are that the medical marijuana program is dysfunctional and out of place in Washington, and the recreational one is the one to be moving forward. So when we really look at licensing, one of the critical things is reciprocity of medical marijuana cards. There are 3 rules to follow: purchase, consumption, and possession. In Arizona, you have the right to consume and you have the right to possess. But unfortunately, Arizona does not allow out-of-state card holders to purchase. So it's not a good thing for Arizona, because we have 7, 8, 900,000 medical marijuana patients in North America that could come to vacation in Arizona and unfortunately couldn't purchase any medicine. So when Nevada looked to other models, they came to Arizona. And one of the things that they changed was this reciprocity rule. In Nevada, you can now purchase, consume, and possess with an out-of-state medical marijuana card. Huge for the tourism industry, huge for any owners and operators who want to have a lot of foot traffic in the facility, because now any medical marijuana patient throughout the whole entire United States can travel to Las Vegas, take their medical marijuana card, and purchase, consume, and possess, all under a legal authority through reciprocity of Nevada law. So again, when you're looking at licensing, location, location, location. Your zoning is going to be critical. The city and county are going to be either favorable and easy to work with, or they're going to be deceptive and very difficult to get approvals through. We talked about, again, the qualifying conditions and the differences between states. California, any condition determined by the doctor. Arizona, there's really only 17 conditions that you can qualify for. So funding, that's why we're all here, right? There's private, there's public, there's loans. We've talked with the majority of the lenders that are out there, and there's a variety of different models that are out there. And certainly, if you can get private money, that's the most desirable. Public money is very difficult to lend right now, seeing that it's a controlled substance in Schedule 1. No public company due to SEC violations can get involved. So the majority of the public money is going into non-cannabis related things, not the selling or the growing. And or they're getting loans from individuals. And so that's the one trick to the public loan is that public companies can loan private companies the money. And so the problems that develop, obviously, are the banking issues, the tax issues. The 280E is obviously a big issue, and we're all fighting for it. Harborside and Steve D'Angelo is one of the ones that probably is centered behind that. If you don't know about it, you may want to look into it. There are different profit structures in regards to how you set up and what state regulations will approve. Some are nonprofit, like Arizona. Others are profit structures, like Colorado. So you have to set up things in different ways, including holding companies and management companies. There are a variety of different websites, much like this one that we're on now, talking about funding issues, and they're doing a great job at crowdfunding and getting groups of investors together and getting groups of folks together. So kudos to them for taking advantage of the technology and time frame for the business, because this is critical for funders to meet operators to get licensing. So one of the things that seems to be a hot button right now in the industry is testing, how it's tested. We do 3 different types of testing: liquid chromatography, gas chromatography, and near-infrared spectrophotometry. If you don't know them, look into them. They're all standards in the industry. What are we testing for? Generally, we're testing for THC potency, but now that we're doing extractions and solvents, and we're using things that might be introduced into this that aren't necessarily organic, we're testing for pesticides and solvents and microbiological contaminants. But we're also looking at cannabinoid profiles, terpenoids, and the ratios that are there, because often those are the ones that are going to give us the ratios for treatments for disease. So once we've tested stuff, we have to look at potency and the amounts, and often flower is tested orally. We smoke it, and we don't look at test results. We're not familiar with 18% potency of THC. So when we start to extract oils, we really have to be very cognizant of the test, because we're concentrating it and we're making it much more strong for the end user. And if we're not communicating the strength, we're not doing the patient an accurate dosage due diligence. And so edibles right now are very difficult to not only establish what content of THC is, but being consistent over a period of time. And so often the big challenges are calculating it. So I've done a little formula. If your oil is 60% THC and your extraction yields 100 grams of oil, you first need to convert it to milligrams, and then you need to multiply that by 60%, which gives you a percentage of active THC in your grams. And so then you can communicate that on your labels, and you can effectively provide a dosage recommendation and or label for your patient. So some of the things that we're talking about often in these labels are the route of administration, whether it's smoking, lotion, or digestion. These are issues that we need to be able to demonstrate competency as we're communicating these potency and the amounts on the labels. So first pass metabolism has been a big issue, and often if it's digested in the edible form, the majority of your concentrate is not getting THC, is not getting to your body. It's getting metabolized in the first pass, whether it's in your lower, upper or lower intestine. It's not being effectively applied to the patient. And so we often look at different ratios, different potencies, and different methods of delivery. And so smoking isn't always the only method. There's lotions, there's transdermal patches, there's gel caps, there's sprays that we can use. So often some of the things that we're talking about with the potency and amounts in cannabis therapy are side effects. There's very few side effects, but you want to be aware of them, and most of them can be avoided by appropriate labeling. So sourcing your medicine, obviously, is critical. Again, we've talked briefly about the difference between hemp and medical marijuana. There is a difference. Make sure that you're clearly communicating what your source product is and where it's coming from. We've talked about the ratio of cannabinoids. The standard dosage is anywhere from 10 to 25 milligrams. Colorado is moving to a standardized 10 milligrams per unit. Generally with children, it's a little bit more questionable in regards to how you dosage. There's several different formulas. They basically, if you titrate to tolerance, and you do a calculation based upon kilos of weight to milligrams per dose. and we can talk about that afterwards. Feel free to contact me if you have questions. So one of the things that we talk about in cannabis therapy are what options. Everyone thinks that there's just flower product that's out there, and that's not true. There's oils, wax, shatter, crumble, hash, heat. There's lotions and creams, pills and gel caps, and even nanotechnologies that are coming out that are delivering it more streamlined. So types of extractions that we currently use, you've all have heard probably Rick Simpson, it's the RSO or the most potent form treating cancer. Less potent is the CO2 oil, often it's based on temperature and pressure. There are some standards in the industry like N-grade butane, propane, hexane, alcohol are probably the most common extraction. But one of the ones that's probably the most frequently used is butter or oil extractions. But there are ice and water extractions. Most of the newer ones are all closed loop. You generally want to make sure it's an approved solvent, butane, hexane. Those things are all considered to be illegal in the state of California. California is a solventless state. So make sure that you check your laws. So some of the things that we're making nowadays are cannabis oils. We're making gel caps. We're making transdermal patches. And some of these things that we're bringing to market are new and really deserve very clear and concise label and packaging, because they can be misconstrued as products possibly for children and or non-medical marijuana patients. And so some of the things that you want to focus on the labels and packaging obviously are the percentage of THC, serving size, serving per package, net weight, state disclosure for your MMJ, warning information, nutritional facts, ingredients, consumption advice, lab testing facility that you use. You always want to use a state-certified lab test, and then the dispensary license in which you're manufacturing it. Some of the things that they're looking at in regards to packaging are really the child resistant packaging, the clear materials. They want to be smell resistant, crush resistant. Often they're looking for recyclable and something that can be branded and marketing specific to their own labels. So I'm not going to talk a whole lot about regulatory and legal, but be aware that felonies can exclude you in the industry. Residency for licensing can often be complication. Washington requires residency. Colorado requires residency. Arizona does not. So again, for operators that are wanting to get into the industry, you need to look specifically at what regulatory residency requirements. If you have a DUI and or the DUI requirements for drugs, should be a concern for you, because your employees are going to be operating vehicles and working in the workplace and potentially could be subject to a DUI. There's tax implications, as we discussed, and a lot of people ask me, can I get licensed as a cannabis therapist? Well, right now, no. It's a Schedule I drug, and no one can be licensed to do any therapy for that. So training and education is going to be key, and moving forward, we'll see some programs that will probably develop. So I wanted to talk about the doctor and dispensary and patient relationship, and really that's probably a whole nother discussion about cannabis therapy, but some of the dilemmas and or challenges that we run into are the primary care doctor is not the one who often is giving you the medical marijuana recommendation. So you instantly have this firewall of communication between your primary care physician and your medical cannabis treatment, because 80% of all patients are going to specific evaluation clinics that have very little, if any, communication with the primary care doctor. So there's no disclosure going on. There's no looking at prescriptions and cannabis and seeing how we can reduce in a harm reduction way the patient's medication consumption. So one of the biggest concerns for everyone is the pain centers and their limited treatment options. If you're a medical marijuana patient and you're consuming cannabis, more often than not, if you're involved with a pain clinic and the pain clinic is managing your prescriptions, they'll cut you off. So it's a huge problem, and we've had some very frustrating times having honest discussions with the doctors at those clinics. So, once you go public record with your medical marijuana, it becomes public record to your employers, to your legal counsel, and to other folks. And so for a lot of people, they would prefer to keep this private, and it continues to be a big problem for cannabis therapy. So moving on, there's a cannabis genome project that we're currently involved with, and it really has three components. And I'm just going to go through them real quickly. It's the identification of the phenotype of the genetic cannabis. It's identification of the phenotypes, and then identifying markers within the phenotype that are therapeutic. Removing certain characteristics like THC, they're undesirable, and then developing cell cultures so that we can mass produce the plant. And so generally, we can talk more about the Cannabis Genome Project, but there's several groups that are moving forward on this, including our group, And we'd like to be able to have some resources to be able to unify the research project and identify regions so that Northwest, Southwest, Northeast, Southeast can continue to proliferate in their research but not compete. So the emerging markets obviously are, current markets are Colorado, Arizona, Washington, Mexico, Oregon. The next emerging markets are obviously Illinois, Florida, Nevada, New York, Hawaii, and others. For me, California is kind of an off state right now. It just is too regulated, too unregulated, and under scrutiny by the federal government. So until they develop a medical marijuana program that's consistent with the dispensary and not individual use, we'll probably stay away for California. So some of the future technologies that we've seen in this industry are obviously the nanotechnology. They're smaller molecules. They're easier to absorb. There's definitely new machines out there, from extraction to infusion to cell culturing, the storage of not only edibles through nitrogen packaging, the removing of oxygen, the limit of light, and then the duration of time on a shelf has all been extended because of these new technologies. So there are some things that have helped. Certainly colloidal silver, kerosene mist is one of the advances in the ability to duplicate strains, and we can kind of talk about that at another time if you want. But there's a lot of new technologies, from processing to air handling to water quality to testing to packaging, even to the route of administration between oral and sublingual and topical and transdermal. And there's just a lot of things to bring into this technology, including the most exciting thing I think right now, which is the supercritical CO2 extraction machines. These are phenomenal machines and ultimately can extract a flower to an oil in anywhere from 2 to 8 hours for a kilo of product or material. They're averaging anywhere from $40,000 to $80,000 a piece, with compressors and chillers in excess of $100,000 often. So testing equipment, these machines alone are $30,000 to $50,000. They require samples and lab people to be looking at the equipment, and so it often can be expensive to set up. Some of the new issues that we're looking at, I'm just going to briefly go over because I have another spreadsheet I want to talk about real quick. The legal rights, United Nations status, basically the Convention on Psychotropic Substances, was signed in Vienna in 1971, which prohibits any international trade of cannabis. That needs to be addressed. The rescheduling of cannabis needs to be readdressed. Currently in jail, we have tens of thousands of nonviolent drug offenders that need to be, this is an issue that needs to be addressed, and those really should be released, put into treatment, and tracked for success. If they don't have success, provide more treatment to them. But currently, jailing people for nonviolent drug offenses doesn't seem to be the appropriate treatment modality, and most professionals in the treatment facilities would agree that treatment should come first before incarceration. So I don't want to talk too much about all these other issues because there are a lot of them, but one of the things that I do want to talk about that's really exciting is the opportunity that we have with High Plains Research. We have teamed together with High Plains Research to come up with product offerings that we would like to introduce. And so 420 Patients, our caregiver and patient network, has teamed together with 420 Extractions to do extractions in edibles and oils. And so what we're looking for is really to build a long-term relationship with an investor, agreed to provide turnkey solutions for a variety of oils that need packaging and controlled substances in the state programs. So for example, Colorado, Arizona, those states will all have to have specific kitchens and extraction systems in there. So we want to define a contract that works for both companies and or an investment or a loan. We're looking at maximizing the marketing initiatives to achieve our market dominance. 420 Patients works to push the quality of our products throughout the United States. We're a national caregiver network. So once we get these products up online, they're going to be available nationwide. And keep in mind, these are vaporizing pens. This is not the extraction. This is what the extracts go into. And so we really want to work with each state to bring this technology to all of the medical marijuana states that are out there. We estimate that the market is going to be about $2 billion in 2014. About $750 million is just for recreational use. So we've developed a couple of different alternative vaporizing units. One is called the Puffin, and the other is the Be Well Medical Alternative. The Puffin is an actual vaporizing system. Our manufactured suggested retail is about $50. Here's a picture of the vaporizing pen. Has quite a few state-of-the-art features, one of being a micro USB charger on the bottom. It has 2 gigabytes of onboard memory. We can use marking. We can put logos on there. We can track someone's consumption. We can watch, learn, and compete and buy all through this handheld vaporizer. It's all state-of-the-art, has a see-through viewing chamber. All materials are either glass or industrial grade. We have 4 different varieties for wax, oils, and herb, and then we have a metered dose. There are a variety of different colors, and we have changeable drip tips that you can see that were available to modulate. So we have 4 different units. We have the basic one-shot, we have the one-shot plus, we have the one-shot limited, and then we have the metered dosage. And so all of these are available, and we're going to be going to market January of 2015. Again, we're looking for funding sources to do the expansion. So we have, just for the basic one-shot, it's one color. It's the cheapest model that we offer. It has a single dose chamber. It's easy to reload and clean. It has a pulse wave modulation, which allows for consistent flow of electricity to the modulation unit. It has a rubberized grip for better holding, and it has a ceramic chamber for better burning, and it has a glass path to the vape, which means that there's no plastic or metal that's involved. It's all glass, and it's got a lifetime warranty. So same kind of product with the one-shot limited. We kind of add some skins and some variety of colors to them. The one-shot plus has a single dose chamber. It also has a 2 gigabyte memory. It has an LED light on it. It's obviously, again, easy to reload and clean. Has variable power control, so you can control how much electricity or volts are getting to the atomizer. Again, it's got the rubberized grip, the ceramic chamber. And really, these units last for about 2 weeks from per charge. One of the most exciting ones that we're working on is the metered dosage. We're going to be launching this in Canada, consistent with Health Canada's medical marijuana program, probably in the middle of 2015. We're in the process of negotiating with 3 large providers in Canada and have contracts that are currently being negotiated. So it's critical for us to get our funding in place and start production. And so with that in mind, this being one of the most expensive products, the metered dose, is going to be the model that's probably going to be relevant to the medical marijuana community, in which we're looking at testing consumption and collating some data. So every 5 months we're going to come out with new colors. Currently we have green, lavender, yellow, red, and black, and we have some dynamic packaging, and we think that we're leading the market in regards to this. The packaging is a 2-part assembly with a see-through clear front and printing. Each color coding and model identifier with unique SKUs. They're ready to use right out of the box, so you can vape now. It includes 1 meter long micro USB charger and a cable, brush, pipe cleaner, and then we've got all the packaging is made from recycling materials. We can do advertising that's loaded onto the vape pen, so when you plug the vape pen into the computer, it will pop up a screen, and we can control any advertising. There are user manuals that will be loaded and available on the vape pen. There's internet gaming capabilities in the future if we choose to provide coupons or discounts, or we have some modules on our phone that can be used. We can collaborate with the pen and the phone. It's, again, a lifetime warranty. We'll replace them at any time. So one of the cool things is the onboard marking. We have the packaging, obviously, is going to be state-of-the-art. It's all going to be color-coded, easy to read, easy to understand. Again, it's made from recycled materials, and it has the gaming capacities that we're looking at. Some of the cool things that we've really focused on over the last 8 to 10 months is packaging. The oil packaging and assembly has been a challenge for any vapor pen oil distributors, and so what we've done is set up a system in which we can just brand it your way. Basically, we can do custom graphics. We can do pedestals, decals, glass cartridges, seals. All of those things can be included depending upon what style of packaging you want. We can do 1 gram to half-gram cartridges. Each package is customizable. So when it comes to filling them, this is the part that we're really excited about. There's very few, if any, automated fill lines that are out there for vape pens, and we've developed one. And so what this really does is drive the industry towards vial standardization and allow for half-gram and full-gram dosages in a larger scale mass production. Most people are hand filling them right now. We have a high-speed, repeatable weight, calibrated dosage system that's designed to fill specifically the puffin and the B-well oil cartridges. So with that in mind, the system is very turnkey. We have an oil cartridge assembly press, which puts together everything, has 4 stations, 2 decal centering nests, and then 2 child-proof snap features. The manual is included. It's all made of anodized aluminum, and pretty much you can assemble a couple of packages per minute, 200 pieces daily. And we created an electrical architecture that supports product line expansion both on the web and the hardware. So as we continue to expand with technology, we have processors that can control and expand to the internet and whatever we see from trend-wise. We have one of the largest power platforms, 3.5 volts, in a vaporizing pen, which generally lasts for about 2 weeks. It's a super fast response time in regards to charging. There's LED lights that are on there as well, and we're very excited. The B-Well medical alternative is really the one where we have the meter dosage, and we're working with Health Canada right now to produce this product in the market because Health Canada is very focused on the meter dosage. They want to make sure that their patients aren't getting more than they should be recommended. So the B-Well medical alternative really is one of the higher premiums and maybe more in the medical market that would be good for and/or a replacement to, say, nebulizers or some of the other breathing instruments that are currently in the pharmaceutical industry. So where does that take us today? It's September. We're basically presenting to Vape World in October. We have an appointment with Vape World. We're looking at probably about $100,000 to $150,000 order from Vape World. They're interested in putting about half down, which will give us about 2-3 months to ramp up in the month of November and December, and a part of January, which we tentatively look at to be our release. We're looking for an investor to come in and provide the funding initially so that we can move forward, with February 15th being the One-Shot Plus, the second model being the release. The third model would be released in March, and then we would take a short brief April, May, June to celebrate the products, do some due diligence on the effectiveness of the products, and focus on expansion. And then we're going to be starting to release this summer in the Canadian market, hopefully if everything goes through, the meter dosage and the automated filling lines. So with that in mind, we have a lot of marketing due diligence that we've done, driving sales by driving the market. We feel that these focused areas would probably be the best area of promotion via the retail stores, e-commerce, cross-branding, and entertainment endorsements. Advertising via the print trade and consumer publications. Public relations, obviously, the social media, using 420 patients, using the website, getting out to the trade shows, being at the special events, and looking at sponsorships and endorsements. Obviously, the social media is something that we've been focusing on, and the brand licensing is something that we want to continue to focus on in regards to the expansion. So when we compare our model to other models, we can look at some of the manufacturers that are out there in the competitive landscape of vaporizers, and we recognize that, we might be in the middle from a traditional cost standpoint at $200 to $300 for a vape pen, but we've developed a line and a model that's $50, and we developed a line that's about $300 or $400 and the models work. They work consistently among the pricing profile. So whether you're buying the 50 or the 300, they're all going to be priced at the same. And so at this point, you can compare and contrast between vaporizers, but we're one of the few that's actually manufactured in the United States. We're built in Boulder, Colorado Springs, and founded in Colorado. So at this point, I'd like to say thank you and appreciate bearing with me during the pace of presentation of both of these exciting opportunities. And so at this point, I'd like to hand it back to Derwin and allow for anybody, if they'd like, to ask questions.
Thank you, William. Give me about 15 seconds. Let me queue up questions. The first question is, you have many products and services. What does your hierarchy of products and services look like? What is the percentage of future revenue breakdown of those products and services?
I think it's a great question, and the reality for us is that licensing is what generates revenue. So we need to obtain a license, which we've done in Arizona, and we are currently a medical marijuana dispensary. Generation revenue generally is based upon cultivation. If we have a greenhouse that's up and running, you can basically divide how many square foot you're going to be cultivating and divide how many pounds you're going to be harvesting, and you put those pounds onto the market. In regards to the extraction generally is a side byproduct. We don't actually take raw product or flower from the harvest. We're taking the trim and the material that's generally a waste product. So when it comes to 420 extraction and the profitability, we generally are vertically integrated with a grow facility, and we get all of our product from the grow facility, and then we extract the product and we put it onto the market. So outside of the operator's cost and the machinery, there really is very little, if any, cost. It's more on the operators, the experience, and the machinery. What are you doing? So profit centers for us really are free consulting initially to help people get set up and navigate the territory, buy the right machinery, and get trained and qualified. Two is to operate and continue our own dispensary licensing that we have not only in Arizona, but partnerships and expansion within Nevada, Florida, Colorado, Washington, Oregon, and the emerging markets that we see. And really the third part is continuing to be on the edge of developing new technologies. There's very few people that are doing transdermal patches right now. They're doing extractions to the extent that we are, that are separating cannabinoids. So the general answer to the question is all of the generated revenue comes from cultivation. And in our model, it's vertically integrated. So we grow our own, we extract our own, and then we're generally looking for partners for the retail component of it. And that's where our expansion model will look to Colorado owners and operators to partner with us so that we can provide a capital, technology, resources, and then provide products to folks that may not have the capacity to open up a cultivation facility and do the extraction. So again, the majority of the revenue that's being generated is in a vertically integrated model based off cultivation.
Next question, William. The rollout of the state legislation chart that you showed didn't have any states from the South. What's the obstacle in the South?
You know, there is a opinion in the South that they just are not cannabis friendly in the front door. So if you ask them politically, are you okay with cannabis, they'll probably say, oh, well, you know, we're okay with it. But in the back door, they're lobbying to restrict cannabis. And we're not necessarily sure why. We suspect that the big pharma, big tobacco might have their hands into the southern states a little bit more than some of the northern states. Generally, the further west you get in North America, the more liberal you are in regards to the cannabis laws. So we're not really sure why the southern states aren't necessarily embracing cannabis, but we have to look at not all the southern states because Arizona is a southern western state, California is a southern western state, and so it's really more the eastern southern states that just haven't gotten on board, and a lot of it is Republican.
Yeah. Okay. Last question. What is your desired funding amount? And in summary, we know you kind of briefed over it, but in summary, what will it be used for?
If I heard you correct, there are two parts to the question. What's the amount?
Yes.
And then what was the second part?
In summary, what would it be used for? We know you kind of touched over it a little bit, but just more specifically, what would be your desired funding amount, and what would you
Gotcha.
use
We currently are funded for our Arizona operations. We worked with a hedge fund and received a couple of $1 million, and we are set for Arizona. We're currently in a vertically integrated model. developing cultivation, extraction, infusion, and retail. What we're looking for is partners to strategically implement our systems in the states that are emerging right now. Certainly Colorado is not an emerging state, it's a functioning state. So we'd like to purchase a license in Colorado. Same with Nevada, same with Washington. We'd like to look at the emerging markets in Illinois and Florida. How much do we need? That would depend upon the group that we work with. We would prefer to work with one large group that has the capacity to say, we got $20 million. Here's $4 or $5 million for Colorado. Here's $4 or $5 million for Washington. Here's $4 or $5 million for Nevada. Give us a prospectus and a business proposal, and let's get started. So that's really, we have to figure out who we're working with first. We probably would prefer not to have to strategically get involved with different groups in each state. So if it's a large group, we're looking for tens of millions of dollars to continue to move forward. The reality is when we're generating $15, $16 million in cultivation, we're not asking for all that much. $4 million probably gets the state up and running from a whole vertically integrated retail, extraction, cultivation system. So to answer your question, it's kind of hard not knowing who is asking the question, but we would prefer to work with a larger hedge fund or a deeper pocketed investor that has, more than $1 million. $1 million really just gets us into one state and only gets us in the extraction. It doesn't allow us to do the cultivation and really move forward under the scale and scope that we need to be competitive in the recreational and or medical models. So, $4 million per state is probably what we could go for if we had an individual investor that wanted to get on board. We're probably looking at the larger expansion of branding our product nationwide and looking at global expansion as well. So those questions probably should be more specific to the group that we're talking with. But we're willing to consult with smaller groups, work with larger groups, and or joint venture with a hedge fund or somebody with deep pockets.
Okay, well that concludes our Q&A. We really appreciate your time, William. Any closing comments?
I want to say I appreciate, the hard work that you put together, and, I appreciate everyone out there who logged in, and if anybody has any questions, by all means, feel free to call me. My number is 602-332-0748. I'm readily available through the website. You can check my LinkedIn profile, William Jameson, or reach out to me at one of my websites, 420 Patients or 420extractions.com. Thank you all again, and have a great day.
Thank you, William. Next presentation.
All right, whoever.
Next presentation is in 4 minutes. Alan Brockstein, CFA. Thank you for attending the Cannabis Investor Webcast, where cannabis companies increase their liquidity, awareness, and exposure to individual and institutional investors, cannabis entrepreneurs, media, and consumers. We would like to thank our sponsors, American Green Incorporated, and Indo Expo Trade Show, which will be held in Denver, Colorado, November 15th and 16th. Website address is www.indoexpoco.com. Again, www.indoexpoco.com. Our next speaker is Alan Brockstein, founder of 420 Investor. I will now turn the presentation over to you, Alan.
Yeah.
Okay, Alan, are you on?
I'm on. Can you hear me?
Yes.
And you're seeing my screen, right?
Yes, we can see it.
Great. Okay, well, I want to thank Derwin, first of all, for setting this up. It's been a great day. Hopefully you're still with us. Some of you will be watching this on replay, but got one more coming up tonight that I'm excited about right after me, and that is Dr. Marlon Fuller. So stay tuned, a good finish. So we're going to talk about capitalizing on cannabis, which is, I'm sure, why you're tuned in tonight. And I want to share an idea that I've been thinking about for the last few months, which is something that I've called the second wave. I have a disclaimer. Basically, you can't sue me for whatever I say tonight. We'll move forward. A little bit about myself. I come from an investment background. I've been a investment professional for 28 years, earned my Chartered Financial Analyst charter more than a decade ago. And I jumped into this sector in early 2013 quite by accident, and ended up going full-time earlier this year after having started 420 Investor in exactly a year ago, actually, in mid-September. So that's pretty much my background. If anybody has any questions about my background, I'm pretty easy to find on the internet. I'm on LinkedIn. That's probably a great place to find me, or Seeking Alpha as well. So our agenda tonight, breaking it into about 6 pieces, and we'll save plenty of time for Q&A at the end. But first we're going to start off kind of where we've been, then talk about 2014, then talk about the second wave concept. I'll share a couple things that you can look for, and then conclude before our Q&A with just a look at some catalysts which are ahead. So let's jump into it. The first thing is, I'm assuming that most of you on this call know at least a little bit about the sector, but pardon me if I go a little bit slow, but I want to make sure we're all on the same page. So the whole idea of marijuana stocks began in 2009. It was a close race between 2 companies, MJ&A and Cannabis Science, and they came out within days of each other earlier in that year. And it was a pretty quiet market from what I understand until the elections in Colorado and Washington in late 2012, and that created a lot of speculation. In early 2013, at that time there were a handful of names trading, maybe 10, 12, but throughout the year we saw a bunch of new names appear through reverse merger. We'll talk about that, but we ended 2013. I've heard different numbers. My recollection is probably about 25 names that were technically considered in the cannabis space. This year, as we began, obviously Colorado was about to flip legal on January 1st, and that was a huge game changer for the industry and, as far as we're concerned, for the stocks as well. And it created an effect of, now we have over 250 companies that purport to be cannabis. They're not all first wave, but that first wave was really just a handful of companies. And so there were a bunch of problems with these first companies. The first thing was their biggest asset for the most part was really their cute tickers. A couple of them that stand out are hemp and MJ&A. One of the things that I discovered when I started to look into this was that they had very poor governance. What that means is the shareholders were kind of forced to trust people who really didn't have evidence that you should trust them. And we're talking about no rights of voting and all sorts of disclosures that were missing. And that gets to the third point, a lack of transparency. It was really hard, or it remains hard actually, in many of these companies to find out what's going on. Many of them trade on the pink sheets. They don't file with the SEC. So these are some problems that were common among these companies. Another issue that arose was that their business models were not clear. They changed a lot. They would say that they're going to do something in Panama or something like that, and then a couple press releases later, they never mentioned that again. So really unclear how these initial companies were ever going to make money for their shareholders. And certainly a lot of them weren't even related to marijuana. One that stands out would be hemp. I mean, they specifically have gone out of their way since beginning trading in 2011 to say, well, we're not a marijuana stock, we're a hemp stock, and but that's not something that people have understood. And finally, the fundamentals, and I'll touch on this, have been just terrible for these companies. Some of them have been around for 5 years. They're still not profitable. Their revenues are minimal. And then the ones that we'll talk about, they actually have been in decline for the most part. So that's what I mean by weak fundamentals. So basically the first wave, you had just a bunch of penny stocks that weren't doing anything, but they were attracting some speculative interest. So, sorry, there we go. To pick out 4 of these first wave companies, I already mentioned 3 of them by ticker, but CBIS, Cannabis Science, Hemp Inc., Hemp, MedBox, MDBX, and Medical Marijuana Inc., MJNA. This is a chart going back in some cases to 2009. I'm not sure why the MJNA one doesn't get picked up there, but you can see that the trading in these stocks has been very erratic. You get these spikes and retractions, but at the end of the day, these stocks really haven't done that well, all things considered. I mean, we're in the middle of a boom in the industry, but it really hasn't translated into much for these first wave companies. And you know, another way to look at it is look how high they've been and look where they are right now. So I know the stock prices, you know, can get ahead of themselves, but clearly there's not a lot of confidence in these names as being investable businesses. So I mentioned about the fundamentals, and this is a little outdated, but it continues to be the case. Product sales for these companies was pretty minimal, and MedBox had a market cap in the billions, so $5 million is pretty minimal from that perspective. And most of these companies had negative cash flow from operations, and the one thing that was pretty consistent was the share count just keeps going up. That's called dilution. So not a lot of positive fundamental information there. MedBox, there's been some big changes there. I'm not really trying to beat on the company, but just to tell you what's going on, their year-over-year sales are down like 80 or 85%, and the company, the original founder and the guy he brought in are out, new management's in, and if you listen to their conference call, you'd understand that there's not going to be a quick turnaround there. So basically rebuilding that business, and even to this day, at this depressed price, it's still worth about $400 million. Hard to believe for a company that's done, I think, about $1.5 million in sales this year. So this kind of drives home that point that we're not really looking at great companies, because if you ever look into this industry, what you'll see is companies that have very high margins and tons of profit, but not these publicly traded companies. So 2014 has been a tale of two cities, I guess. It was a great year. It was a terrible year. Right now, today, we're up about 25% year-to-date as measured by the Benzinga 420 Marijuana Index. That index, it's being rebalanced today, but it has about 45 names in it, all equally weighted when it's rebalanced on a quarterly basis. And the index started at 100 at the beginning of 2013. So less than 2 years later, it's doubled. That's a good thing. In 2013, it dropped as low as 70, ended the year at 159, and peaked out on March 18th at 1010. Now, a lot of people saw this 7X rally in 12 weeks, and they wanted a piece of that, even if they didn't care about cannabis. People like to make money. So we did see a lot of people come into the market, and it was no doubt a bubble. And we've been in decline for over 6 months now. You're tuning in on a great day. If you're involved in the market, you know that the last few trading sessions, we've seen some big bounces in several names. Quite the change from the slide that we've been enduring for over 6 months now. But as I mentioned earlier, it's gotten very difficult for investors because there's probably 250 names now of companies that purport to be in the cannabis space. And one of the big things, if you're not familiar with the sector, you should be aware of, and if you are familiar, you already know this. The SEC started to show up in mid-March, actually early March, and they haven't really done too many suspensions since June 6th. There's been one, and it was a real oddball, but they've done about a dozen suspensions, and if you're not familiar with that, basically when the stock is suspended, it goes to the gray market and withers a slow death typically. So that really helped pierce that bubble. I am on the record in support of more regulatory activity. People ask me all the time for my big picture thoughts on this sector, and I typically respond that 80 to 85% of these companies are either scams or they're not going to make it, and that's the reality. I spend my time looking for the few that I think in the public market that are worthwhile. So the SEC suspensions have been not totally unwelcome, but they ended up being a little bit capricious, and maybe in the Q&A, if anybody wants to follow up on that, we can talk about that further. So to conclude, 2014, a huge spike where the prices on average rose 7-fold, and now they've lost about 80% of their value, still up about 25% year to date, still up 100% since the end of 2012, right after those elections. So now I want to spend a few minutes talking about what I call the second wave. And if you think about what happens when you have something new and exciting, the best companies aren't necessarily going to be public at first. It takes a while for companies to build up their operations and get to the point where they can become publicly trading. And that has not been the case in the marijuana sector. A lot of companies have rushed to get into the market. They buy airplane ticket and feel like that makes them in the market, something like that. So the second wave, what I'm really talking about is the good companies that have started to enter, not necessarily the opportunists that continue to enter. So one of the first things I look for in the second wave is a good mix of people who know marijuana as well as who know basically how business works in the legal world. The United States is a productivity example for the rest of the world, and the cannabis industry has been very unproductive. The real key skill in the industry has been to avoid being caught, not necessarily to grow cannabis at the lowest cost or to find, to use advertising, whatever it is that you're going to grow your business with. So I think a lot of these second wave companies recognize this, and you'll see that there's people inside the company that either know marijuana or have good corporate experience. The second point is that we're seeing better governance and transparency. I mentioned that those first wave companies were on the pink sheets. Many of them remain there. Credit to Medbox for uplisting, but we're now seeing a lot of these companies come out addressing some of the investor complaints over the past few years about these companies weren't treating their shareholders fairly. Another second wave attribute, and we're just starting to see this, but the reverse merger, if you're not familiar with that process, is very risky. We saw one company run into huge trouble with it, and it resulted in a suspension because one of the parties involved with the reverse merger was a bad apple, basically. So we're starting to see, and it's just a handful of companies that are doing what's called an S1, a much better way to enter the market. And we'll probably see some companies go straight to the NASDAQ. I had thought that might happen this year, but kind of a regulatory issue came up with all these SEC suspensions, and that's probably been pushed off to next year. But I would expect to see a new company or two go straight to the NASDAQ. Some of these second wave companies actually touch marijuana or come close to it, like for instance a lab that really touches marijuana. A lot of these companies in the space that have purported to be marijuana companies, ironically, aren't in the marijuana industry. They're in the ancillary business. They might sell vape pens, but they don't actually ever physically touch marijuana. Now we're starting to see companies that are very open about touching it, and that's a federal crime. It's against the law, so it's an interesting point, and we'll see if any big companies come out and actually do this, but there are a couple of companies that are intending to do so. The next part of the second wave that I think is interesting is brands. We have what many call a $150 billion industry, but nobody has any intellectual property whatsoever. It's a black market. As we transition to a free and legal market, or even medical one, you can start to see brands develop. So far, no companies that I'm tracking really have a great brand. The brands that are most recognized out there are not in the public market yet, but you can imagine that they're headed that way. And I was actually at Dixie Elixirs last Friday, for instance, and they're one that I would expect, for instance, to be a second wave company with a brand. Technology. I mentioned earlier that being productive is going to be important. To be able to compete in a legal market, whether it's in Canada or the United States, you're going to have to use technology to lower your cost of production. You're going to have to use technology to comply with the law. You're going to have to use technology to reach your customers, since you can't advertise directly, but you can use social media in certain circumstances. So technology is going to be increasingly important, and there are already a lot of opportunities to participate in technology companies in the space. Finally, something I have to mention about second wave is this is a real problem, a negative. The valuation for some of these companies has been quite high, less so today than it was a few months ago. But a bigger problem has been poor liquidity. In other words, there aren't that many shares that trade. So it makes it very difficult as an investor. You've got to do your homework, make sure you're comfortable with the name, because you're not going to be trading in and out of it on a regular basis. So those are some of the characteristics of the second wave. We had when I say we, 420 Investor is partnered with a company called MarketFi. MarketFi had a conference in Denver in late June, early July, and we had several companies attend. I don't know if this is the complete list, but these were many of the companies that attended. And I just want to very quickly give you a one-liner on all of them, because I consider all of these second wave companies, and this is not an endorsement, but I just wanted to, it's just a fact that these companies presented, and I do think that all of these are new companies. The first one, the symbol right now is Beamy, and they presented earlier today, if you had a chance to listen to them, but the American Cannabis Company, and they're a consultant that's leveraging their position in the industry to create what's called a group purchasing organization. That's a quick one-liner. Blue Line Protection Group, symbol BLPG, they are providing security services as well as enabling transactions to take place, secure transactions. And they have been designed into a lot of the dispensaries applications in cultivation applications in Nevada and as well as Illinois. So kind of an interesting, pretty brand new company with recurring revenue and clients. Cannabis Technologies, they are a biotech company out of Canada. That's symbol CANLF here. It's CAN in Canada. Can Labs, I mentioned earlier, they are a testing lab in Colorado, expanding officially to Connecticut and through the grapevine. I've heard Nevada as well, but that's a big part of the industry. This is an industry with very little standardization, and the labs are going to play a critical role, and in many cases are required to do so. We should expect labs in general to do well in the space. EBU is a private company, and they are trying to create a standardized product across 5 different delivery mechanisms. Mass Roots is a private company about to be public, actually, through that S1 process. They are a social media company for cannabis users. Organogram was at Weedstock. Their symbol is OGI in Canada, and the symbol in the United States is OGRMF. And they are one of 13 currently licensed producers in Canada. This is one of my favorite themes. We can talk about that in the Q&A later, but these are obviously second wave companies, but they're entering into Canada with full federal legality when it comes to their medical marijuana program, and they're actually a client of American Cannabis Company, by the way, but they are definitely a second wave company in my view. Cerna, I actually met with them yesterday in Denver. It's not the first time I've met, but I toured their facilities, and they are a equipment company focused on the space. Probably one of the more exciting things that they offer right now is a product to address electricity costs through using water chillers. United Cannabis, CNAB, they bought the intellectual property, or they own the intellectual property of River Rock, a dispensary in Colorado, and they're looking to export that model into other markets. And finally, publicly traded ANYI has a subsidiary called WeedHire.com. They address a huge problem, which is that people in the industry need to hire employees, hard to find. People who want to enter into the industry, hard to connect with employers. So WeedHire.com. So again, these aren't recommendations, but I just wanted to give you a flavor for kind of the broadness of these types of companies. So here's an example of one, and I say in big red, it's not a buy rec. And let me really say that. It's truly not a buy recommendation. But this is an interesting company, and I mentioned this even though I don't necessarily think it's a good investment. It's a very interesting thing to talk about. They are all about standardization. This is one of my big themes. We don't have medical marijuana in the United States or even in Canada. We have recreational marijuana sold under the guise of medical. There's nothing medical about marijuana, unfortunately. These guys are working on creating medical-grade cannabis. They have licenses pending in Nevada and Illinois, among other places, and they have a large institutional owner. So it's a very interesting company to look into. The picture that they have on the right is their solution. It may be way ahead of its time, but basically it's a contained growing unit that produces medical-grade cannabis and avoids a lot of the potential hazards that occur in typical grows. But again, not a buy recommendation, but I'm trying to give you a flavor for what a second wave company looks like. So this is what I look for in the second wave. First of all, this applies to a lot of things. It's not special to just cannabis companies. Any type of venture like this, and that's what these companies are for the most part, they're new ventures. You want to focus first on management. Do you trust the person? Do they have the capability to operate in this rapidly changing environment? Second, do they have access to money? You need money to grow your business. A lot of these companies, if you do your research in the space, they have no money, they have a little bit of debt, and they're maxed out on their share issuance capability. That's not a good combination. And finally, and this is a little bit harder, but is this a business model that can scale? It's one thing to be able to grow 200 plants. It's another thing to be able to grow 20,000 plants, for instance. So, but all sorts of companies in the space will have this scale issue. The second thing to look for is about this crossing the green line. The green line is basically your willingness to actually touch cannabis, which is federally illegal. There are several companies that are very small that most of us have never heard of that claim to operate grows or dispensaries, but the big companies have more to lose from doing that, and they haven't. But they're starting to do that. If you really want to cross the green line, go to Canada. It's federally legal, and I think that's a neat market. And the last thing I look for is, I look at the valuations and the liquidity, and so even if you find a company that you like, you can't just buy it. You have to be very careful. I'm a big advocate of creating a watch list and watching for a long time. Sometimes in my investment career, I've watched things for years before pulling the trigger, and I think that's unfortunately right now, given the poor liquidity, that is the case for the second wave companies. So I said before we went to Q&A, we would talk about some upcoming catalysts, and obviously Oregon and Alaska, these are very important. They're both on the West Coast. The big tuna would be California. There's a chance that that would vote legal in 2016. But I think that Oregon and Alaska voters approving legal marijuana would help change the way people think about the odds in California. In medical marijuana, where there's 23 states, I believe now, that have some sort of program, Florida has a vote. They need 60% in order to win. But this would be the first state in the Deep South to adopt medical marijuana, which really would be amazing if you think about it. Also on the medical marijuana front, Nevada, Massachusetts, and Illinois are all rolling out programs over the next year in medical marijuana. And I put some question marks at the bottom because one of the things I've learned about this space is you never know what's going to happen. So sometimes, you know, we just don't know what the catalysts are going to be. So that pretty much concludes what I want to talk about. Before we go into Q&A, I just want to let everybody know a little bit about 420 Investor Community. I'm going to offer you, it's typically $49 a month. 420 Investor is a community, a due diligence community. We have over 1,000 subscribers, a lot of features. I'll talk about those in a second. But the going rate's $49, and you can always join and cancel within 30 days for a full refund. But we're making it really easy. It's just going to be $7, and you'll have access for 2 weeks. What this will give you is we do have some model portfolios, and you'll have access to those. Probably the more important part of the site would be our forum, our chat room, and my own blog, where you can become more informed about what's going on. You'll get a lot of industry insight and commentary, not just from me, but from CEOs and thought leaders in the industry. And we have a lot of educational resources on the site. So again, $7, 14 days. There's the code if you want to take advantage of that. And with that, thanks again, Derwin, for this opportunity, and let's take some questions.
All right, thank you, Alan. Give me 15 seconds to look at the queue. First question, are there any companies that are diversified? In other words, their model depends on marijuana legislation, but also have other products and services not dependent on marijuana legislation. And
right. So that's an important thing. A lot of companies are like that. One of the bigger ones, for instance, is TerraTech, and they have an agricultural model where they are selling hydroponic produce. So that can mitigate your risk as an investor. It can maybe dilute it a little bit as well. But the question, I think what it says is, you know, if you go and you invest in a marijuana company or a marijuana-related company, and all of a sudden something changes and your company's gone because of this regulatory change, well, is there a company left? If you're all in on cannabis, the answer is probably no. But if you're a little bit diversified, the answer is yes. I mentioned this company, TerraTech. Another concept would be some of these e-cig companies that are also selling hardware into the vaping market. So I could probably think of some others too. For the most part, though, these companies are focused primarily or exclusively on the cannabis space.
next question. As a small growth startup in Oregon seeking investors, post-legalization, what is the #1 focus we should have as we prepare for operations and ask for investments?
So that's a little bit out of my domain of expertise to advise a privately held company on how to raise capital. So
okay,
I'm going to pass on that question.
Next question. What do you see in the future big pharma and tobacco role in the cannabis industry?
So this is interesting. People talk about 3 huge threatened entities. 2 that you just mentioned, big pharma and tobacco. But the other one's alcohol. And I actually think alcohol is the most interesting. But let's take those first 2 and then we'll talk about alcohol. Tobacco. This is a very strange analogy. People do smoke marijuana and people do smoke tobacco, but they have very little in common after that. I mean, tobacco's nicotine addiction, basically. So I don't think, I do hear stories about the tobacco industry looking to get into this industry. Fortune magazine interviewed the CEO of RJR just last week, I believe, and she was asked this question, and she said, when it's federally legal, we'll look into it. And I think the reason why tobacco is interested is cigarette, especially in the United States, it's not growing, and they do know how to do distribution. I'm not sure that this type of distribution is going to work the same. You're not going to buy a pack of rolled joints. That's just not the way the industry's headed. So let's throw that one to the side for now. The second one you mentioned, Derwin, was Big Pharma. That is probably, they have a lot to lose. One of the big things, if you're not following the space, that you should be aware of is that we have an opioid addiction problem in the United States. And as a matter of fact, the American Academy of Neurologists kind of shocked the world yesterday and came out very negatively on opioids. Opioids are used for pain management. Cannabis has been shown to be very effective at pain management without the addiction issues. So this is a major opportunity for cannabis, whether it's in traditional medical marijuana or to take a pharmaceutical approach like GW Pharma to basically replace a lot of medicine. Cannabis, it's unfortunate, it's as a Schedule I drug, meaning it's just as dangerous as, well, actually I think cocaine's too. Heroin is one also. The researchers cannot do the research that we all deserve to see, quite frankly. But there is research that's done, whether anecdotally or in other countries, where it's pretty clear that cannabis can address a lot of issues. And so Big Pharma has a lot to lose potentially, and I think that that's going to be one of the big drivers in the next few years, whether it's medical marijuana or pharmaceutical marijuana, and whether that's synthetic, which I hope not, or natural like GW Pharma. Both those could really grow at the expense of Big Pharma. So Big Pharma has a lot to lose. It wouldn't surprise me if a international pharmaceutical company were to buy GW Pharma eventually, but I think GW Pharma has to get a little bit further through the FDA. But the third area, which wasn't part of the question that I want to address, is alcohol. And this is interesting because alcohol has branding. Well, I guess those other two do as well, but alcohol is truly a substitute for cannabis. And alcohol doesn't have any medical benefits for the most part. I drink red wine. There's some benefits to that supposedly, but in fact alcohol can really, it's toxic, and it can really, it can lead to your death, quite frankly. And it's addictive as well. So I think that is going to be a major opportunity for the cannabis market in general to take some share from alcohol. I know I'm a 50-year-old male. I guess you know that I'm a male, and I live in a state where it's illegal to use cannabis. I don't use cannabis in my state. I can tell you I do use alcohol, and I can also tell you that I would gladly substitute cannabis given the opportunity, and I know that I'm not alone. So I do think as we look out 5 to 10 years that we could see cannabis really impacting the alcohol market, and so it wouldn't surprise me to see the alcohol companies get involved. But again, just like the woman who leads RJR, they're not going to do anything until it's federally legal, and my guess on that would be 2019 or 2020.
Okay, I got a similar question, Alan. Again, with Big Pharma and tobacco, aren't they the hurdle or the obstacles for the marijuana, for the rollout of marijuana legislation? So
yeah, I hear what you're saying. There's a lot of talk that you know, these big powerful interests are out fighting to keep marijuana away, and I think that there's probably a little bit of truth to that, but I've yet to find evidence. Now, there was an interesting article in Vice magazine talking about how a lot of the people who are speaking negatively or positively about some of these bad pharmaceuticals, they're paid for by industry. Well, that, what do you expect? That's the way it works. I think that there's bigger lobbies with which we have to contend. I think that sometimes law enforcement is very smart about this, and they realize that they are wasting their time and their precious resources dealing with cannabis is a felony. It's ridiculous. So, but for the most part, that's the exception. Law enforcement in general, that's the lobby that I think we should be fearing the most, not big pharma and big alcohol.
Next question. Are we headed for extracts and e-cigs like open vape pens?
So yeah, that's for sure. It's kind of interesting. I didn't really get a chance to talk about this so much, but one of the most interesting opportunities to me is up in Canada, where they have a federal program. Just none of these questions that linger in the United States, where we have the states' rights issues. And in that program, ironically, it's a medical program, and they did away with concentrates or edibles. It's all bud. So that doesn't seem very medical to me. Concentrates and edibles, if they're manufactured under GMP, that's a lot more medical. And you can imagine that we're going to move more in that direction. So to the question, ArcView Research, they called at the beginning of this year the extract market. And for those that aren't familiar with that, you process the cannabis and you end up with an oil, basically. And the question was about open vape. And open vape may be the best in terms of revenue company out there. It's privately held. But they have just killed it. What they do is they take the concentrate, they cut it down with ethylene glycol, and create a e-cig-like experience where people are able to inhale cannabis and exhale a cloud of vapor or whatever. But I do think that the market is headed this way. I think that there's a lot of health reasons that people don't want to smoke. That's not to say that people won't always smoke marijuana. But the vaporization is a big trend. As you imagine using marijuana for pain, this is going to be something that you're talking about people that are in their 60s and 70s. They don't necessarily want to smoke, and edibles are going to be a much more palatable form of treatment for these type people. So I think when you're looking at the market, you can't just think about yourself. You really have to think about everybody, and I think that to answer that question, concentrates will continue to take off.
Next question, you kind of answered this. How do you evaluate a company with unpredictable, well, how do you evaluate a company with no historical trends and unpredictable legislation? And I think you came across, you said in summary, management, access, capital, scalability, crossing the green line,
right.
Canada.
Well, these are, yeah, Derwin, these are all things that will help, but to really answer the question, I have to confess humility. You know, everybody wants to come up with a valuation. It's really easy to value a company whose cash flows are very consistent, and you can just say, you know, what are the cash flows, what's the interest rate, and crank it out. You can't do that with startup companies, and what I would advise all investors in this space to consider is that, for the most part, these are not, if they are operational and generating revenues, it's not a lot, and it's very early. So you need to think more like a venture capital investor. So all those things that Derwin just said come into your mind when you're trying to think about the potential for the company. You might look at what's the opportunity overall, what's the chances this company can succeed, what type of market share that can they get, and then you can kind of come up with some valuation type numbers. Earlier this year, after the prices went up 7x, you had companies on penny stocks trading in the $500 million to $3 billion range. It was pretty clear that it was impossible to justify those valuations. Now, there were a lot of lesser valuations, and I fell victim to this. I would call it illogical thinking. It's not illogical. It's just what we do. It's like, imagine that you own a house, and all of a sudden the house is on your street start trading it. Instead of 200,000, they're all of a sudden at 400,000 and 600,000. You think yours is a good deal at 300,000. That's kind of what happened in the cannabis market. You start to say, well, if this company is $1 billion, you can justify $100 million for this company. Well, that proved not to be the case because the billion is now $100 million and the $100 million is now $40 million. It fell less, but it didn't justify it. So it's not easy. I have a lot of valuation experience, and I can tell you things are overvalued, but I can also tell you that they'll go up potentially, just being overvalued. So I think it's important to understand valuation, but keep in mind we call it a Wild West market, very speculative. There just aren't a lot of numbers to be able to, even price to revenue, you can't make that work. So that's a great question, and hopefully as the market matures, then we'll start to see traditional types of valuation metrics applied.
But next question, besides dilution and unaudited financials, what are some other negative signs of a high-risk cannabis investment?
So it's funny. We had to do something I never imagined in my career I would do, which is I had to hire a private investigator to look into the backgrounds of some of the people running these companies. And so there's a lot of bad actors. So I think to answer that question, that's the first thing. A lot of people want to make a lot of money in cannabis stocks. I think it's just as important to avoid losing a lot of money. And some of these background reports came back with stuff like, you just don't want to trust that person. There's no way. Some of the other things that have come up are, we can get real complex on this, or I can keep it simple. But one of the things that I've come up with that's just, it's criminal to me, except that I don't think it is illegal. A lot of companies or not a lot, several companies are using their capital structure to enrich insiders. And I like Bruce Perlwin. He's a funny guy. He's the guy who founded MJ&A, and then he started hemp in 2011. But it's very clear. All you have to do is look at the filings. It's in black and white. He lends the company money. He gets paid back in a convertible stock. He converts the convertible stock to common, and he sells it. And so there's other companies where I found this as well. So that's one of the big things you have to look out for, which is insiders enriching themselves through semi-complex types of transactions like I just described. Shareholders not having a vote, that's a big problem to me. I think if you don't control the majority of the company, then your shareholders should get to have a vote. And we have several companies that somehow have managed to skirt around that. I think in general, penny stocks, well, let me break it into two segments. Pink sheet stocks and SEC are a little bit different. The pink sheet companies, they don't really have to disclose what they're doing as insiders. It's very hard. It's all on paper. It's not electronic. So very hard to track down when there's insider selling, but there are definitely situations where there's insiders dumping, pump and dump. That's something you have to watch out for. You have to watch out for these third parties. There's a lot of third parties that are creating stock schemes, and you might trust the CEO and the business sounds good, but in the meantime, these third parties are out just selling the stock. So it's a war, if you ask me. I never signed up for penny stocks. I'm a big believer in the cannabis industry, and I'm hoping to help move the industry out of the pennies into other exchanges and to help rise above some of these traditional penny stock types of issues. But we could spend a couple hours going over all the shenanigans.
The last question, Alan, and this is from me. You being the only CFA really in the cannabis industry at this point, I don't know if I'm correct or not, but I think so. Your research is very needed in the individual investor community. As institutional investors move into the sector, are we going to lose you to sell-side research?
No, I doubt that. That's too hard. No, that's a fair question. That I do expect that there will be sell-side research, and I have structured my business. I don't like sell-side, and for people who don't understand what sell-side is is basically, you're talking about Wall Street, Goldman Sachs, Merrill Lynch, Morgan Stanley, and they, in case you're not familiar with the way it works, they do research so that you'll trade their stocks, and that's how they get paid, or that they can get banking fees, even though that's supposed to be separated. So if I were to do what you're saying, Derwin, I'm going to have to go, write these reports and get people to do transactions. That's not really what I like to do, and I'm lucky I don't have to do that. I have a choice. And so I've set up my business to where I'm paid by my subscribers. If they want to do what I suggest that they do, or if they don't, that's their choice. And I'm not going to get paid more or less either way. I'm going to provide information, hopefully as objective as possible. A lot of people are surprised when they learn I don't invest in these stocks because I want to maintain my objectivity. I don't want to be a front loader, as it's called, where I buy a stock and then tell everybody else to buy it. So I operate my business as a truly aligned with the small investor. Now, with that said, I do have a lot of contacts with institutional investors. It's very exciting to me that we do have several institutional investors that are active in the space. I spent some time with them in Denver this weekend, for instance. And so I don't have to quit doing this to work with those guys. I can still consult with institutions and not do that evil thing that you were talking about, which is to be a sell-side research analyst. But I do appreciate that question.
Alan, thanks for your presentation. And that concludes the Q&A. Any closing comments, Alan, about the cannabis industry?
Well, so first of all, just a reminder, stick around for Dr. Fuller from Budget Weed. I think that'll be interesting. I wanted to get that in. I met Marlon in Denver. But as far as the industry, I feel kind of badly about what happened this year in general to a lot of investors, some, obviously some of my subscribers as well. I want to remind everybody that this is a long process. We're just at the beginning stages. Really, as I said in my slides, the game got started January 1st. It was all preseason before Colorado went legal. It was unnatural for the stock prices to go up 7x, although they could have gone up 10x. No one knew. And so don't be a momentum chaser. Don't be the guy that jumps into the hottest, the next hottest thing, and don't be the gal who gives up when things aren't going well just because your opportunity wasn't timed properly. Take a long-term focus, get to know these companies, try to distinguish between who's real and who's not real, and be patient because we're dealing right now with a bunch of companies that for the most part I wouldn't wish upon my worst enemy. So the goal right now should be to learn the industry, to learn which of the companies can be trusted, and not to over-allocate. We've had a lot of people at 420 Investor who just went all in, and when you do that, you can't ride out the waves in what's typically a very volatile market. So I encourage anybody who's listening to take advantage of the free trial, the $7 trial, it's almost free, and get to know us, and I wish you the best in your pursuits. And thank you again, Derwin.
All right, thank you, Alan. Next presentation is at 8 o'clock, Budget Weed. Thank you for attending the Cannabis Investor Webcast, where cannabis companies increase their liquidity, awareness, and exposure to individual and institutional investors, cannabis entrepreneurs, media, and consumers. We would like to thank our sponsors, American Green Incorporated, and Indo Expo Trade Show, which will be held in Denver, Colorado, November 15th through the 16th. The website address is www.indoexpoco.com. Again, www.indoexpoco.com. Our next speaker is Dr. Fuller, CEO of BudgetWeed.com. I'll now turn the presentation over to you, Dr. Fuller. Dr. Fuller, for some reason, it won't let me add you as a presenter. Log out and I'll send you a link, another link. So if you could log out of the webinar and I will send you another link. Dr. Fuller is still trying to log in, so be patient with us. Okay, Dr. Fuller, I think you're in. Are you in? Dr. Fuller, I think you're in. Are you in? Okay.
Okay, Darwin, can you hear me? Yeah, dialed in. Hello, Darwin, are you there?
Yes, we can hear you now, Dr. Fuller.
Okay, my apologies about that. I had some technical difficulties. Let's see.
Dr. Fuller's technical difficulty was his wife hijacked his laptop.
Yes, indeed. So my apologies once again, everybody. I appreciate you guys staying tuned, and let me get rid of some of this stuff on here. So thank you, Derwin, for assisting with that. This will be, I'll make it a little bit quick and be respectful of everybody's time. My name is Dr. Fuller. I am a pharmacist and have about 10 years of clinical experience, and really jumped into this sector after doing a little bit of investing in some of the publicly traded companies, some of which Alan made reference to. I really had a real passion about it. So for the last year, but probably for the last 2 years or so, I've been an investor behind the scenes. And as a pharmacist, I wanted to bring something different to the equation. I think as a pharmacist, we have the patient first, and that's the model that I wanted to engage in, and that's the genesis of Budget Weed. So Budget Weed is all about connecting patients with services and with medicine. So that's me. This is the Budget Weed map that'll eventually be filled out. As of right now, I'm a privately held company. I own 100% of Budget Weed and all the subsidiaries. So the main company is Stonecrest LLC, and so Budget Weed falls under that, and has several different things. And really, you know, what got me into the sector was coming from a healthcare background and having family members that had issues ranging from diabetes, blood pressure, inflammation, hypercholesterolemia, depression, insomnia, Alzheimer's. There's so much research going on around cannabis, and I really wanted to do this with a patient-centric approach. And so I entered this, and tell you the truth is that I got a lot of eyebrows cut at me, and some odd looks when I told some of my peers and family members that I wanted to really do this in order to help connect patients. But I then started Budget Weed in Stonecrest LLC some time ago, and this is a little bit about what I envision the company eventually making up. And some of these are already filled with these positions. However, just a couple quick stats about me. I am a member of the National Cannabis Industry Association. I'm an advisor. I'm the medical advisor for the Marijuana Investment Corp, marijuanaindex.org and .com, and then they lead panelists for the Green Rush Financial Conferences. So this is the problem that I saw. I saw that there was a disconnect as to what the businesses were experiencing and also what the patient was encountering in this sector. And so I saw that there was an unmet need. Some of the things that are out there, there's basically services and companies that are already in the space that's providing it. I think that we are superior. I'll go through that and kind of show why we are one of the best that are out there, even though folks may not have heard of us. But Budget Weed will hopefully be a household name in the next couple of years with a lot of the things that we'll be doing. But with the unmet need, some of the things that the patient wants, of course, are they want to search products by location, quality reviews, and price. We were the first one to integrate price as a factor into the equation. So, you know, when you're buying travel tickets or you're going to a hotel or buying an airline ticket, you don't just say, I want to go here. You look based on the price. And so that's my search engine is more similar to a travel engine search than it is traditionally to like a Weed Maps or a Leafly even. And then on the business side, I'm not sure how many people are aware, but I've been out and we've done many of the conferences and things of that sort. And dispensary owners are coming to me, and I'm taking a lot of that market research, and they're just saying that, you know, there's some exorbitant amount of fees that are being charged out there, and so it's really a barrier to patient access because some dispensaries and some physicians even can't afford some of these high-priced monthly listing fees that like a Weed Maps or a Leafly or a THC Finder would have out there. And so I wanted something that the patient can find the best product in their budget, as well as the business owner, whether it be a physician or delivery service or a dispensary, have something that could help them with their business and at a cost-effective price. So this is kind of what I envision that I'll put this together as to what the market really looks like. There's this disconnect. So people want the best product. They want it at the best price. Well, right now, it's easy to find the best product because there's these lab-tested strains and businesses that are showing you kind of what their quality is. But as of now, you can't search by price unless you go to budgetweed.com. So this is really something that is going to fulfill that gap. And whereas Weed Maps, we were at a conference recently, and they're charging about $400 a month, about $425 a month for a business. It's a lot of money, especially for a new business that's still trying to get their feet on the ground and work out payroll. And I've owned multiple small businesses myself, and so my loyalty really goes with the patient and the small business owner. And so, you know, we're basically able to offer that same thing plus more and do it at a price point that's $50 a month. And so nobody else in the industry can compete with that price. And we also offer free listings, so you can get some limited listings, some limited information out there at no cost. So this is, in a nutshell, kind of why Budget Weed. Budget Weed, we have about 5,000 free listings. So a patient or a user can go on there, search by the zip code, search by you know, to find the business. They can email the business, they can call the business's phone. But if you want that added premium service, as far as there's going to be the social media input, there'll be discount products and things like that they'll be able to showcase on their page, as well as their full menu. That'll be what they get charged $50 a month for. So really our value proposition is that we have a superior search engine that nobody else has. We have a lower price point, and then we offer enhanced site features. So when you come to BudgetWeed, I'll explain that in just a second. There'll be more than just finding a dispensary. You really want it when users go there for it to be a community. So whether you're just looking for one thing, there's so much information that is in this sector. We really wanted to pull it all in one place. And at the bottom, you can see that our listing fees at $50 a month, there's about 70 to 90% less than competitors, and it's still very profitable. So this is our core demographics. So it's those looking for dispensary services or delivery services, physicians, or dispensaries themselves, 21 to 44 years of age, a little bit more males. And our business model is simple. We just want a really clean user face, user interface, the advanced search engine. Our fees need to be something that isn't a barrier to entry for businesses, and we wanted some of those additive site features. And this is a little map showing competition-wise what our competition looks like. So when we look at BudgetWeed versus Weedmaps, Leafly, and THC Finder, you'll see that some of these additive features are what set us apart. So we're able to search by price on our website. So you can not only search products, so you can type in a G pen. You're looking for a G pen between $60 and $70. You can use BudgetWeed for that. You're looking for a particular strain, OG Kush, and you're looking for it in a specific zip code in a 20-mile radius, and you want to know the OG Kush that you can get in the $20 to $30 range. You can do that on budgetweed.com. We also have recipes. We have about 40 cannabis-infused recipes on our site, and a partnership with not only the cannabis chef, but also the Stoner's Cookbook. One of the new things that we've gotten into are 420 tour and event listings. So you can go to the website, find out if you're maybe going to Seattle, you want to find a tour company out there that's doing some 420-friendly tours, going maybe to some chocolatier factories, dispensaries, parties, things like that. That'll be something that you'll be able to find on our site. And this game that we have, it's called Bud Brain. Alan mentioned it. There's a lot of people in the business. I don't think that they've necessarily thought about branding themselves, and BudgetWeed is all about the brand. And so part of that brand is the Bud Club, which members can sign up on our website and then get specific deals. It's almost like a Groupon type of portion of our site, but that's called the Bud Club. The people that we're hiring out there, our sales team, they're Bud ambassadors. And then the game that we have on our site, and you can also use it on your mobile device without any downloads, is called Bud Brain. So, and then of course we also offer the apps. So our app is in Apple and Android stores. Looking into a little bit more on the numbers. BudgetWeed, we've really been for the last 5 months in this beta testing phase, and so we've been getting a lot of business information and going to a lot of the circuits and conferences, and we've been getting a lot of great attention out there. And so we know who our core audience are, and what we're looking to do over the next 3 years is grow our monthly traffic and our revenue. And so when you're looking at traffic, the number that we're looking to hit is 230,000 users per month, and our revenue at $250K a month. Currently, Weedmaps and Leafly, they're doing about $1 to $2 million per month, and really how you get these numbers is it's almost a one-for-one. So if you're looking at the monthly traffic, if you get about 2.3 million users, for example, there a month for Weedmaps as a general case, they're generating about 2.5 million a year, or 2.5 million a month, or $30 million a year. So this is the Bud brand, and this is kind of what we're all about. I really wanted a simple website. I didn't want it really complicated. I wanted it simple so that somebody with a 7th grade level education can use it. Our site is geared for 21 and up, but with the literacy levels out there, and just with the user feel, having it simple is better. So this is a screenshot of our mobile view, and so on the mobile view, there'll be a button there that you can download the app, and it'll take you to the point where you can download either Apple or Android. The menu tab, I apologize, I have another version on my other computer that kind of showed what this menu button was. But in that menu button, if you click on there, you can purchase 420 accessory items. You can search our recipes. You can post your business from your mobile site. You can look at tours. You can look at events, and check out our blog, all from that mobile window. And as you can see, looking over these buttons here, you can search dispensary, physicians, particular strains or products. So like I said, it's not just strains. You can type in that you're looking for a particular type of glass or a particular type of vaporizer, and you'll be able to type that in and find it. And of course, searching for delivery services. These are this is the game that I had developed, and it is just icons that I thought were cool. I'm a pharmacist, so I wanted to have a pharmacist here with the white coat on. Of course, the DEA, that's just something that's funny. We have the bong, the Rasta guy, the ganja girl, and a doctor here. It's a fun game that tests your memory and speed. So hopefully it may be fun for the folks that are on that are utilizing the sativa, and maybe not so much for the indica. This is in a nutshell what our sales and marketing kind of looks like. So we want to market to our customers in multiple ways, whether that be email, internet, advertising, trade shows, so that we can retain those customers and grow. And we're talking about some of these trade shows. I met Alan at Weedstock and a ton of other people. It's such a small world, and the real creditable people are kind of making alliances and really just forming bonds and friendships, really, because we all have a similar goal in mind, and that's to enhance the sector as a whole. I'm doing it for the patients and a small business owner, but there's other folks out there doing it for money. At the end of the day, we're pushing the movement forward. Unfortunately, I will not be able to show this video. I was going to show you guys one of the web commercials that we did. This computer doesn't show it for some reason, but there you can feel free to check out. We have 2 videos, one of which is for budget weed, and you'll be able to find that on YouTube. So if you type in budgetweed.com, there'll be a video there. You can see what's going out to businesses, and really we're letting businesses know, and we're doing it in electronic media to save money, because we're all about lean processes. And so we're basically emailing and using some social media in order to push out our commercial to businesses and helping them understand who we are and what we do. This is a, let me move that out the way. This is some of the brand building that we've done in the past. In I believe August, or maybe it was July, we were at the Cannabis Cup in San Fran. There were tens of thousands of people out there. We were at the Cannabis Business Summit in Denver one week, and the following week we were in Weedstock. And you can see we had some good position in there with our logo. So we appreciate the guys down there at MarketFi and set up Weedstock. So as far as the alliances that we're making out there, We have a partnership with Weed Hire, David Bernstein, ticker symbol ANYI. We also have a relationship with the Marijuana Index, or the Marijuana Investment Company. They used to go by MJX. I mentioned previously the Cannabis Chef, and also we have the Stoner Cookbook, a partnership with them. And these relationships are just developing by the day. There's so much interest out there, and some vertical integration that can be done by partnering together. We're looking at our financial projections over the next 6 years being about $13 million, be about a 2,500% growth. So right now we have about 5,000 free listings on our site, and we're slowly converting those over to paid listings. And how it will work is that for the businesses to list, 3 months will be free, so they don't have to worry, there's no contracts or anything like that. 3 months will be free, and then after that we'll start transitioning to a monthly premium at a $50 a month rate. And looking at how the industry is growing, looking at more states coming online, and looking at our price point, we really don't have any competition out there that we see. We're looking, a conservative figure would be about $13 million a year. So what are we looking for? So we're looking for about $3 million. This would help us to push our campaign out there really to a national level, and these national advertisements, they're $3,000, $4,000, $5,000 each route you go. So it really help us to get our brand out there, put our bud ambassadors, well, more of them out there. And we currently have some positions open. There's about 6 positions open on Weed Hire that we're actively searching for some really qualified, able-bodied bud ambassadors. I want them to know the product. They need to have a business professional attitude, and really be interested in helping patients. So that's what we're looking for, and we're some of these the money will go. So looking at the risks, of course, there's a financial risk with just accessing those funds. There's competition out there talking about externally. There's managing talent. There's customer retention, but really it's how you deal with it. So some of our risk mitigation strategies would be building these partnerships, further developing some of our lending sources, and building out our team. We look to hire. We're all about lean, so we run a lean budget. It'll be a very profitable budget, but it only happens by hiring the right people and working together. So it's about customer service training and keeping the cost down for businesses. So we're not looking to start at $50 and then jump them up to $200 or $300 a month. That's not the philosophy, because right now the total market isn't being captured. And the reason it isn't because everyone can't afford the price point to list in some of these other sites. And so we want the patient to have more choice, more options, and the only way you can do that is to make sure that the businesses have a lower entry point. And so with this, my goal is to have not just one dispensary that can afford to list in the town, but 10 dispensaries, and then the patient can choose which one is closer to them or has the most benefit for what they're looking for. So I mentioned previously that Budget Weed falls under a real umbrella of Stonecrest, and the Stonecrest companies are Budget Weed, Can Finance, which is similar to a lending tree, which tries to link cannabis businesses with loans, and the other is 420 Web Store, and Canna is a trademark brand that I'm really excited about, and that's where some of these funding that we're looking to generate will go. So I'll go into these briefly. I had another great video here that I unfortunately won't be able to show you guys, but if you can go also to YouTube, it's under canfinance.com. Canfinance.com. You'll be able to either go see the video on our website, or you'll be able to see that same video on YouTube. So YouTube, you'll be able to find a budget weed video or the Can Finance video. And our slogan is, when banks can't, we can. And really, this is just going to be a way for us to generate revenue on the back end. So we would be like a loan originator, and we'll make points on the back end, trying to link up businesses with loans. And we have a really great lender that we're working with, and then he has sub-lenders under him. So there's quite a bit of funding going on, and we'll like to be the source of that funding. One of the other sites that's under Stonecrest is 420 Web Store. And this is an ad that we recently placed in Culture Magazine, and we've been getting a great buzz from 420 Web Store. It's simple, it's easy to remember. We don't have a huge inventory of a multitude of products, but the ones we do carry, we have a nice stock of them. So we're mainly concentrated on dry herb vaporizers. I'm into convection. I've never smoked or used cannabis, but I believe in its medicinal benefits. But as a pharmacist, I'm into convection vaporizers. They just heat up the herb and release the chemicals that is medicinal. A lot of the things out there are combustion, where it burns the herb, and really that's not the best source when you're talking about somebody that maybe have asthma or some other types of lung issues. And they're showing that convection pens, which just heats it up, is a lot safer. So we focus on strictly convection vaporizers, grinder watches, where you can open the face of the watch up, put your herb in there, grind it up, and put it in or however you want to use it. We also have marijuana gear and some cool iPhone cases that allow you to roll your cannabis on the case. It has a little dip in there, and that's through our partnership with iChief. Last thing I wanted to touch on was our CBD-rich line of products. And so this is something I hope you guys can see as of now. Everything that I'm involved in is 50-state legal. I didn't want to have a business that's kind of state by state. I wanted something that would be nationally available. And I'm into intellectual property. I'm into brands. I'm into patients. And so this was one of the other things that we're looking to launch. It's the pharmacist formulated CBD-rich product line. And Alan mentioned it. There's no one out there besides, there's maybe Dixie and a few others looking to maybe get into the 50-state legal market. And we're looking to be one of the ones with some of our premium brand names. And so all of these that you see before you are all trademarked. I have about 14 different trademarks. And the one is Cannablast. It'll be an energy drink infused with hemp. We have Canna Water, flavored energy infused drink, and it'll be infused with hemp as well. Looking to put out multiple lines of juices. Looking to have a multivitamin with hemp oil capsule as well as a part of daily health, and the Canna Bar. So the Cannavite, Canna Bar, Canna Juice, Canna Water, Canna Blast are 5 products that we're looking to put out in the market. And unlike anybody that I'm aware of, I'm looking for, once this product line does come out, a portion of all profits to go to medical marijuana research. I mean, I have family members that have lots of issues, and I know there's families out there struggling, and we know that the hemp, although it's not maybe as medicinal, it does have effects with the digestive regularity. It prevents spikes in blood pressure. It helps with cardiovascular disease because it is high in omega-3 and omega-6 fatty acids, which those help with cardiovascular disease. It's full with amino acids that help with the muscle control, the mental function, and it actually helps to maintain bone health. So there's quite a bit of medicinal value in the CBD-rich products or hemp, which there's lots of research really going into the THC and CBD area. But as a business, I really wanted to focus only on something that's going to be 50-state legal. This is a list of some of our intellectual property, so Budget Weed, Bud Club, a new search engine that we're working on called Select a Strain. There's also the Bud Brain Game. It's the events and tours with Can Events, Canna Tours, our product line, which is the vitamins, juices, and drinks and bars, and then the Can Finance. A brief, just kind of summarize what Stonecrest and Budget Weed are all about. Our architecture, going online and in stores with our 4 businesses, and our value proposition is really doing everything that we can in the best interest of businesses, small businesses, and our consumers. And so our process is really going to be the research that we've done, and we've done a lot of beta testing, and then going into that, creating innovative products, bringing them to market, and hopefully producing the action, like with the increased sales. Looking to hire or expand our hire, adding more great executives to our company, and really how this is going to benefit the customer is helping with those cost savings and giving them a real great experience when they come to the store. But you do that by being lean and being innovative as a company. So in closing, I apologize, I went over a little bit, but that is Stonecrest and Budget Weed. We have the Canna line products that we're looking to come out with, and that'll be a need for funding, and then also to help further develop Budget Weed to 420 Web Store and Can Finance. I would say the 420 Web Store and Can Finance are pretty low budget and doesn't really take a lot to keep those running, and the really Budget Weed and the Canna line is where we really want to focus a lot of our advertising dollars to maximize the business. And with that, I just want to say I appreciate you guys for listening, and Daryl, if there were any questions, I could certainly answer those.
Okay, Dr. Fuller, give me about 15 seconds to queue questions. The first question, Dr. Fuller, would you offer the service in other countries in the future or franchise?
Yes, offer the service in other countries, and we actually have a few countries already signed up, but there's always the need for global expansion. In our being online, we can be anywhere. Anywhere there's a need, we can be. So definitely, we already have countries that are overseas, Spain, Netherlands, that are on our website, and we're looking to expand that out.
Next question: What hurdles would competitors have to compete with you on price, similar product offering, and free listing?
So it took me about 1.5 years to get to this point with Budget Weed, and I've spent close to $200,000, and it's not an easy feat trying to develop something from scratch. So there's a financial component, and then there's the we don't really feel like we have any competition, even though we put Weed Maps and Leafly and a THC Finder out there, because they'll never be able to match our price point. They're so top heavy and built a system that really isn't, we don't think is sustainable. It's only so long before people, they want service, but they also want value, and it's, we provide a really great value, and we're looking to, with the advertising, keep our traffic up with all the offerings that we have, keep people on our site longer, give the businesses more eyes on them, and at the end of the day, that's what it's all about. So we're definitely looking to expand and don't really see a lot of competition in the future, especially with the cost to enter into this kind of sector. And then with our products, having everything trademarked, having a brand already in place is quite a bit of legal fees that get tied into that. So there's definitely a barrier to entry with finance.
Next question. With so many different products and service offerings, would this take away from your core focus, which is listings?
No, no. So everything that I really put in place with Can Finance, Budget Weed, and the 420 Web Store, those are all things that take minimal people to run. My bud ambassadors work remotely and work on commission, and so the business could actually almost run itself. We have a customer service team that really is a core component, and that's not something that is real labor intensive. We have programmers and developers, so I can run on a team of 15 to 20 people, and it eventually needs to be built out, but I can run a lot leaner than a company that needs 50, 60, 80 people, and not have the same restrictions.
Next question. I think this is a three-part question. Canna and CBD-rich products, have they been developed or are they still in development stage? And the third part of the question, would Canna be an acquisition target?
I think I'm not really sure about the future. I'll answer the last question last. I'm not sure if it'll be an acquisition target, but if you look at the other things in the market, you look at vitamin water, for example. When you have a product line that people understand just based off of the brand name, and that's what we're about branding. When they understand what the product is about based on the brand, it's less advertising dollars that need to be expended in order to promote that business. And so we think we have some strong trademarks, a strong product line coming in the future. I don't know what the future will hold with acquisitions, but I don't rule anything out. And the CBD-rich line of products, we have the manufacturers in place that will be able to put the formulas in place that we've already spoken with. We know the price points. We know what the profitability of all those products would be, and we're just really looking for some investor dollars to infuse and bring this to the market. Like I said, there's people operating in a few states here and there with the cannabinoids that are legal in those states, but with hemp oil and the benefits from hemp, I want to be in all 50 states. And really, I visually see this being something that we start online with Amazon and just with some of our own resources that we have with shipping out products through 420 Web Store, and then eventually getting some brokers and trying to get this into the stores. And I think we need to show the demand first, which I know it's there already, and then getting into places like Trader Joe's and World Market. I mean, we eventually see these products being on the shelf in the next 2 years, and actually with the investment dollars in place, it's something that I can put on the market within 6 months.
Next question. What percentage of the company would the $3 million represent?
So right now, I don't. We're looking at a 10% interest in the company for $3 million. We're looking at that being a bargain based on what our future. We're looking at our future projections to be. So right now, there's a market of about 8,000 or 9,000 cannabis businesses out there, and not all of them are listed. And so we want to make sure that we capture the whole market, and with our price point, we can capture the whole market. And eventually, with states coming online, in Florida and things of that sort, there'll be 30, 40, 50,000 businesses out there. So when you start looking at what the potential could be, right now, there's about 8,000 or 9,000 businesses out there, but the potential is just unlimited. And at a $50 price point, we can actually, based on capturing the full market, our numbers could potentially be higher per month down the line than even a Weed Maps or a Leafly or THC Finder. So where $3 million would be for 10%.
Next question. How could you be in 50 states with cannabis-infused drinks?
Well, because it's hemp. So hemp is 50 state legal. If it has THC in there, then it's basically something that you can only be in certain states, like Colorado, California. But with hemp, it's something that you can buy hemp from Publix right now, or you can buy it online, or buy it in your grocery store or your pharmacy. So hemp is legal. Hemp comes from Cannabis sativa. It comes from the seeds of cannabis. So, but it doesn't have the THC factor that causes all the psychoactive properties. So you can get the benefits of CBDs without the psychoactive component and without the illegal component. And so these will be infused with hemp, but hemp comes from Cannabis sativa.
Next question. How much revenue have you generated to date?
So right now we've been in beta phase. We have about 20 businesses signed up right now, and that's all just really with no advertising. We've been in development. So we have a few businesses signed up, but we're really looking to, over the next month, we'll be in Culture Magazine, we'll be in High Times, we'll be using multiple high traffic sites out there in order to push the word out. So right now it's really been about that innovation and that research, because we didn't want to come to market prematurely. Want to make sure we had everything in place. We made some modifications to our app and took in some feedback from users and said, we really want this feature to the site that you guys don't have, or we think the site would flow better this way. So there's been a lot of market research in there, and we're going hardcore with national advertising over the next month and a half. And so and then there's been a great amount of funds so far generated just from the web store. I mean, we just launched that last month, and we had about $5,000 in revenue just in 1 month. And so it's only going to go up from there. We're getting lots and lots of traffic on the site, and we're doing some great orders every day. And the Can Finance, we're just finalizing all of our last paperwork with the lawyers, but the website is up and running, and we're already taking applications.
That looks to be the last question, Dr. Fuller. Any closing comments regarding Budget Weed?
No, I just wanted to say thank you, everybody. I apologize for all the technical difficulties. I want to blame my wife. That's what I always do. I'm going to blame the missus, but I apologize. I'm really conscientious of your time, and I appreciate you guys for tuning in. If anyone needs to contact me, they can contact me at doc@budgetweed.com, doc@budgetweed.com. And all of my information is out there. You can follow us on Budget Weed at anything. Budget Weed on Mash Roots, Budget Weed on Pinterest, Budget Weed on Facebook, Twitter, Instagram. We're Budget Weed on all those things. And we hope you guys enjoyed the evening. I want to thank Derwin, and hope to hear from you guys soon.
Dr. Fuller, just to let you know, by the time we slice and dice and edit the audio, nobody would know you had technical difficulties.
Well, I appreciate that. Thank you. Thank you. Thanks to Alan for the nice intro. And I hope everybody has a great night, and I look forward to hearing from everybody about investing in the future. I think we are the future, and we're looking to grow together.
Well, thank you, Dr. Fuller, and we would like to thank our audience. The next webcast will be October 28th, and we'll make sure we send out invites to our audience members. Thank you, Dr. Fuller. Thank our audience. Looking forward to speaking to you again October 28th.
Yes, sir. Have a great night. Thank you.